under the aegis of Corporate Laws and Corporate Governance Committee. Yesterday, we had a series of insightful sessions that enriched our understanding of various critical aspects of Companies Act 2013. Today, we are set to continue this journey with yet another stellar lineup of distinguished speakers who will delve into the key legal and regulatory developments. We begin the day with our first session on the topic Auditors Enhanced Responsibility in Revised CARO, which will be delivered none other than by CA G.N. RAMASWAMI, sir. Since we warmly welcome you and request you to kindly occupy the dais, sir. I now request CA Venkatraman, sir, to kindly deliver the welcome address to our esteemed speaker, CA G.N. RAMASWAMI, sir.
Good morning, everybody. Am I audible? It gives me immense pleasure in introducing Mr. G.N. Ramaswamy. Mr. Ramaswamy is a fellow member from the Institute of Chartered Accountants of India, Information Systems Auditor, and has completed the post-qualification certification courses of ICAI on IFRS and international taxation. He is a registered insolvency professional, having enrolled with the Insolvency and Bankruptcy Board of India. He is also a registered valuer for securities on financial assets with IBBI. He is empaneled as an independent director in the data bank maintained by IICA. He possesses more than 30 years of post-qualification experience in servicing large and medium-sized clients in the areas of statutory audit, encompassing application of financial reporting standards, apart from advising clients on strategies for governance, restructuring, acquisitions, and related valuations and tax implications. Mr. Ramaswamy possesses wide experience in listed companies and other entities in private and public sector across bank and financial sectors, manufacturing, trading, plantations, consumer products, logistics, hospitality, healthcare, and media. Mr. Ramaswamy is a fellow member of the Institute of Chartered Accountants of India and an executive committee member and vice president of the Society of Auditors. Mr. Ramaswamy has presented papers in various seminars, study circle meetings organized by ICAI, ICSI, and Society of Auditors. His hobbies include travel and reading inspires him. He is also a passionate photographer and currently the president of the Photographic Society of Madras, one of the oldest photographic clubs in the world.
Thank you,
sir. Welcome, sir.
Thank you, sir. I now request CA Venkatraman, sir, to kindly deliver the memento to the G.N. Ramaswamy, sir, as a token of respect. Yes, thank you, sir. With great respect, I request G.N. Ramaswamy, sir, to begin this session. Thank you, sir.
Good morning, all. So today we have a session on CARO. So, as you are aware, the CARO is being amended then and there. As an auditor, we have a responsibility to give a report under section 143.3. 143 originally it has only few clauses. Now they enhance the clauses. After some alphabets, they have added additional clauses under rules. And CARO, those who are from the old profession, macro was the first thing. Only 2 points we used to comment. Then they increased the content, and in 2006 they enhanced the CARO requirements to 14. And subsequently now, the present CARO, we have around 21 clauses with around 42 subclauses. It is elaborate. We are covering various areas of the financial statements. The responsibility is being fine. So we have been asked to give our comments on various facts of the financial statements. As you are aware, CARO is nothing but a statement of fact. There is no judgmental. Though the financial statements we are going to give as a true and fair view comment, for CARO we have to certify whether this fact, whether it's right or wrong. That is the only thing. So we need to have a complete documentation to give our report, so that it will be easy for us to produce the same to the regulators as and when called for. With this background, I will just go into the session. Everyone would have given a CARO report during the course of life, whether it's a private company or a public company or a listed company, whatever may be. The CARO content is same, but it may vary from company to company. So we can't have a copy-paste model for all the companies per se. Even for private company, for the CARO applicable to one company may be totally different for other company. Depends on the transactions. The mistakes the regulator finds is we as a professionals give the CARO without understanding the content of the financial statements, because certain items of the CARO we have to comment on the transaction happened during the year. Certain things we need to comment on the transactions that are appearing as on 31st March of the reporting period. So we need to be very careful to ensure the reportings and the wordings etc. are conveying the correct requirement to the users. Though, as I said, CARO gives the responsibility to the auditors to give a proper reporting. It also casts a significant responsibility to the management, because they are responsible on the financial statements. We are checking the financial statements and certifying whether it reflects the true and fairness as far as the numbers and disclosures are concerned. And as regards the specific points as required by the regulators, we are certifying the correctness, either as a part of our main report or as a part of our CARO and IFC. So the managements need to have adequate internal controls and establish a robust system to ensure there is no deviation in any of the contents of the CARO. So the primary responsibility of the management, and we need to verify the information as provided to us to certify as required by the regulators. So what is the reason for this CARO? So the readers will understand, in addition to giving just the numbers and the disclosures as at the appearing at the year end, if we give certain comfort to the readers that the company has complied with certain statutory requirements which are very significant in the current business environment, so this gives a comfort to the users. And also it helps the readers to see whether there is any issue on going concern, because whenever there is a diversion of funds, the company, only the insiders will know what is the real financial positions of the company. So by giving certain answers to certain questions, the readers will be in a position to understand whether there is a threat to the going concern issues. And strict monitoring from the regulator's perspective. So once you give these comments, they can correlate with the financial statements and other filings by the company, because nowadays we have to file everything electronically to the regulators. So they have all the data available from the company, they would have filed at various point of time. So auditor needs to ensure they review all the filings of the company with the regulators and with the details provided by the company as a part of our audit, and cross-check and confirm whether the information certified by them reflects the true and correct view. Regarding applicability, so it is a basics. It is only a checklist of a report. So unless I go to the class wise, it will not serve any purpose. I am going class wise only, but I have divided into 3 categories. I will explain it later. But before going to, there are certain young chartered ones. So I thought of covering the applicability also. It shall apply to all companies. There is no exceptions unless it is specifically excluded in the CARO itself. So it is applicable to all companies, whether it is private, public, or whatever may be. But in the order, they have excluded the banking company, insurance company, Section 8 company, even the S2 Section 25 company are also exempted. One-person company, a small company, and a private company, if they fulfill the conditions. The first condition is paid up capital and reserves, not more than 1 crore. So up to 1 crore, there is no issue, and which does not have borrowings more than 1 crore from banks and financial institutions at any point of time of the year. So the outstanding may be 0 at the year end, but during the course of the year, they would have obtained the loan and closed it also. So then also it's applicable. Does not have a total revenue of more than 10 crores. So these 3 conditions to be simultaneously complied with. So even if they fail in one of the conditions, private company is subject to CARO. Most of the miss will happen here only. So they will not see the year end, see only the year end balance, not the during the year transaction, or they would have passed 2 conditions, one they would have failed, but only they would have missed that. So we need to be extra cautious that only if all the 3 conditions are collectively complied with, they are exempt from the applicability of CARO as regards private is concerned. As regards consolidated financial statements, there was an issue whether we need to give a report for all the classes. Subsequently, it has been clarified. In case of consolidated financial statements, the auditor need to give a CARO for the standalone financials, and as regards consolidated, only one class they have to report under class 21. Thus regards any qualification in the financial report of the subsidiaries or components. So we have to refer the class number. That is all as far as CARO is concerned. We need not go into the entire content. We have to just refer the class number so that the readers can see the component financials and accordingly come to a conclusion. If a company subsequently converts into LLP or partnership or any other constitution, they use the word any other constitution because nowadays so many combinations of business are being started or conducted. Startups, the structure is in a different way. So instead of giving specifying the nature, they are giving a blanket thing. If it is not unless it is a company, if it is any structure, then CARO is not applicable. So this is a welcome move. So LLP or partnership firm or any other consider the company is going to convert at a later date, then you need not comply with CARO. So only if you are a company, we are required to report. The applicability of the CARO is based on the status of the company as at the year end, that is balance sheet date, except the conditions applicability. For private company, you have to see the transaction of loan during the year, but this is we have to see from the year end perspective. In the case of small company, it is exempted per se, even if it's a private company and the limit of small company exceeds the limit prescribed for private company. So there again the concession, if you are small company, because now FIT 1421, they increase the threshold of small company, that is paid up capital up to 2 crores and revenue up to threshold of revenue, I think 20 crores, yes, 2 crores and 20 crores. So though in the previous slide, private company is exempt only if it is 10 crores and 1 crore. So even if small company is having a capital of 2 crores and a revenue of 20 crores, they are exempt. So if it is small company, we need not bother about that if they are within this limit. So 21 I already covered, so there is no repetition. So what are the steps to be taken by the auditors so that the working papers are proper and they are giving a true and correct reporting as required by the statute? Actually, when we start the audit, we will be giving the requirement list to the company. So while giving the requirement list, we need to decide what are the areas we need to report. It can be either from your main report, it can be from CARO or from ISP perspective. You have to give the requirements FSA wise. If you give a complete checklist of running 100 to 200 questions to the company, they may skip some of the line items because they will think this is not relevant, or they will assume that this will be given during the part of the audit. And it will be difficult for us also to review everything in a toto. So it is better to give the requirements area wise because the CARO we are going to comment on specific areas. So we can pull out those questions and put it along with the requirement list. If I am going to ask certain details for our property, plant and equipment regarding additions, deletions, and also for depreciation, etc., the relevant classes of CARO also we can look and give it under that. So it will be easy for the client also to collect the data, and it will be easy for our team also to verify. And as a partners, we can review when we do the finalization. So the questions must be elaborate. The guidance note prescribed by the Institute of Chartered Accountants, they issued a revised one also in 2022. It has the checklist, but you can revise the checklist based on your experience with the particular client or based on your practice and based on your team strength. Because if the team is fully headed by a senior chartered accountant with junior CAs and senior articles, it will be easy to collect their data without any mistake. But if you are going to send for small companies only article assistant, and most of the articles nowadays only 2 years term, most of the team members will be the first year, it will be difficult for us to give training on a day-to-day basis. In that case, we need to ensure our checklist is robust, because it will help them to understand the requirement and collect the details and give it to you, so that it will be easy for us to review. So the first information going from your side as details required from the client has to be complete. Because basis those information we will be evaluating and decide what are the further steps we need to take. And post getting the details, we need to make specific inquiries in writing on all important matters. Oral discussion alone is not sufficient. Suppose you are going to discuss orally, then document it as a minutes and put it as a part of your file and share that copy to the client also. Because tomorrow the client should not say that you have documented yourself. I am not a party to this. This is not the fact. So whenever there is a documentation by way of minutes, send a copy to the client, get acknowledgement. If you send by mail also, that is treated as a proof that you have communicated, because that is more important. Regulators will see what is the proof that you have discussed. If it is signed by both the parties, no issues. If it is not signed and you have prepared by you, then send it by mail and get it documented. And that you can refer in your management presentation also for the year end. Insist that reply from the company, you can communicate. I already sent a questionnaire with my comments. Please go through and confirm. That is a must. You have to say that based on information I filled the checklist, because most of the clients will not have time to fill the data. So it is our duty to complete the answers also. And post that you have to communicate to them. This is based on information received from your end. We have updated the checklist. Kindly go through and confirm for the factual correctness, because your reporting is going to be based on that information available in the sheet. Where the explanations are already separately recorded, then we need to maintain record of the discussion with the management. As I told you, you have to document it. There are various methods to document it. One of the methods is minutes. A second is the communication with our note, because some of the items like a loan to directors, etc., request detailed review and broad documentation. So we will be preparing a detailed note. Those things can be shared with the client or company secretary to get it confirmed. Client means the process owners. It can be a company secretary, it can be a CFO, it can be a managing director, whoever it can be. For example, production related, we will be sending to the factory head. So it depends on the nature of the company, but we need to get it documented. Prepare his own checklist. As I told you first, we need to have our own checklist. The standard checklist is prescribed by the regulators or for information. Based on that, we need to evaluate and decide what are the things we need from our perspective. Accordingly, we can improvise the checklist. Whenever there is information or requirement of the CARO is not complied by the but the auditor decides not to qualify. It can happen due to materiality. The deviation is very insignificant. It's not worth giving a comment or qualification in the report. Then you have to document it. So don't apply the materiality of the company just like that. Say that it is material, not material, not do, but justify why it is not taken to the report to the shareholders. Because if at all anything happens at a later date, your conclusion is going to help you to protect your skin. So document that deviation. As I said, most of the items in the order require judgments. For example, whether the fixtures have been physically verified, what is the percentage of variation, whether it is properly recorded. So we need to first apply your judgment principle, accordingly conclude. So document everything. Documents only is going to help us to convince the other side whenever there is a query. As I told you, CARO now has 21 clauses. Previously it was 15, that is 2006 order. They have retained the existing clauses, 7 clauses retained as such, with a few cosmetic changes, like fixtures has been changed to property, plant and equipment, and few line items have been added. That is in a broad level. Then they retained with the changes 7 clauses. Only 1 clause will be in the previous 2006 order, but now they have 3-4 subclauses. It's retained the requirement of that clause, but with certain additional clauses. They deleted 1. Because now the managerial remuneration, we are certifying as the main report itself under 143, so they removed from CARO. Reintroduced 2 items from the SPL 2003 CARO, not from 6, and newly introduced 7. So at present, we have around 21 clauses of CARO with subclauses totally 47. Almost all the FS areas, main areas are covered in CARO. So I'll go section by section, so it will be easy for us to understand. So 21 clauses, and of which 20 is applicable to all companies. The 21st clause is only for consolidated financial statements, not for standalone financial statements. For any private company or limited company or listed company, we will be certifying on 20 clauses. So what is the requirement? It is changing needs of the business. So better compliance governance, government wants us, the auditors, to comment on certain things. Less governance, more governance. So if you give the details to the government, it will be easy for them to review and close the file without asking further details from the clients and doing the inspection. So it helps the government. If the report is proper, it agree with all the financial statement, other filings of the company, government will not take the file for scrutiny. So they will be happy to review and close it. More trust on the auditors. This is one welcome move, I will say. Though it put enormous stress on the auditors to compile data and give, because certain things is a judgmental factor, the client will not agree. But once you convince and give a proper reporting, the government have a confidence on the auditors. That's the reason we need to see from the positive side. Powerful tool for the auditors. When you go for the main report, no, it is only true and fairness. They say what is the necessity for qualifications, not required. You have generally complied. Subsequent next year we will do that. But here they have no such answer. It is a statement of fact. Yes, no. If it is just clean report. If no, you have to mention the fact. There is no in between that I will cover subsequently. I have done as on date is correct. It's not possible. For example, even the audit trail, it's a statement of fact. As on 31st, whether it exists or not. We have no other option. Similarly, CARO, we have to say yes, no. If no, give details. That is all. So you have to tell the client well in advance. If you are going to do the audit only in May and going to tell them that this is the requirement additionally, it's not correct. Whenever there is changes, communicate to them well in advance that this is applicable for this current year. Please ensure you comply with that. Because certain clauses, though they have complied as on 31st March, if there is deviation in between, we have to comment. So we need to be very careful and inform the client well in advance. So to avoid any inconvenience. This is the broad summary of the CARO. I have given in 3 classes. One is modified. PPE it has been modified. Inventory is modified. Loans to investment directors modified with 6 subclasses. Loans to directors, that is written only 1. But though it is a 3-line requirement, it is taking some substantial time for us as auditor. Public deposits is retained. Cost records, statutory dues are retained. New, undisclosed income under Income Tax Act is new. It puts challenge to the auditors. Loans and borrowing is slightly modified. Initial public offer and IPO and FPO, same. Frauds and nidhi companies, they have modified the requirement with additional subclasses. Related party transactions, same as in previous report. Now they reintroduced the internal audit. It was there earlier, but now they reintroduced. It was removed in 2006 order. Now I brought it back. Non-cash transactions they retained. RBI Act they slightly modified because previously it was only one clause. Now they put additional clauses, 3 more clauses with appointed questions. So that will be, though we will be giving general answer to the first clause. Now they said it's not possible to give specific answer to the remaining 3 clauses also. Cash loss. Previously it was there. They removed. Again they brought it back. And audit resignation, material uncertainty regarding payment of liabilities, that is going concern issue, corporate social responsibility, CARO reports, components, etc. newly added, and they removed managerial remuneration. I have classified this presentation into 3 things. I will be covering more on the new clauses, then I will touch upon the modified clauses. Continuing clauses, there is nothing. I will just run through if time permits, otherwise that's not relevant. But these 2, the first item is more important, second is also is required because the clauses, what are the amendments they made is easy for us to understand the requirements. So these 3 areas I have divided the presentation. Regarding the new undisclosed income under the Income Tax Act, though it looks simple, see nowadays with the technology, the sales by the company, previously at the year end the company will give the details to us, this is the sales of our company for the year, accordingly we will do the testing based on information provided only to you, but now the information available in public domain. So everything is available to the government side. So one is from your GSTR portal, other things from the other party we would have given the details of our purchase of TDS, whatever may be. If the company is accounting everything proper, there is no issue. We are talking about other parties who are not disclosing true or fair revenue or expenditure, then it is auditor's responsibility to comment whether there is any undisclosed income under the Income Tax Act. The transaction not recorded in books of account have been surrendered. The wording is whether any transaction not recorded in the books of account have been surrendered or disclosed. Surrender means they conducted a survey on base of which they found out something and you are agreeing. Disclose means voluntarily you have found a mistake in your financials or you have mistake in some of the taxable income and you are disclosing yourself voluntarily. So both are covered under this clause. During the year, that is more important, in the tax assessment under the Income Tax Act. If so, whether the previously unrecorded income has been properly recorded in the books of account during the year. So first thing is there must be a undisclosed income or income surrendered during the year. If so, you have to comment whether the same has been accounted properly in the books of account during the year. It puts responsibility on auditors because first of all you have to find out whether there is any search or survey for the client. You have to also check the public domain for any information that is available there because now everything is decentralized. All the information will not be provided only by the person. If it is a listed company, it's easy because they have to file to the audit committee and other things. If it is a small company, it's a challenge to the auditors unless the client gives all the information to you well in advance. In that case, you have to collaborate the details from various sources. I heard that there was some issue, some cases were going on. What is the outcome? You have to ask the auditors and you have to ask the legal counsels for a statement of fact, and based on that you have to conclude. 2 things. If it is IGAP accounts, no issue. Whatever the income offered or disclosed, you will be accounting the current financial year. If it is Ind AS, then we need to restate the financials because we have to see to which year it relates to. Whether it's on account of fraud, that also we have to apply. Whether there is any fraud element involved in this. Whether it is only a genuine mistake or intentional fraud, we have to see that. And second, what is the amount, how we are going to account, whether you are going to account in the opening balance sheet or the preceding year or the current year that you have judgment call you have to take. And once that is not over, what is the impact on IFC? We are saying that control is working superbly in the company. Till date, we are given a clean report. Whether we are going to revisit that requirements. If you are going to question on the control effectiveness, then what about the main report? Whether the company is whether it's going to be a clean report or a modified report or a adverse report depends on the amount involved and the nature of transaction. So first we need to find the details for this. Accordingly, we can conclude what will be the final reporting, both under CARO as well as main report. So we need to reconcile the numbers with filed with the tax department with the books of account. That is one thing. Regarding that amount disclosed, it is also not only on account of your mistake or non-disclosure financial statement. Can be included in the financial statement, but they would take an aggressive tax position that this income is not taxable. But subsequently, based on some Supreme Court ruling or the clarification from the government or basis your what I can say, the actions of the regulators for some other entities known to you or peer companies, we would have decided no, to avoid any penalty related to it, let us offer this amount. Though originally would have treated as exempt, not taxable, you would have said no, I am revising my return and asking for taxable. That is one of the income that is disclosed to the department. That also will come. You don't just go through the P&L credit. It has to see whether that is also in income tax P&L also, not only in your books P&L or tax P&L also you have to see. That is the wording, effect of the wording they used. That's the reason they mentioned both income surrendered or disclosed. So it would have been disclosed in the financials, but not disclosed for tax purposes. That is also will come under the purview. So you need to be extra cautious. So also we have to immediately see what is the impact on transfer pricing, what is the impact on your aggressive. So we have to evaluate all the tax position taken by the company for all the items. See whether there is any impact and decide. So this is the major thing, substance feature, aggressive tax position. That is the main thing where we are finding difficult because the company would have taken a stand based on certain advice. If at all there is a doubt, if it is India's company, better to get advice from a leading counsel because you have to protect your skin first. Wherever there is a doubt as per the standard on taxes for India, we need to make a contingent provision also. That is a requirement. We have to evaluate what will be the probability of that and you have to make a provision in the books, not even 100%. So we need to be extra cautious and get it recorded in the board meeting also. This is the company is taken and let board also take a cognizance of that because at a transaction board will presume that you have seen everything and there is no issue. If at all there is any position which are relying on some external advice, document it and place to the audit committee, let them also take on record and board also take on record. So in between, if you have any questions, because we are going class wise, if at all any query, you can discuss or after a particular section, we can discuss. Yeah. No. See, due to third party and they found out certain materials related to the company, if that material is already recorded in the books, there is no issue. And then you are in trouble. And automatically you would have received notice immediately. So then you would have. Then as auditor, we have to evaluate whether the information, the submission given by the company is true or correct. Suppose, even assuming such as happened, the officer would have given a notice to you in your own case that you have not disclosed properly or your income is not correct for me, you would have given a submission. As auditor, we have to evaluate whether the submission by the company is genuine or gives a true fact. If it is mistake, then you have to revisit your qualification. Then you see whether the information is not completed till date, so we are unable to comment the impact of the same in the financials. If you can quantify and the company has to offer that for the taxation. So either you have two options, either you have to contest if your case is strong. If your case is not strong, you have to agree and make the payment. Or you have to contest that. Contest means only for legal position you are contesting means then you have to, as auditor, you should not say, go with the client. You have to say that how come I am not able to quantify and I am not commenting on. So from your side itself, you can see this whenever there is a notice from other side. Yes, sir. No, not here. That will not come here. Right back creditors, we are not going to offer for taxation under section 28.4 or 41.1. See, Mahindra case, till last year, only 41.1 is for revenue transactions. So 2023 or 23 Finance Act, they amended. 28.4 they worded including cash or in kind. So they brought in to null the Mahindra Supreme Court case. In the preamble also, they mentioned clearly that it is taxable in under Income Tax Act, both for capital and revenue. The concept of capital and revenue is gone. So we are going to 28.4, read with 56, we are now it is taxable. But even today, some of the advocates are taking stand that is not taxable. If it is purely for capital, for example, one-time settlement of loans, if the loan is availed for working capital facility, it is taxable. Any interest on one-time settlement, it is claimed as exempt previously, it is taxable, but you would have dissolved already under 43B. So automatically there will not be impact in your tax P&L. But principal amount waived, it will be taxable because that will be credit to P&L balance sheet and now it is going to credit to P&L. If the loan is for term loan, it is not taxable. Till 2023, there was a case Mahindra, we are following. But now, post amendment 28.4, now it is held taxable. But even today, some of the advocates are taking question that is not taxable, you can contest. Then judgment comes into picture. We need to see whether that position is correct. If at all there is amendment at a later date, you are taking a benefit that is not taxable and not being provision, you have to mention that fact in the notes. And subsequently, if it is held taxable, then this section will come into picture. Pardon, madam? Yes, madam. There is a grey area. See, why you are going for NCLT? The company is already sick and they are unable to make the payment and they are giving concession to the new owner to run the company and they are giving various concessions. Previously, the court used to give a writing that this is not taxable. They will give directions also. Now they are silent. You have to comply with the respective laws. So unless we represent to the government and get it clarified in the charging section of 28.4, it is cat on the wall cases. Because company has no income. And now, leave alone NCLT cases, OTS cases. The company has availed 30 crores loan. The company has around 50 crores losses. The tax losses may be 20-25 crores. If you are going to write back around 40-50 crores, including interest, everything, and if the department is going to say that it's taxable, you have no money. Where you are going to pay the tax of 10 crores or 20 crores? Additionally, over and above what you are going to, the settlement itself, you are going only because I don't have money. So it's difficult. It's put the company to liquidation. So it's a practical case. No, it is. We have to take it a conscious call, madam, because some of the decisions they are taking without understanding the tax implications. They are going only with the NCLT order, or going only with the OTS. They steal the good relief from the banker. That's alone not sufficient. You have to see what is the impact. You have to take proper counseling from the advocates and then take the book entry, because now nothing is permitted directly to the balance sheet. Everything has to be routed through P&L. Previously, these type of transactions will write directly to balance sheet with a note. Now that is treated as a error on the part of the auditors. So we need to be extra cautious. Everything has to do to the P&L. And if you are going to take it as exempt, then we need to have proper documentation. Get an opinion from a leading counsel. We have to go with their standing. If the company will have normally a chartered account is going to represent for the small matters. But whenever you are going for a tribunal or a high court, definitely you will be engaging a senior advocate. So with them, we have to get an opinion. That is only going to help. But the matter will come to clarity, because there is a long gap between the department and the business community. This issue will be addressed soon, because the intention of legislature is to tax this thing, but they have to give a leeway to the NCLT cases. But OTS cases, still there is a challenge. Question is not clear. Can you repeat again? No. Every balance sheet you have to see whether that is applicable. Yeah. It is based on the balance sheet data. If the company is not fulfilling any of the conditions, then it is not applicable. For private company, 3 conditions to be fulfilled simultaneously. Suppose there is no business at all, there is no revenue, but if your capital and other things are completed, you are applicable. CARO is applicable. Only if all the 3 conditions are applicable. Normally it will not happen, because 2 conditions always will be filled, because only revenue can go below the limit. Once you raise the capital, you are not going to reduce the capital. Unless the borrowings is fully settled and there is no loss and the equity also, reserve surplus also come down. Exceptional cases. Yes, sir. This is from tax angle only. They have not mentioned that to the tax department. GST automatically it will come under fraud, sir, because automatically that also will come. If you are going to No. If you are going to talk about turnover, taxability on percentage, there is no issue, sir. If you are talking on the revenue itself, you are offering. No. If you are talking about undisclosed income on turnover per se, this clause will be applicable, because auditor, if you are offering something to the department, you can't certify the correctness of the revenue under the P&L itself. Main report will be qualified. Forget about this clause. So that are all frauds, sir. We will come to that separately, but I am talking from the requirement. Is query is yes. Okay. Correct, but whether you agreed, whether you offered and disclosed, if you are going to contest, that is a different issue. That's a judgment call. If they are adding some revenue that not disclosed under GST, whether that contention we are going to fight out, we are agreeing or not. If you are agreeing, is a mistake. Yes. That's why the reason you offer during the year, so it will not be applicable, sir. That is the reason for restatement of financials also. Yes, we have to report it. So you have to report and include that in your income P&L balance sheet in the current year. If it is in this company, you have to restate the financials. That is normal cases. You will, as a current year transaction, record and will put a note also as a prepaid item. Material uncertainty in payment of cases. This is clause 19. It's a new clause. So this is analysis of financial ratios. They given the list of financial ratios where we need to analyze, and accordingly basis the. In fact, this is based on your financial statements also, because the management has to give various ratios as a part of financials, and wherever there is more than 20%, they have to comment the reason for that as compared to the preceding year. So basis your financial ratios and the other information available to you, you need to comment whether there is no material uncertainty exists on the date of balance sheet, that the company is capable of meeting all its liabilities for the next 1 year. The company has borrowings payable within 1 year, 1 to 2 years, 2 to 3 years, more than 3 years, etc. As auditor, we need to see whether the company will position to meet all these liabilities, sundry creditors, your liabilities which are falling due within 1 year without any difficulty. That is the purpose. We need to evaluate. How you will evaluate based on your current ratio and basis your income burden. Suppose the company is making huge losses and there is no borrowing, banks have freezed the borrowings. The company account have become NPA, so there is no chance of any further borrowing. And there is a lull in the market, share is coming down, the customers, you are unable to sell your goods produced, or there is a issue in recoverability of receivables. These are all signs. If there is any of these things triggers, then we have to apply our mind in a judicial way to decide there is any issue. If the company is a component, there is no issue. We can get a comfort from the holding company if the holding company is going good, because holding company can give loan to the subsidiary company, because the group will not allow one of the entities to die and they will not damage their name also because of this. So the holding company normally will support the subsidiary company if at all there is any financial issues. But if it is standalone company, directors will not support, because to an extent they will do. If it is a owner driven, if he has a passion, he will give the fund to the company as unsecured loan. If it is in other cases, they will not push to give beyond a certain limit. So the debts they will say we will not push. And then as auditor, we need to see how you are going to justify the company in position to make payment within 1 year. The triggers are where the company is making continuous losses, the net worth is eroded, or the banks classified the account as NPA, or various permanent factors. If at all there is anything, we have to do the analysis and decide whether there is any requirement to comment on this. So we need to have a discussion with the board of directors, document it properly in the board meeting, what is the plan of the board, because we have to get a cash flow statement from the management for the next 1 year. So that is the basis for us, because we are not doing a forecast auditing, we are doing audit for the past. So the business plan, only management will say, they will say, no, I am going to plug in the money. Directors can confirm. Let them record in the meeting that this is the plan. In the eventual I am unable to release the data, I will do these things. But that directors document and give a cash flow for the next 1 year, duly tabled and approved by the board of directors. That you can rely as a comfort. You can refer that and accordingly you can conclude. But without any documentation, orally they said, yes, sir, no problem, we will take care of all the liabilities. None of the liabilities settled. That's not sufficient. That is going to put in a difficulty. So as regards to holding company, the Indian entities of foreign companies normally will insist on a support letter from the company. Even in the first year result, if there is a loss, we will ensure that they will support, because otherwise, the local banker will not give any money to the subsidiary of foreign company, because the corporate guarantee also they are not very comfortable, because they have to, if it is Indian subsidiary, there is no issue. If it is over some money, always get a comfort letter. And this is more important, get it documented in the board meeting, highest level of the company, because the private companies, the board is ultimate authority. Get it documented, and the document and mention that also as part of your report. And life cycle of the company and group companies, you have to see what are the peers, whether the industry itself is facing some difficulty or government regulation put you difficulty. Those are all triggers for you to decide and evaluate, purely judgmental. It's a new clause on CSR. CSR results new, so 135 section of the Companies Act. So now there are two things. One is ongoing projects and other than ongoing projects. If there is any ongoing projects, the company has to spend the money within 6 months from the expiry of the financial year. If the company has spent the money already within the 31st March, no issues, we can mention the fact. If it's not, we have to say mention that the company has time. But we will be completing audit in the month of May or June or before September. 31st March, they have time till 30th September. In the case the institute has mentioned, you say that the company has not spent this much amount, but they have time till 30th September. You have to mention that in the report. You have to say what is the amount not spent and what is the plan of the company. So the board has to give a comfort to you that they intend to spend that before September quarter. Regarding ongoing projects, they have time to spend within 30 days, not year end. If not spent, they have to transfer to a special account within 30 days, because the account project may go for 2-3 years. So definitely they can't have the money inside the company. They have to transfer to a separate account, just like unpaid dividend account, within 30 days from the year end. So 31st March, 30th April, they have to transfer, and as auditor, we have to see whether they have transferred or not. If not, we have to qualify. Yeah. Hmm. 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 Same, sir. You have to step in the shoes of the trust. It's the responsibility of the director to ensure that is done. Merely by transferring the amount to that, because you have to review the progress, whether the purpose is being met. Otherwise, you have to qualify that. Chart component, provided his case is not used at all. But if it is used, you can rely on the induced certificate. But normally, being a group entity, we can ourselves see that whether it is happening or not. If it is totally outside, you are going to give a Tata Trust, you can't ask the Tata Trust to show the accounts to you. So they will be giving a certificate to you or done by the auditor. That is sufficient for us. Depends on the quantum. If it is, it will be only 2 lakhs, 1 lakh, is not going to affect it. Because maybe most of the cases it will miss. They would have presumed that they would have spent that amount, but due to certain adjustment the year end, the amount would have increased. So that's the miss. So, they will not take seriously, provided they correct it immediately. If the lapse has happened on 30th September, if they deposit in 1st October, it's not going to. Only the fines for a small amount they will charge. But the intention, you have to check. If the intention they are going to defraud, then they have to face the problem. No, not sufficient, madam. Self-certification is not sufficient. If it is self, you have to verify yourself. How you are going to confirm that? There is a requirement to get it audited by another chartered accountant. So you will be using the work of other experts, and that you can rely on. If it is a group, then you have to see yourself. Self-certification is not sufficient, madam. That is not a proof. So this is a new class on consolidated financial statements. As I told you, there was a discussion when this class was introduced whether we need to give all the reports as applicable to standalone to consolidated also. But already we are giving 20-30 pages. How we can collect this information from consolidated perspective? For example, loan to companies or loan to transaction related parties. How, as an auditor of a consolidated financial statements, can comment on the group as a whole is practically difficult. So finally they agreed, and now they mentioned that only class 21 is applicable for consolidated financial statements. In the main reports, we will add one para. If there is any qualification in the report of the under CARO in any of the components, you have to mention just the class number. That is all. So we need not look into what is the amount, what is the nature of qualification. For example, it can be for delayed payment of statutory dues, non-filing of bank statements, the bankers, or disputed tax not paid, whatever may be. If at all there is any mention or qualification in the CARO report, just to mention the class number. The property PPE is not verified by the management, 3.1, that's sufficient under this reporting requirement. But you need to review all the CAROs of all the components. If suppose one of the items consolidated in financials is not material, you are relying on a management account, then you have to review those financials to ensure whether any items, or you have to mention that fact. This financials is based on the management, and for which we are unable to comment on any deviations. Whatever you do, record it. Otherwise, it will be difficult. This is a new class on internal audit. Originally, it was there in 2003. Subsequently, they removed in 2006. Now they reintroduced. But when they are bringing it back, they added some additional flavor to that. Whether the company has internal audit system, commensurate size and nature of business. Every report will have a standard lining. This company has a internal audit and it commensurate with the size of the business. Normally, we will give copy paste from the previous report, no issues. But now they said no, it's not sufficient. They added something. I will come to the next slide. But now we have to see not only whether the company has internal auditor, whether they are really doing the internal audit, that is the first thing. Whether the scope and coverage is sufficient for the size of the company, that we have to evaluate. For listed companies, normally the discussion also will happen with the internal auditor when we are agreeing on the terms and the scope and coverage, so that there will not be any conflict, there will not be any miss. These are all the things for as a statutory auditor we need to check before commenting on this class. This is as per the old CARO requirement. Now this is the new introduction. Whether the reports of the internal auditors for the period under audit were considered by the statutory auditor. Till last year, what do you say? No, yes, there was internal audit, commensurate size of the company. No, now you say whether you are seeing the report. In most of the cases, no, till 2003, there will be internal audit. They will not give the report before we finalize the accounts. For private companies, we can't insist also. They say the audit is going on, sir. We'll give definitely within 1 week, 10 days. We have pressure from the bank. We need to sign off this financial. We'll agree and sign off. No, it's not possible. We need to document whether you review the financials and you consider those findings of the internal auditor. It has a bearing. Please understand, internal auditor would have given a comment on IFC. The control is not all working. Everything is wrong. Please be careful when you are giving a clean report under IFC for your main company from your side. Yes. No, then in the case you have to ask for the report. What is the finding on a quarterly basis? Whether it's sufficient, you have to see. From the company size, there is no harm in having an in-house internal auditor. But they must have an internal system and they must do the audit properly. What is the areas they verified? What is the finding? What is the report given to the management? One liner is not sufficient. I done the internal audit, everything fine is not internal audit. So at the beginning, as a statutory audit, now we have a scope, what you have to do, when to do, how to do. Same thing, you have to decide what are the areas they have to check on a quarterly basis, what are the areas they verified, what is the finding from the verification, what is the conclusion, how it is resolved. If they found some mistakes in some of the areas, what is the action taken by management? Those things to be reviewed by you as a statutory auditor. So just we have an internal audit team, they have done everything is correct, is not answer. Yeah. It's the same analogy. Say whenever, not only for this class, 4 to 5 classes, we are relying on the work of the experts. Internal auditors treated as expert. We have to have a frequent interaction with internal auditors. We need to meet them from planning stage itself, because you are planning your work based on the outcome. Parallelly doing the work. So whenever you are going to have a internal audit team, you discuss with them upfront what are the areas they are going to focus, what are the areas you feel that additional reference is required. Just like getting a report from a competent auditors, you have to get input from internal auditor also. Then and there, whenever they are finding issues, they have to discuss with you also along with they are discussing the management. Management discussion is only for statutory purposes, but as auditor, they are reporting to the audit committee and board, and we are in the parallel steps. It is. I am not depending on the internal audit work. Not only CARO reporting, if the findings of the internal audit are also relevant now, if they are going to give adverse finding on the revenue or any of the key area, how it will impact your final reporting. That as an auditor, you have to be careful. That's the reason for listed company now they insist on the March closure also to be done before we close the financials. Previously, the March quarter will happen post that. Even for nowadays, the banks and NBFCs also insist that it has to be closed before we complete our report. Yeah, welcome. No, that's not permitted nowadays. The period has to be January to April to March only. But normally for the companies where we have a strict timelines to complete the financials and reporting in April or May, then they will plan the work because all the areas to be completed at least once in a year. They will plan certain areas in the preceding quarter because all the areas need not be tested every quarter. They are not doing a concurrent audit, they are doing internal audit. So in that case, they can plan. These are the areas we will do. For example, stock taking, they will cover only in the inventory, they will cover in the last quarter. Statutory dues, they will cover in every quarter. So you decide what are the areas to be covered quarter-wise, what are the things can be covered in any of the quarter. If you are agreeing, then there is no issue. But they have to give the report for the March period. Yes, it's required. No, see, that is only for management perspective. They are having that IFC auditor to do from management perspective. They are having a finding. If there is any gaps, that has to be resolved before year end. If it is not resolved, then as a auditor, you have to see whether that's working or not. If it's not working, you have to comment in your main report itself. This is also cash losses. It was there earlier, removed and again brought back, where the company has incurred cash losses in the financial year and in the immediately preceding financial year. Cash losses, I don't think we require any explanation. We know that is we have to, from the profit and loss, we add non-cash items and decide what is the cash loss. If the current year and last year, if there is a loss, you have to report. It's only a factual statement. Audit resignation. This is one of the new class. Whether there has been it's happening nowadays quite frequently. Previously, once in a blue moon, there will be resignation auditors. Nowadays, if there is any disagreement, auditors resign. Now, only risk for the statutory auditors for the listed company. Once you complete 3 quarters, compulsory you have to do March quarter, then only you can resign. We can't resign before in the month of April, citing some reason that not permitted by SEBI. All other cases, even for Private companies, even in the month of April or May, or even the month of June, the auditors will resign for the preceding year for citing some reasons. So whether there is any resignation of the statutory auditor during the year, if so, whether the auditor has taken into consideration the issues, objections or concerns raised by the outgoing auditors. So we have to see what is the communication from the auditors to the management. We have to discuss with the auditors what is the main reason for the resignation. See, morally, they will not say anything over and above what they communicate to the management. Even if the underlying issue is burning, then often as a friendly manner, they may say if you know them personally, otherwise you will not know. But whatever is officially available, please ensure that that has been taken care while you accept the engagement. See, you can ask for. If at all there is a resignation, in the no objection they have not mentioned anything, but in the communication to the company, they have to mention what is the reason for resignation. Normally they will mention. Or before resignation to the board of directors, they would have communicated. Nothing you can do. And this one more point I want to tell, even after the year end, if the auditor resigns, after giving the report with some qualification the financials, and you are going to take the audit for the subsequent year, you have to ensure whether all the qualifications have been addressed properly before giving a clean report in the subsequent quarter for that area. Management give a pressure that no, previous auditor has not seen this, they have not seen that everything is correct, you remove the qualification, I find difficulty. Don't accept those oral confirmations. Please ensure the qualifications have been properly dealt with and addressed before you give a clean report in subsequent year of quarters, whatever may be. So these are the 7 clauses where it was introduced fresh for the financial year as per the CARO 2020, and now we are coming to 7 clauses modified. Though the clauses were there earlier, they have added some new subclauses to this standard. Accordingly, we need to comment on additional requirements. The first thing is property plant document. For ages, we are reporting on this. We have no issues where the company has maintaining proper records. The challenge now is if the company is maintaining the fixed register electronically, audit trail is applicable to this also. Please ensure there is no modifications, corrections or deletions, additions, etc. for audit trail, whether the system in place. But to my knowledge, most of the companies follow the only Excel system. Even there, we have to have a post introduction of audit trail. We need to be extra cautious how we are going to confirm that document given to us is perfect. And for ages, we will be mentioning the companies in the process of updating the fixed register. Please be careful how long you are going to comment that. You insist that it has to be updated and given to us at least in the current year. The second is this new clause where the company is maintaining proper records showing the full particular of intangible assets. Intangible now speaking phase, most of the companies have the intangibles, so we need to say whether the document is maintained, register is maintained. So if not, we have to comment on that. The third one is existing clause, whether the property plan agreement have been physically verified management at reasonable intervals, whether any material discriminatory notice on such verification, if so, whether the same has been properly dealt in the books of account. So management, it is a management responsibility, not audit responsibility to verify the fixed assets. There must be a plan. Some of the small companies will do at the year end, larger companies they will do on a cycle because they can't stop the production or anything, they will do in a cycle during the maintenance period. But if they do the physical verification as per the plan, there is no issue. As auditor, you can be part of the verification on a random basis. But you need to check the documents produced by the company proving that they have done the verification and what is the finding. If the gap is material, then we need to see whether that has been properly reflected in the accounts. This is one of the major things we are finding challenges, whether titles of the all immovable properties other than properties where the company is lessee and the lease agreements are duly executed in favor of the lessee. So this is one of the area. If so, disclosed in the financial statements are held in the name of the company. If not, provide the details thereof. We have to give the details of the description of the property, gross carrying value held in the name of, whether promoter is interested, period held, and what is the reason for being held in the name of other party. This is one of the challenging things. See, whenever there is a purchase of any immovable property, obviously you will be interested in getting the title transferred in your name because that only you are the owner of the property. If the company is not transferring the title in its name, there is something else. Now they have introduced the new clause for Binami also. Please be careful. Normally what will happen, for some cash flow, the promoters would have transferred the asset to the company and held in the name itself. For the outsiders, they are the real owners. Only for books, the company is the owner. How long you are going to continue? After 2-3 times, they will again purchase it back, so they can avoid this 20-22% stamp duty on the current market rate. To avoid that, they will do is one of the fraudulent transaction. You have to be careful because Binami. Now the act is very stringent and we are going to comment on that. See whether wherever there may be genuine cases also. You would have purchased the property, put to use also, but due to completion certificate, you are unable to transfer the registration. Or in some of the cities like Bombay or Delhi, the registration is not directly to the customer, it will be going to trust. So it can happen, depends on but you have to see whether the requirement as required under respective statute has been complied with. If not, you have to mention. You have to raise the bill only if there is any property in the name of the owners or promoters. Then you have to be extra cautious. No, that is a factual case. You are going to fight it out. So that is genuine transaction. You are a bona fide purchaser. There is no issue. You can mention the fact as required therein. But you will not leave it as it is. You will see that it is transferred in your name at any cost. So only for gaining that 8%, you are fighting with the government. Suppose ultimately, no, they said it will not be only 9%. You will pay that 8% also in normal case because value of property is more important than your 8% or 6%. So you have to see the nature of transactions and accordingly you can mention the fact. No, there is no time limit. As I say, no, I have a case, 20 years the property is not raised in the company because of some dispute with the STL owner. We are still having the office, it's a raised office of the company, they are running the business for 20, not only for this party, the entire building is under dispute. So that is, we have to mention the fact, because readers will know that there is a risk. The title may go to the other side any time, it's just a contingent. This is one of the new clause added in case of revaluation of property, plant and equipment or intangible or both during the year. Whether revaluation has been done by registered valuer. This is one of the major change. Previously, till last year, whenever there is a revaluation, the management will get a valuation done by some chart account or some XY, so that say tax practitioner, whatever may be, that this is the value we want to. No, it is not possible. Companies Act is not recognizing any other than registered valuer. So we have to see whether that is done by registered valuer, first condition. Second, if so, the change is more than 10% for each class of assets. Land, buildings, plant and machinery, furnitures, each are all different class of assets. Whenever there is revaluation for particular line item, whether the increase is or decrease, it can be both way, upward and downward. If it is more than 10%, we have to comment. It's only a factual statement. Whenever there is revaluation, see whether that requirements have been complied with. That's include for right to use asset. 116 also we have to see in the case because long-term leases, definitely there will be revaluation. Binami Act, new clause, whether any proceedings have been initiated or pending against the company for holding any Binami property. I am holding the property, but it's not mine. Real owner is somebody else. Action has been initiated, we have to comment. But how do you know? No action has been taken. But how I can certify? You have to get a declaration from the management that all the properties are our own properties, nothing are held in a Binami. That as a declaration you have to go. Inventory, originally existing clause only, but they made a lot of changes in this requirements also. Whether physical verification has been inventory conducted at reasonable intervals, covering the coverage and procedures we need to comment. Whether discrepancies of 10% or more in the aggregate for each class of inventory, like each class of property, plant and equipment, they added the word each class of inventory. Inventory different classes is raw materials, stores and spares, finished goods, work in process, etc. If so, whether they have been properly dealt with in the accounts. So whenever there is excess or shortage, we have to adjust that in the books of accounts. Some of the companies have a policy to reconcile, then only they will pass the book entry. But for the year end, if you need to see whether any provision to be made in the financials for any shortage, pending investigation. That we have to be extra cautious. And this only statement of fact. This 10% is each class, not as a total inventory as well. You don't go by the balance sheet figure, go to the notes figure and see whether there is an increase or decrease class wise. Some of the companies will have a perpetual inventory. Inventory, the responsibility is again on the management. They can decide when they want to do the inventory counting. Some of the small companies will do at the year end, just before the year closure or after the year closure. So they will do the roll forward or backward. If a larger company is not practically possible to do at the year end, so they will do in a periodical basis. They will known as perpetual inventory. whenever there is a done, they will analyze the increase or decrease, and accordingly they will do the adjustment in the financials also. So we need to collate all those information till the year end and decide whether this 10% is. So we can't say only that that is not sufficient, because one cases there will be 1% increase, decrease, or whatever may be. You have to aggregate all the book value, all the physical value, see whether that increase or decrease is more than 10%. That is one thing. If it is similarly for year end, we will be part of only on a random basis. We will not be in a position to cover all the areas. So we need to depend on the working papers. Only the summary sheet is not sufficient. If they are going to produce you that we verify the inventory, this is the book value, this is physical value, there is no difference, that's not sufficient. We have to ask for the working papers. For asking the working papers, there must be a plan. They have to say who is going to do, when going to do, how it will be done, everything to be documented, and who was done on that day, what is the proof available for that. So the worksheets, normally it will have a lot of plus, minus, etc. No, that is the back paper for the final summary. As auditor, we need to review to confirm it was done originally, so that we can rely on the documentation. So that is the most important. Don't go by the management certificate that it has been done, there is no difference, or difference has been properly done, that is not sufficient. We have to check the working papers. Though we are not going to be part of the complete investigation process, we need to check this summary statements. No, we have to go for the experts' opinions, because we can't quantify what is the has gone inside, what is the thing. For that, see what is the control the company have for an internal process, no, what is the consumption, whether we put it, because pilferage definitely we can check as auditor, whether the any inward outward for the project will be properly documented. So once whatever comes in, it will be inside that compound only. Whether it is still in raw material stage or work in progress stage, the management is going to decide. Once as regards management, regarding the percentage of completion only, we are not comfortable. So we will be engaging the engineers who will be certifying. That is sufficient for us. Whether at any point of during the year, the company has been sanctioned working capital limits. So please understand, working capital limits is both fund and non-fund. So don't go by the only CC limit is 2 crores, but the company may have a guarantee or LC for 5 crores or 10 crores. Both are working capital. So fund and non-fund, both put together 5 crores at any point of during the year. So even originally it was only 2 crores, during the year it has been increased. Then we have to see and comment on this. But the requirement will happen only post that requirement, because the bank, we will be filing the quarterly statements with the bankers for any working capital facilities. We need to see and certify whether the statements are in agreement with the books of accounts. That is the requirement. What happens? For the purpose of position, they will give some additional numbers to the bankers. When we report, no, sir, don't mention that figure, it will come in public domain. Just to mention its agreement. That's not possible. They have to give a proof. But the major companies, if what will happen, they will give the numbers based on the provisional numbers as per the books. Subsequently, they will do the adjustments for stock taking, or they will do adjustments for provisions. Receivables, they will be making provision for ECL, or they will review and make a provision for doubtful debts. Those things are a genuine transaction. In that case, they will submit a revised stock statement to the bankers. Original statement also as in agreement with the books of accounts, subsequent statement also agreement with the books of accounts. Then you can take cognizance of that and give you a finding. If suppose there is no such case, they are arbitrarily putting some number to the banker, then you have to mention the fact in the report. Whatever produced to the banker with the seal, oral communication also is not sufficient. This is a statement given to the banker, sir, have the proof, not sufficient. It must have evidence that it has been given to the banker. Some of the companies will send by mails. That is a proof, not an issue. Some of the companies have the policy to send physically and get it stamped. You have the documentation done and compare whether that is available at the books of account. Backdated entry is not possible. So they can't say that after that I have passed entry, sir. Audit trail will be defeated again. So we have to see what is the cutoff. For year closure, definitely there will be a closure. March we will be passing entries in May for the provision and other things. This will be reflected in 31st March. But when they give the statement on 7th April, they would have extracted a TB from the books of account. That you can check. It will be available. So we can see and cross check whether it is real numbers as per the books. Loans and guarantees, investment security, etc. One major change here, till last year we used to comment only on related parties, 189. That is parties covered under, registered under 189. Now they removed that. Please understand, I have seen reports for 24, 25, etc. covering only the same wordings to the parties given in 189. Please be careful. It says that whenever the company has made investments, provided guarantee or granted a loan or advances, or in the nature of loan secured or unsecured, to companies, firm, LLP, partnership, or any other parties, they added now. till last year to partnership covered under section 189 used to be the wordings. They removed 189 and added any other parties because startups are there. So many permutation combinations of business are being carried out nowadays. So they wanted to bring everything under one gamut. Responsibility on us. Please be careful. Even last week I have seen a report for 2025 for commenting on 189 alone. It's a great miss. Don't copy paste from the previous year. Each year the transactions are different. For any company for that matter, even if it is 1 lakh company or a 10 crore company, it is a transaction will be different. Please review on a yearly basis. If so, we need to comment whether during the company has provided loans, etc. The aggregate amount of during the year, the balance outstanding, we have to give for two categories. One for subsidiaries, joint venture associates, and second is for other parties. We have to give in a tabular form. If the company has given, then we have to give for related parties, other parties. So for related parties, you have to see the MBP4, we have to discuss with the management and also all the procedures you have to carry because it have a relevance for other areas also of your financial statements. For others, we need to check whether within the limit, section 185, 186, whatever may be, or 188 for that matter, and ensure that the documentation is complete. Next is where the investment is made, we have to comment whether it is prejudicial or not to the company. This is only a judgment factor. The company is giving interest-free loan. How we can going to certify that whether it is not prejudicial interest of the company, whether the terms and conditions are okay, giving loan for 10 years and borrowing at 18% from the market and lending to a group company without any interest. This is not permitted. As auditor, we have to evaluate from company perspective. Please understand, till certain things are going good, there is no issue. Nowadays, the bankers normally used to take action on the auditors only if the accounts become NPA. Not NPA, default, when they are making provisions. Nowadays, no, on the first day of becoming NPA, they are asking for forensic audit for large accounts because to ensure that there is no diversion. Diversion is being viewed seriously both by the government and also by the bankers. So we have to be extra careful, and whenever the amount is given to a group company, we need to see what purpose it has been given, whether it has been utilized for the purpose. Because giving a loan to a group company will be a measure to do further transaction without the knowledge of the eyes of the statutory auditor. It is not possible. Now we have to check the end use also. If there are requirements under CARO itself, we need to comment. But even otherwise, as auditor, we need to see, as per to comply with the provision of section 188, we need to be careful from our side whether it has been taken care. Employee loan is exempt, madam. Employees, nobody will give loan, madam, unless it is emergency. No, that is as per the rules applicable to all employees. These are all exceptions we are talking. In respect of loans and advances, in the nature of loans, whether the schedule of repayment of principal or interest has been stipulated and whether the payment are being made as per the terms. If there is no stipulations, please mention that fact. The company has given loans to certain parties, you mention the amount without any stipulation of as regard payment of principal as interest. It's a fact, you have to mention that. Don't just comment only on this area, that wherever they are given. No, it's not the case. If it is not given also, you have to mention. That's the requirement of the CARO. Please understand, all these clauses are applicable to all parties, not only for 189 parties. That also we have to be careful. If the amount is overdue, state the total amount overdue more than 90 days and whether the reasonable steps have been taken by the management to correct the same. We have to check what are the steps taken by the management, because private companies, by the time you do the audit, by 90 days would have been over. The amount should have been realized by the time. If not, you have to comment what are the steps taken, why it is not realized, you have to document them and mention the fact. This is the fifth point. Whether any loan or advances in the nature of loans granted fall undue during the year has been renewed or extended or fresh loans granted to settle the overdues of existing loan given to the same parties. Camouflaging or teaming and leading. We are giving a fresh loan to cover up the old default. You need to review. So whenever there is a transaction by settlement, they would have said the amount has been paid on the day. See whether any fresh loan has been given to the same party or to a related party to make this refund. As auditor, we have to review and comment. The last clause. So whenever the company has given a loans and advances in the nature of loans, repayment on demand or without receiving any terms, we need to comment if it is to the promoters, what is the total amount, what is the percentage of the said amount on the total loans on the company. So see what is the amount of diversion from this company side. This is one of the new requirements. This is also modified. First clause is same as in last year. Whether the company has defaulted in repayment of loans. if so, we have to mention the amount in the balance sheet. It triggers our original one, going concern issue, whether what is the reason for default, whether we need to be alert. Those things, it's different. Second clause is newly added. Company has been declared as a willful defaulter by any of the bank or financial institution. We need to inquire whether you have received notice. It will happen only in case of NPA cases. Regular settlement, if there is any delay or payment of principal interest, nobody is going to take chance, provided that is paid subsequently. Only for India's perspective, we have to be careful whether any of the components we have to take any additional action. But normally, banker will not trigger the willful defaulter tag. Willful defaulter tag, the bank RBI has given a detailed guidelines. When does be flagged as a willful defaulter? Only if there is a diversion of funds or fraudulent withdrawal of money. Those things, they are given 6-7 parameters for that. So if so, we have to inquire the management. Normally, bank also will communicate. There is a portal in RBI. We can see whether this company is a willful defaulter. Whenever there is a default from bank side or whenever the account is NPA, please have a discussion management to check whether the company has been declared. You have to say basis information available and produced to us. You are giving us, discuss that also in the board report. This is also new clause, whether the term loans were applied for the purpose for which it has been obtained. If not, the amount of loans were diverted and the purpose for which it is used by the reporter. See, normally what will happen, if you are an auditor of the holding company, the amount would have been given to the subsidiary company. They will avail loan from banks and they will give to subsidiary company. Subsidiary company, they will argue that it is permitted under the Companies Act, I can give loan to the subsidiary company. Okay, what is the purpose of loan to the subsidiary company? See, in the sanction letter from the bank, you would have mentioned what is the purpose of loan. If you have not mentioned that, that is the first default or deviation. You have to inform that. Second, close to no. Second one is, then you have to see how that amount has been utilized by the end user. They will say, no, so you are not the auditor of that company. Your audit is being done by somebody else. I will get confirmation that is used. No, that's not sufficient. You have to see what purpose. You have to ask for the cash flow and how that money has been used. And ensure that has been used for the purpose for which it has been sanctioned. Otherwise, you have to mention that fact. Suppose if they are not producing the data to you, mention that fact. It has been given to so-and-so company for which I have not been given the details for end use. So, unable to comment on that clause. You have to mention that. Otherwise, you are also at risk. Whenever the bank's loan become NPA or bad, banker will take action on all the preceding auditors. So, they will go to your report. That is the first evidence that whether you have checked that or not. So, if you are going to make a qualification, it is a alert to the banker. They will take action. They will check immediately. Otherwise, they will not know. So, they will presume that everything is going perfectly. And whenever something happens only, they will issue notice to you. So, this is regarding term loan. Now, we will come to short term to long term. It is reintroduced. Previously, it was there. They withdrawn. Again, they brought it back. If any short term borrowings have been used for long term assets, availing a working capital facility and putting in land or putting in plant and machinery, that is not a good sign because you have to refund that money within a short span. So, we have to comment on that. So, the company has no discipline in financials. And whether the company has taken any funds from any entity or person to meet the obligation of its subsidiaries, associates or joint ventures. If so, you have to mention the details. What is the funds received, how, all these facts you have to mention. You are borrowing from somebody and to lend to somebody. What is the necessity? So, we have to comment that so that the users will know what is the purpose and what is the underlying. See, there is one new reporting requirement under main report 143J. So, there we are commenting based on information explanation given to us and based on the information we have verified. We are commenting that the company has not availed any loan from other parties which have been or availed and diverted to any other parties. There we need to be extra cautious. If at all there is any transaction like this, please see whether that main clause will be triggered. 143J, because we will comment here, but we will forget to comment there. So, we need to be careful in correlating these two relevance requirements. If the company has availed a loan during the year by pledging shares of its subsidiaries, associates or group entities, then we need to report the same if there is any default in repayment. Why? If suppose the subsidiary or associates are defaulting, your investment value, they will take the investments because that is pledged as security. So, you have to make a provision for this impairment or loss. So, you must be careful. If at all there is a mention, you have to give a details thereof so that the user can understand, the regulator can understand what will impact on account of those in your financial statements. Fraud reporting is putting us to challenge because there is no proper area where we can get all the details from the client. Banks and NBFC, they have a mechanism to report on fraud. So whenever there is something happens, they will have a mechanism to, they have a committee, they will review and they will report whether it's a fraud or it's a regular loss. But in other cases, for other companies, difficult. So whenever there is a fraud by a company or any fraud on the company, so previously they've changed the word now. Previously it was by officers or his employees. Now they made it open. It can be by anybody, on the company or for the company or by the company. Notice are reported during the year. If yes, nature of the amount involved is indicated. So as auditor, we are responsible to report to the central government if at all we come across to any fraud exceeding 1 crore. So we have to send a notice to the board or audit committee, as the case may be. We have to wait for the time for the reply. After reply, or if they don't reply also, we have to communicate to the central government by filing certain forms. That is mandatory. But you have come across, management found the fraud and they reported. So then you have to see whether, if so, we have to review and report here. Similarly, this is the next one, as I told you. 143.12, auditors are under obligations to file to the central government if there is any fraud. Auditors means we will think that only we. No, even secretarial auditors and the cost auditors are auditors under for this purpose of section. They have to report to the central government if they come across any fraud. Because cost auditors can find some fraud on valuation or costing, whatever may be. Secretarial auditors on non-compliance, there may be some fraudulent transactions. Or diversion of funds is one of the fraudulent transactions from secretarial perspective. So they would have reported to the central government. We have to see all the filings under ADT4 and to ensure there is no omission. Whether the auditors have been considered whistleblower complaints. If so, received during the year by the company. It's not a challenge for the banks, NBFCs or listed companies because they have a mechanism of whistleblower. But for smaller companies, private companies, there is no mandatory requirement because SEBI mandates a whistleblower mechanism for all the listed companies. For larger companies, now we have a mandatory requirement of if there is a deposit acceptance or the company borrowed money from banks or financial exceeding 50 crores, they have to establish the whistleblower mechanism for the benefit of the directors and the employees. That's a requirement under section 177(9) of the Companies Act. So we have to see whether the company falls within any of this limit. If so, whether they have a policy of whistleblower mechanism in place. If so, we can ask what are the complaints received during the year. For other companies also, some of the employees or some outsiders would have sent a mail or a letter to the some concerned people. How these things are collated, how it is being analyzed. We have to discuss all the process owners from CFO, CEO or management or directors. We have to ask every meeting whether there is any fraud. Because unless we ask no, it will not come to their mind. If you ask a particular question, they will know, yes sir, there was a case, but it's not significant. Let us not bother about the amount involved. Let us see whether there is a fraud or not. If there is a fraud, let them give the details. You decide, analyze, and what will be the quantum. Accordingly, it will be, because the amount always will start at a small value. 5,000 rupees theft will take you to 5 crores theft at a later date. So they will test whether the pilferage, even shortage of inventory, normally will happen with small items. They will see whether anybody noticed, nobody noticed, then they will increase the quantity. Then I have seen cases of trucks being loaded from the factory without the knowledge of the management, without raising any bill. That will happen. So we have to be extra cautious. Good items will be sent as a scrap. That is a common thing in all manufacturing companies. So what is the system they have in place for the scrap items? Don't go by the scrap sales. Don't see whether the voucher is sufficient. That is not sufficient. Whether the item sold is really scrap or real production material. Because after 2-3 years, they will say there are some issues or stock is gone or some pilferage or damage due to nature. Whatever maybe they will say. But to see whether that is a real loss or not. That as auditor every year to check. That is the importance of inventory figure. Nidhi. Existing clause only, if the company is a Nidhi or not, we have to mention. If so, Nidhi, we have to say whether they maintain the ratios of term deposits. That is also existing clause. Now they added new clause under clause C. Whether there is any default in payment of interest or deposit. Everywhere they are asking us to confirm if there is a default. Because they must know whether company's working capital or company's financial position at stake. So we need to check and confirm. RBI Act. Till last year, we used to comment only on one clause. Whether the company is required to be registered under section 45 only. If so, whether the registration has been made. When this is triggered, once if it is a finance company. What is a finance company? If your income is more than 50% is from financial assets, or your assets in the balance sheet is 50% more financial assets, then you are triggered to be a finance company. Obviously, you have to get a file with the RBI. We will say yes or no. If suppose even some cases, one of the year due to huge dividend, the company's income would have gone up, that is exceptional cases, then they will see. That is the procedural aspect. Let us not go into that. We will give this comment. Now they added 3 new clauses. Where the company has conducted any non-banking financial company activities. It's a very wide term. what are the activities that can be conducted by a non-banking financial company is defined. You have to see whether the company has been done any of the activities. If so, whether the valid certificate of registration from RBI is available. It's a statement of fact. If at all the company has done any financial activities, see whether they have a certificate, because otherwise it's illegal. Third clause, whether the company is a core investment company. What is a core investment company? Company having 90% of its assets in investment in other entities. That is core investment company. Then under core investment, there are different classes under RBI. Let us not go into that. If the company is a core investment company, you have to comment whether they obtained registered with the RBI. And similarly, if the group has more than one core investment company, we have to say the number of indicators, number of CF in the group, form part of the group. Because there may be 2-3 entities in the same group itself. From group perspective, we have to see in that case, we have to comment on that. These 3 clauses are new. We have to rely on the factual details and discuss with management. But normally for small private companies, these issues will not be triggered. Group is a group as a whole, madam. Holding company, subsidiary company, associate, everything put together. So when you are doing the audit of the holding company, these issues will crop up. Because the main company may not be everything, but one of the components will be a CAC. From there, they will make investments to various entities. So what is the nature of business? Whether it's earning, doing business and getting money, or by making investments, and it can be anything. Investment securities is everything. It's a vast area. With this, I am completing all the changes and modifying clauses. Others than continuing clauses. If I get 5 minutes, I will run through this also. It's a fast reading I will do. Any queries on this, you can ask me. I am not going to read verbatim. First thing is regarding 185 and 186 of the Companies Act. Loan to companies and also loan and investment by the company. First thing, the company is barred to make any loan to the directors. That is barred. Only exception is managing directors. If it is company has a policy to give loan to all the employees. Exception is not there. Please understand. The exemption provided is company has a policy to give loan to all the employees. Then only they can give a loan to the managing director, full-time director. Otherwise, per se, directors are not eligible to have any loan. If there is any director, please raise the red flag. That is the first thing. That is not permitted. What are the permission? Then that comes under section 186. This is one of the simplest clause in CARO. But please understand, this has a relevance in your balance sheet and all the reporting. We have to be extra cautious in giving a comment on this. Have the complete documentation available with you. The checklist also for this is enormous. You have to review thoroughly to give a clean finding for this class. Because they are asking you to confirm, have been complied with. If not, provide details. Definitely in all cases, there will be some deviation. Please review it thoroughly. For example, for managing director's appointment, I am not coming to the loan. One of the example I am giving struck my mind. Appointment can be for 5 years as per the Companies Act. But if the company is going to shelter under Schedule 5 Part 2, that is minimum remuneration, remuneration appointment can be only for 3 years. So it's contradicting, because in the rules they mentioned that Schedule 5 as a footnote they would have mentioned. Most of the companies will miss this. They will say appointment and remuneration they will put up 5 years and say whenever there is introduction of profit, they will push off this Schedule 5 will be the minimum remuneration. Then you are violating the thing, you are not eligible. So please be careful when you are giving a comment. Fortunately, that has been moved from here to the main report, but main report is more risky than the CARO report. This is regarding deposit accepted by the company, whether all the conditions have been complied with. Maintenance of cost records, there is no change, have been made and so maintained. Obviously, wherever there is required, we will see the certification from the cost auditor also. So that is all. This is regarding the statutory dues, whether the company is regular in depositing the statutory dues. If the arrears is more than 6 months, then we have to mention the fact. In the CARO report is a statement of facts. We can see all the outstanding and ensure. But the thing is, the company would have defaulted during the year, but the year end they would have corrected it. In that case, you have to mention that though there were delays in a few cases or in all the cases, whatever may be, then you have to give this comment outstanding. Wherever there is a dispute, we have to mention the forum in a dispute. A mere representation letter is not a dispute. We have to file. 154 petition is a dispute. GST, there are a lot of cases. Show cause notice is not a demand. Show cause notice, first notice to you that as per the records, there are certain gaps, you please correct. You will be giving submission. They will give order, that only the demand raises. Then you have to file an appeal or you have to make the payment. Then only the time starts. So don't include all the things. But as a matter of prudence, if a short cause notice for a huge amount, you can give us a note saying that the company has a short cause notice, they are giving a necessary submission. Because the readers, better understanding to the readers, because the impact may be substantial in some cases. That is for the board and the auditors to decide. But per se, show cause notice is not a demand. We have to see what is the final demand. Because most of the cases, what will happen? No, they will not file a rectification petition also. They will not file an appeal. No, sir, we are going to contest. See whether the time is available. 30 days you have to file an appeal, whether it has been done. If not, ask them to file with the condonation and include that in the note. Otherwise, the liability has to be provided in the books. IPO, FPO, this is the existing clause, whether the funds received has been utilized for the purpose. For listing companies, we have to give mandatory in every quarterly results. Then the next one is regarding professional allotment of shares, either as a private allotment or a further issue. We need to see whether the provisions of the companies have been complied with. Related party transaction, as I told you, the first clause, this one 185 and 186, and this one related party 177 and 186. That is 117 is regarding audit committee, and 188 is regarding the transaction related parties. Please have a thorough review because all the issues are copying up only from these two sections. You have to be extra cautious. 185, 186, 188. Because everything is related to related party. Anything goes wrong, you will be answerable. Here they are asking whether all the things have been complied with and disclosed in the financial statements as required under the applicable accounting standards. So we have to go to the accounting standard also. Not only definition of Companies Act, we have to see the definition of the accounting standard because accounting standards definition of related party is much wider compared to the definition under Companies Act. We have to see whether the disclosures as required standards have been complied with. Non-cash transactions, whether the company has entered into non-cash transaction with the directors or any person connected with the him. So related party transaction, if there is a non-cash transaction, we have to comment that. This is as per the place, nothing new. With this, I am ending the presentation. Any questions, please? Thank you.
Thank you, sir, for such an insightful and impactful session. The way you address each query with clarity and depth made the session all the more enriching for the participants. On behalf of SAIC, we extend our sincere thanks and deep appreciation for your contributions. Thank you. So we will reconvene after tea break. D22 and its implication. So I request CA JOMON K. George, our respected speaker, to occupy the desk. Sir, can you occupy the desk? Yes, sir. I now request CA Anisha to give the welcome address to our speaker, CA JOMON K. George.
Happy morning, everyone. I'm Anusha Patsardi. I'm also a chartered accountant, currently associated with a reputed bank here in Chennai. So, with a deep sense of gratitude and privilege, I extend my warm welcome to our eminent speaker, CA JOMON K. George, sir. He is also a fellow member of the Institute of Chartered Accountants of India with a diversified practice experience. Sir being a chairman of a Southern Indian Region Council of the CA Institute 2019 to 20. Sir is also a founder and managing partner of JVR and Associates, an 8-year partner firm specializing in corporate audits and consultancy. Sir is also a mentor, Philip Macmillan Woods, a multidisciplinary accounting and consultancy firm based in Dubai. Sir is also a faculty member for auditing at the Institute of Chartered Accountants of India and has taught more than 10,000 CA students. Sir is also a regular resource person on professional circuit on accounting and auditing, standards and corporate audit. He has also done more than 900 presentations. Sir is also a peer review trainer and a member of Auditing and Assurance Standards Board of ICAI. Sir has served as a chairman of ICAI at Ernakulam branch in 2002-2003. Sir has traveled extensively in the UK, Middle East and the Far East. Being a president of a Rotary Chennai, Cochin Central and member of various social clubs. Sir is also honored as a treasurer, Regional Sports Center at Kochi. Sir has also served as a secretary at Kerala Management Association during the tenure of 2021 to 2022. Sir has also acted as a member at advisory board at St. Teresa's College at Ernakulam. He has also authored Trials in Patakal, Reflections of Personal and Professional Life, released in February 2021. We are deeply honored to have you here, sir. Thank you. I now request CA Anita ma'am to present the memento to sir as a token of appreciation and respect.
Good morning or good afternoon is sharp all now to all of you. Co-speaker of the day, my dear friend, and respected senior members. Anusha, the newly qualified chartered accountant, joined the institute to introduce me, and my dear colleagues. I'm extremely delighted and happy to stand before you in Chennai. For me, it is Madras. I stand here enveloped in nostalgic memories of my articleship here way back from 88 to 91. And later I was there in the council, in the regional council from 2012 to 21, 9 years in the council. And 1920, I was fortunate to be chairman of the region. So today traveling from the airport to Ranjit Hotel and from there to MMA, to pleasant memories of my articleship days and cruising on Mount Road on my second-hand Bajaj Chetak scooter. So pleasant memories. I did my articles with Verma and Verma, and our office used to be on Cathedral Road. Now they are in Adyar. So coming to Chennai, Madras is like a senior member said, Chennai is a city, Madras is an emotion. And seniors would appreciate and understand. I had more of Madras experiences than Chennai. So happy that I'm here. Thanks to the committee and also to the chairperson, Revati, a dear friend. I think Vishesh is here. Her son is here. So for personally inviting me to be part of this corporate law conclave. Also, MMA is also a new experience. I was the secretary of Kerala Management Association on the very active LMAs, all under IMA, All India Management Association. And MMA we used to imbibe and take out some of the good programs here. So very professionally run management, LMA, Local Management Association. So extremely happy that I could be here. So once again, thanking the organizers and the team for having me here. Let me move on to the topic, which is CSR. Section 135 deals with CSR. We have CSR rules. There's a reference to companies' accounts rules as well. And before I get into that, I should compliment RAMASWAMI for the very, very detailed dissection, I would say, of the CARO, which has become so very demanding. The new reporting regime is so very demanding. You know that CARO is primarily made for a banker, right? If you look at the clauses, it is not without reason. The drafting team had a lot of people who have been very close to the banks. Not without reason why I'm saying this, because many of the balance sheets, unfortunately, since this is a closed forum of chartered account, many of the balance sheets of the constituents, the banks, are having non-existent inventories, receivables which would never be received, and true and fair is really absent. So which is shaky in the entire banking system. If you look at, people would ask this question, why is that Ind AS has not been made mandatory for banks, whereas for NBFCs have been made mandatory. So senior banker told me, JOMON, you know better that it is an orchestrated delay. So if Ind AS, the principles of Ind AS or IFR is applied to banking system, particularly of expected credit loss and all that, it will create havoc in the system. And while India is now figuring very strong, now we have become the fourth largest economy, surpassing UK, and we have only Germany slightly ahead of us, and two others, China and US, are far ahead of us. So galloping fast as an economy, and where people would like to come and invest, a lot of initiatives. So therefore, all those things are very important. So CARO, coming back to CARO, Companies Auditors Report Order 2020, which is very, very demanding, and it's a wonderful dissection. We have been together in many forums, so keep going, Ramaswamy, all the very best. Coming back to the topic of this session, before I move on to 135, I'm very happy, let me also compliment the CLCGC Committee, Corporate Laws and Corporate Governance Committee for having a conclave like this. I think they would be doing it across the country. Chennai, I think this is the first one. Very good topic, very thoughtfully conceived and selected. And corporate governance, CARO, CSR, and of course, the topics covered by Chinnasamy Ganeshan, and all of them are very, very relevant. And my complimenting for a very important reason that over a period of last maybe 10, 15 years, if we see, we have pledged the corporate law practice to company secretaries. We have moved away from corporate law. I don't know what's the reason. So these are occasions where we are made to think that, why did we leave that out? It's a good opportunity, it's a lucrative opportunity. It is interesting, and we have been clinging on more to tax and very tax-related aspects. Particularly after GST coming in, I'm seeing that the new generation chartered accountants, unfortunately, degraded themselves to clerks or return filing assistants of. I'm being candid in saying this. So there are higher realms, better realms of professional services which are available for us. So we should essentially reinvent corporate law practice or not there. And particularly where firms, there are multiple partners. I'm addressing chartered accountants. Yesterday I was in a branch in Koilon in Kerala. The topic was standards on auditing and accounting standards and update. As we are standing at the threshold of this audit season of some of us completed, the good companies have completed their work, and we have also completed the audit as well. But many of them are still lagging. So it's very important that we update on that regular basis. So now coming back to this particular topic of why Chapter 9 and Chapter 10, two chapters of the Companies Act. Of course, Chapter 5, RAMASWAMI, acceptance of deposits, it's very important. But as far as practicing chartered accounts are concerned, corporate accountants, CFOs are concerned, the two chapters are very, very important. Chapter 9 deals with accounts of companies. Frankly, many of us have not read the Companies Act 2013. Some of us, we are academics, so we are forced to refer. So Companies Act 2013, which is now how many years old? 12 years old, and we say still it's a new Companies Act. It's 12 years old and it's still evolving. Because when it was issued, when it was enacted in a hurry. And there are a lot of issues. Even in when we go through the CSR provisions, you would see why it was financial year shifted to immediately preceding financial year and things like that. So Chapter 9, sections 128 to 138, accounts of companies. 128 deals with books of accounts. It's quite relevant this year. And last year also, there are a lot of references to section 128 because books of accounts is where audit trail emerged from. Audit trail was a change last year. And this year people ask me, what is the audit change in company audit this year? Is there any change for company audit schedule 2 or CARO this year? There's only one additional reporting responsibility for accountants, chartered accountants, is audit trail retention. Because last year was the first year. This year onwards, we had put that additional clause on audit trail retention. I think SHANKAR RAMAN is coming up in the afternoon and discussing that in detail. So 128 books of account, 129 financial statements, then 130 and 131 reopening and all those things. 132, though it's accounts of companies, 132 is NAFRA. NAFRA is 132. NAFRA was one of the last sections to be enacted. Our institute fought tooth and nail not to have a super regulator. But not only that NAFRA has been enacted, NAFRA has come into existence, NAFRA is flexing its muscles, taking action against particularly the big four and the bigger firms, and probably in the listed space, mostly in the listed space. So we have seen what happened in IL and FS, and the latest is IndusInd Bank. A lot of issues happening. When corporate failures are happening, there's always audit issues, which should really open our eyes, and raise our brows. Why is this happening on a regular basis in spite of having all kind of regulatory this thing and uniform code of literature like standards on auditing and IL and FS? If you recall, the 305-page report of NAFRA, the crux of that only two things. I'm just echoing what I discussed with members in Koilon yesterday. Two things. One is that they failed to exercise professional skepticism, which is now highly echoed in SA 200, which is a takeoff standard. The firm did not exercise professional skepticism, taking things for granted. Then is that they did not collect. I've been teaching auditing for 20 years in Cochin. In the first class on auditing, we all learned the auditor should obtain dash evidence. And is not there. Sufficient appropriate. I don't know why they have not put and there. So sufficient appropriate evidence. So the multinational firm, which is in public domain, but multinational firm did not collect sufficient appropriate evidence and exercise professional skepticism. That's the crux of this report. So not straying from the point. So NAFRA has come into existence. 133 embosses central government issue accounting standards. 134 is boards report financial statements. 135 is where we are in, is the CSR. 136, 137. 138 is internal audit. So those captioned as accounts of companies, strictly CSR, NAFRA and internal audit is also in there. So that's about Chapter 9. All of us, I would urge, if you have at least at least one company audit, all of us should be familiar with all these sections. It's very, very important. We cannot have a passive corporate law practice. Passive corporate law practice is today very, very dangerous, very risky, I would say. Now, the next section, sequentially, rightly, the next chapter is Chapter 10, which deals with audit and auditors, accounts of companies and audit and auditors. We also studied in the first class in auditing that auditing starts where accounting ends. But 33 years into practice, My experience is that serious year-end accounting starts only after the auditor shows up. Factually so. The loud laugh suggests that you are all with me, we are all on the same page. Now, we have this practice of sending an audit checklist for audit readiness to our clients, mid-sized clients. Some of them call us, some of them do not. So we have to call them and alert them and saying that send a checklist for audit readiness. Only after that is received duly with copies of trial balance, stock statements, aging statements that we start the audit, which is very effective. Please try it out. Instead of sending the people for the audit and then begging for information rather, this would make sense. I think it has been very effective. Okay. That is how we look at it. So now coming to chapter 10, it deals with 139, appointment of auditor, goes up to 148, which is cost audit. 143, as far as 143 is concerned, is most important section for chartered accountants. Or the auditor's report. Our CARO, RAMASWAMI's CARO emanates from 143.11, right? 143.11. And 143, this section is captioned as powers and duties of auditors and, can anybody help me? Powers and duties of auditors and auditing standards. In the very caption of the section, they have included auditing standards. And 143.9 is a simple line. Every auditor shall comply with auditing standards. It's very simple to read. It's very, very difficult, very, very demanding, very, very challenging for many reasons. Many reasons, primarily because awareness of standards auditing is very poor. And it has been mandatory from the institute side ever since 1982 when APC was set up, Auditing Practices Committee was set up. And we evolved over the period. We have now AASB, Auditing and Assurance Standards Board. I was fortunate to be a member of auditing, co-opted member of Auditing Assurance Standards Board way back in 2005, 20 years back. When Manoharan sir became vice president, he co-opted me, having heard me and during our interactions on auditing standards and all that. So a very great learning experience, 11 meetings in Delhi and 1 in Mumbai. So pleasant memories, a lot of work goes in there, but unfortunately the practicing membership is not catching up with them, catching up the spirit of standards auditing. Yesterday a senior member in that branch asked me, is there a real need for an audit program? He asked me this question. Now what is the regulator doing now? If you are taken to task by an AFRA or a disciplinary committee, or now we are scared of ED also. The questions they ask us, please give us your engagement letter. How many of obtain an engagement letter? Where is the MRL, management representation letter? Someone did mention about in CARO, anything that we do, MRL, SA 580, written representations, is the most important standard. We are still scared. Some of us are not aware. Those who are aware also, the client will feel bad, is it not? Why ask them to sign all the documents? I'm not getting critical or cynical here, but the sad fact is that times have changed and we have to essentially change and adapt. I was sharing this experience with the members yesterday. I have a property in a hill station. It's a farm property in a hill station. So I wanted to have a tube well dug there. So they came with the entire equipment with the migrant workers. In Kerala we call it Bengali or Bihari workers, migrant workers. And before they unloaded the equipment, they came and showed me a paper. It said terms and conditions for digging borewell. Now what the first clause is? By digging a borewell, there's no guarantee that you will get water. A non-refundable advance of 5,000 has to be given in any case. Because they have to unload the equipment, they brought the people with the rice and dal, cooking will all happen there. And so they give all the terms and conditions. Digging through the rock is more expensive, the rate is different. If it is loose soil, they have to put the PVC pipe of 6 mm dia and then that is more expensive. Everything are very clear. That is what a letter of engagement is. Why audit? Any engagement for that matter. As a project report, it could be anything. And certifications we do like this. Certifications is like the accountant of the client calls our staff or a junior partner and says that, sir, we need a turnover certificate of the last 3 years. Immediately we issue it. We are not supposed to. We have to get an email and a WhatsApp is okay, but I don't think so. Get an email and in the certificate we have to mention. That's how the new certificate format is. A lot of changes are happening, so we need to catch up. So for a change, we'll come back to CSR, is it not? So CSR has been, before it was enacted, and let me tell you, India is the first country in the world to formalize CSR and make it mandatory under the corporate law. India still have many companies, particularly the Tata group of companies. And in the new gen, I wouldn't call them new gen, Wipro, IT companies like Wipro and Shivanadar's, HCL, they're all into all this kind of humanitarian services. So this is mandated from 2013 and 135. We have the allied rules, we have Schedule 7. So it's for slightly bigger companies that is applicable. So with this introduction, let me move on to the specifics. So don't forget about Chapter 9 and Chapter 10, and 135 falls in Chapter 9, Section 135. Every company having a net worth of rupees 500 crores or more. Why I'm touching upon, in fact, the topic you want to me look at this is only CSR policy amendments 2022 and its implication. There are only 4 amendments. That could be completed in 10 minutes, but I thought I should put things in context, give the background, and then take off from there. So we're still on the runway. Now we are taking off. Some of us are a little scared when talk about takeoff. Very sad. Okay. So every company having a net worth of exceeding 500 crores, turnover of 1,000 crores or more, a net profit of 5 crores or more in the immediately preceding financial year shall constitute a corporate or committee, CSR committee, and the board consisting of 3 or more directors, of which at least 1 director should be an independent director. A few things. Every company would include a foreign company having branch or project office in India. If the volume of the operations or the net worth or the turnover or the profit exceeds this limit, it would be applicable. That's very important. And CSR committee is required only if the spending obligation of that 2% worked out is more than 50 lakhs. There's a small change in that. That's an amendment made by the policy rules, amendment rules in 2022. So these 3 things are 3 criteria. It is or, it's not and. You can have a very little net worth and low turnover, but if profit is high. Most of the things, the first 2, most of our clients would may not meet the first 2 criteria, but third criteria is profit of 5 crores. And we come to that a little later, but let me tell you that this upfront, that profit is PBT, profit before tax, because the section refers to section 198, computation of managerial remuneration. I think Chinsami did that yesterday. Chinsami worked on this. Okay. 198 managerial remuneration. The 198.5, if you see, 195 says it, items which cannot be deducted is income tax, super profits, etc. Super tax on profits. It's an old story. Income tax is not deductible. So this 5 crores is PBT. In fact, 3 years back, we almost made a wrong interpretation, and that is why I looked at it at depth and found that it's PBT and not PAT. It makes a difference. So if that is there, then they should constitute a CSR committee. Why is it immediately preceding financial year? Originally when it was enacted, it said in any financial year, which created a problem because at the end of the financial year only you would know. That is a hasty drafting which typical of Companies Act 2030, and therefore they said immediately preceding financial year. So now over the first year when you look at this, so when we are doing the audit of 24-25, we are looking at 23-24. Over 24-25, if 23-24 the PBT for the first time is let's say 6 crores, then 135 becomes squarely applicable for your company in 24-25. Is it clear? So that's the way we look at it. And then the other provisions will follow. I hope this is clear. We can move on. And another question is like, what if there are no independent directors? They're not required to have independent directors, then 3. What if you're a private limited company having only 2 directors? 2, that's fine. Otherwise, if you are a large company, a listed company with independent director, the minimum constitution of the CSR committee is 3, of which 1 should be an independent director. If you do not have independent director, you don't have to bring in an independent director for the sake of it. And 3 is also, if it's a private limited company, 2 directors, 2 is enough. That has been clarified. The corporate law, the CSR committee shall formulate and recommend to the board a CSR policy which shall indicate the activities to be undertaken by the company as specified in Schedule 7. Now, Companies Act 2013 was supposed to be simplifying, and the seniors would remember we had that thick Ramaya, the glittering Ramaya still in the shelf. We are showing it off. No? It's still a memory, the glittering Ramaya. And the new jet Ramaya in 2013 is a blue wrapper. But today, let me also tell you that any reference to the Companies Act 2013 may not be safe referring to printed literature. Go to the MCA website, look at the ebook, the Companies Act 2013, download what you need. That is the safest point of reference because that is mostly updated, maintained by ICSI, not ICAI. It keeps changing. It's still evolving, Companies Act 2013. They were made in a hurry, and today, what they're doing is they're decriminalizing the Companies Act 2013. There's a company law committee in which RAMASWAMI sir is there. Amarjit Chopra was also there. Both those past presidents, RAMASWAMI is from Coimbatore. So they're still working on it, decriminalizing the Companies Act. The reason being, after enacting this by, I'm not talking politics here, UPA 2 in 2013, made in a hurry and a lot of changes happening, and India was being seen as a very favored investment destination. I don't know whether you have heard of a term called ABC, anything but China. Moved out, but the best benefited by teeny tots like Vietnam, Taipei and all that. India also, we had this Apple shifting their plant into UP, but there's some objection from US, all those things. That's different. That is general things. So that being the case, you cannot have very draconian, tough, difficult corporate law framework in the country. They found that it is really, really punitive, hugely punitive. We look at chapter 5, section 73, violations of acceptance of deposits. It runs into crores of rupees, and on top of that, 6 months of free accommodation and food. I hope you get it clear. Or with both, then now you understand. So why should this be so punitive? So they have to soften that, decriminalize that and say that, don't worry, you're not going to jail if you're coming to India and doing business here. That is how they're making it more friendly, investor friendly. And the catchword today is, whatever said, two things. One is ease of doing business. It's quite essential. And reducing cost of compliance for small companies. And you remember when the Act was first enacted, we had to file MGT 14 for everything, is it not? So somebody said, even for the MD going to the washroom, you have to file an MGT 14. That is a compliance requirement. So the cost of compliance and compliance requirements are being softened. It's a good initiative, but I don't think it's moving at a pace it should have. It should settle at some point of time. Enactment which is more than 12 years old is still being tinkered with. It's not very, very fair. So where did we stray from? We took this thing, coming to the board in Schedule 7. Now, Companies Act 2013, we have the Act, the rules and schedules. So Schedule 7 to the Companies Act 2013 lists out activities, eligible activities and funds which are eligible for investment. Recommend the amount of expenditure to be incurred on CSR activities as in Schedule 7 and monitor the CSR policy of the company from time to time. This is a mandate of the CSR committee. Am I going okay? Am I going fast? Is that fine? Okay. Now, the board's responsibilities will include disclose the composition of the CSR committee in its report. Not enough, because now CSR 2 is given as an addendum to AOC 4. I'm not a procedure person, but still AOC 4 it is being added as. Approve the CSR policy for the company and disclose contents of such policy in its report, board's report in 134, and also place it on the company's website if you have a website. Website is still not mandatory. Ensure that the company spends in every financial year at least 2% of the average net profits of the company made during the 3 immediately preceding financial years. I have 3 asterisk marks for you. T and C apply. Spending should preferably be in the local area or areas around which it operates. The registered office or the factory or premises, ideally because that's again looking at balanced regional development. If you are a company in a small village in Tamil Nadu, for that matter, I've seen having extensively traveled in Tamil Nadu, smaller towns like maybe place like Mailaduthurai, all that they have come up so very well. It is not that there's complete focus on Chennai. Coimbatore has developed a lot. So they have been encouraged to, say for example, Coimbatore, so many companies which will come and do this backend, probably fulfill all the 3 conditions. And therefore, spending, preferably, they don't say there's no prohibition on spending on further projects, but that's there. The amount spent in excess can be carried forward for 3 years. If your obligation is, let us say, 5 crores, and you spend 6 crores, and if the board decides that we are eligible to carry forward, but the board can decide, no, we are done with this, we are not carrying forward. Every year is a fresh slate, if they say, that is fine. Otherwise, it can be carried forward. And net profit is computed as in section 198. 198 deals with the computation net profits for managerial remuneration, and that is where I highlighted 198.5 for that, tax cannot be deducted. So this is always the PBT. So 2% of the PBT, which is to be for this spending, it is 2% of the PBT, which one has to see in there. If the company fails to spend such amount, the board shall specify the reasons for not spending it. That is primarily, if you remember, the penalty sections were introduced much later. 135 was introduced as a very friendly section. And I think 2024, if the reference I did is right, the corporate India or India Inc., as they say, the spend is of 20,000 crores. 20,000 crores is what they would spend and all the corporates would spend, and really helps the government in implementing a lot of social welfare activities, and also go deep down into the villages, Vipro and all that, girls' education, sanitation, all those things. Lot of projects they are doing in a very, very meaningful manner, empowering the India that lives in the villages, as Gandhiji famously said. And amount unspent on other than ongoing projects. That's how they start. They go in the reverse order. Amount unspent on other than ongoing projects shall be transferred to a fund specified in Schedule 7 within a period of 6 months of the expiry of the financial year. Now, just look at what is an ongoing project. An ongoing project is not confined to 1 year. The board can decide, okay, after the obligation, we are going to spend, let's say, if the total obligation is again, let's say 10 crores, the board can decide that, okay, we'll spend 5 crores this year, or let's say 6 crores this year on CSR for this financial year, and the balance amount of 4 crores we'll spend on ongoing projects, which would mean that it is a multi-year transcend more than a year, but the time frame fixed as 3 years. So a multi-year CSR project having timelines not exceeding 3 years, excluding the year of commencement. So that's called an ongoing project. So other than ongoing project, what happens is you should essentially spend by the year end. If not, it is out of your hands. You have to shift it to or deposit into a fund which is given in Prime Minister's Relief Fund, Drought Relief Fund. And also I think because of the floods and all that, the CM, Chief Minister's Relief Funds, were also brought into the list of Schedule 7, if I'm right. So all that funds will be going out of your hand. But as far as ongoing projects are concerned, it's a different story. We'll come to that. So first they have started with other than ongoing projects. Any amount unspent on ongoing projects shall be transferred by the company to unspent CSR account in a scheduled bank within a period of 30 days from the end of the financial year. This is something which is comparable to our capital gains account scheme or dividend, for example. Dividend has to be declared. Recently we had a discussion on declaring interim dividend. The company is about to be wound up. So apparently there is some restriction. A company in winding up cannot declare interim dividend. I was just incidental to saying this. So within 30 days of the close of the financial year, by the end of the financial year, they should determine. And it's clear. If the obligation is, let's say, as we discussed in the earlier case, is 6 crores, and we have spent only 5 crores for other than ongoing projects, then it is a different story. Here we said how much was for ongoing projects? 4 crores we kept for ongoing projects. Of that, we spent only 3 crores. 1 crore has to be deposited within 30th April of 2025, as the case should have, or if it is this year, before 30th April 2026. Such amount shall be spent by the company for CSR within 3 financial years. What is earmarked and put in a bank account? For 3 years from the date of such transfer, failing which the company shall transfer the same again into a specified Schedule 7 fund. It goes out of your hand within 30 days from the date of completion of the 3rd financial year. So the subtle distinction between 135.5 and 135.6 is 135 talks about spending and 135.6 is about unspent. But one should be clear, and is anyone involved in CSR advisory? Anyone doing CSR audit? No, CSR audit asset is not mandatory. There are 2 things which will come to, but then let me at this point of time tell you. I got, my office did 3 CSR1 registrations in a single day. They're not being very, very choosy about it. CSR1 is that NGO or NPO or an implementing agency, as I say, in the CSR context. An implementing agency has to get registered with the MCA. Go to the MCA website and get it registered. Only then you become eligible. So we can spend through implementing agency for you to be discharging your obligation on CSR through an implementing agency. That implementing agency should be registered with MCA. So in my introduction, it was there Kerala Management Association and Rotary Service Trust and Regional Sports and Coach. In a single day, it was got registered. So that is not, they are not being very choosy. They want more of the implementing agencies to come and do this. Because companies do not have the wherewithal, they do not have the people. So therefore, we essentially depend on implementing agencies. Incidentally, when I was secretary of KMA, that year we did a program called the CSR Conclave in Cochin. The idea was to have a platform to bring in, when validate, well-run, transparent, efficient NGOs and marry them with the corporates who have an obligation to discharge. It really worked out, because corporates do not have a lot of players around. In the northern and western side, I've heard that there are CSR agents who take a percentage to identify the NGOs and take a percentage from both the corporates as well as the NGOs. Not a healthy practice, but NGOs have to have their validation, but they are not very choosy. The second aspect is there any validation of the, what we call it as end spending or end utilization? It is not there. So I think surely these are occasions where we are prompted to recommend to the committee that it's a good opportunity for chartered accountants, where the CSR spending has to be validated. There's no validation as of now. The board files a CSR2 as an addendum to your board's report, and that is being accepted and done with that. So a lot of misuse also happening. End use is not, many cases it is suspect, it's questionable. That is only incidental. So this is what they say. So if the amount which is transferred to earmarked account within 30 days for ongoing projects is not spent within 3 years, then from the end of those 3 years, within 30 days from the elapse of these 3 years, it has to be transferred to a scheduled service. That fund never comes back to you. It is completely out of your control. That's how it is. Now look at the penalties. What came as a very friendly section has become very, and MCA is mercilessly imposing penalties on non-spending of CSR and also for not transferring also. A clerical oversight can also trigger a penalty. Look at the amounts. Twice the amount required to be transferred by the company to Schedule 7 fund or unspent CSR amount, or 1 crore, whichever is less. I know why that kind of a punitive section clause should have come in this. That's the penalty. And officer in default also. Officer in default shall be liable to a penalty of 1/10 of the amount required to be transferred to 1/10 what the company pays, whichever is less. And that is 2 lakhs. So it's scary. It's scary, it's very punitive, painful. So that means that corporates in that sector, and we as auditors also, we would probably, be asked, sir, why didn't you tell us that is applicable for us when a penalty is imposed? When doing audits, internal audits, advisory, new areas are there. Incidentally, we have developed a new vertical, not for audit clients. We are just discussing with the Balu is just discussing on CSR possibilities. So CSR or any kind of those kind of advisory services, there is a prohibition under section 144. Many of us are not aware of section 144, which comes immediately after powers and duties of auditors, 143. 144 is a prohibition on the auditor of the company rendering multidisciplinary services. To Ramaswami's corporate client, I can render any kind of service. But since he is the auditor, he is clipped, rather he is restricted. Literally it is a 144. Curfew we call it 144, no? Malayalathala 144 solvanga. So you can as a corporate auditor, independence, and therefore you cannot render multidisciplinary services. You remember the old story of what happened in Enron and the collapse of Arthur Andersen. All of us know, but for the sake of this understanding, Arthur Andersen was getting paid $25 million as audit fees and $27 million for other services. So with $52 million getting paid to the big five at that point of time, Enron collapsed. That's the time the US authorities, woke up to the reality and they said there should not be multidisciplinary services, and SOX compliance and all those things came. And Public Company Oversight Board, Public Companies Accounting Oversight Board. Okay, maybe it's here. Yeah. It's not here on my screen. Can you check? So 144, subject to the restrictions and ethical compulsions we have, I think we should expand the range of our services, particularly firms with a larger number of members. That's also what the PM is now encouraging now, a big four from India, all those things. But we are all happy that, doors are being opened. But there's a lot of inherent danger in that. You and I are not going to London or New York tomorrow, but New York and London are looking at India because it's a huge market. It's like a Pepsi or anything that looks at the Indian market. So it is high time that we formed larger firms, improved our deliverables, and presented ourselves better, having a website, a little expressive about what we do, the way we attire, the having a brochure. There is absolutely no prohibition in having a brochure, but you cannot distribute it standing in front of the thing. But you can, when we go for a presentation to a client's place, we can carry brochure. All those things, a lot of things which we have to do now. It's a promising world. The outlook was very good for the profession. On the one side, people say that customary practice is fading out, tax auditors going out, GST is good. That's different, but then there are a lot of newer areas which come up. I think all the youngsters should become IPs. IBC is a very, very challenging, I would say, very challenging as well as rewarding, interesting area of practice. So I'm preaching this, but then I'm fortunate to have partners who would qualify in all this, and then I can say that a firm has the capability, and so that is how we do it. So where did we stray from? Yeah, okay. This is a penalties. The penalties are very, very painful. So, but one has to be aware about it, and that is when the penalty is high. We have to be extremely vigilant on how we deal with the situations. Yeah. See, I don't think there is a prohibition in having it as an FD, because corporate social responsibility account, that has been designated as that. But to my knowledge, there should not be any prohibition on that being invested and earning some interest on it. That interest and also will have to be invested only for CSR activity. You know that. Surplus generated from any CSR activity, including the deposit, will have to be further spent on it. To my knowledge, I don't think there is an express prohibition in having that as an earmarked FD. But then whether that FD can be designated as unspent CSR FD account is something which is difficult. That's all allowed. That's all allowed, because that is expediency, that the practicality of operations have to be seen. So retention will not be treated as non-spending. That's a question, right? I don't know. Yeah. Retention is normally part of a contract in all those things we do. But then retention, how does that come to this corporate? You would be engaging a contractor or someone, no? What is this retention for? Okay. I think that is taken as compliance. If I am the Minister for Corporate Laws, I will not penalize you. Why not? Nobody can apply brakes on dreams, right? Right. Moving on, reporting. Every company to which Section 135 applies shall furnish a report on CSR in Form CSR 2 to ROC as an addendum to AOC 4. So therefore the timelines is aligned with AOC 4, that is 30 days from the holding of the AGM. And this is, where is this mentioned? That is what's interesting. So you have a complete set of CSR policy rules. You have 135 from where you travel to company CSR policy rules. Still they put the CSR 2 requirement in company's accounts rules 2014. That's how they have messed it up. So when Companies Act 2013 was being amended, somebody said you need to have 3 hands, because the earlier act for sections which have not been repealed, the repeal was done in a phased manner. The new act and then the rules. So this Companies Act 2013, I think there are 360 places where they have used the term as may be prescribed. And prescriptions are found in the rules. Do you know the definition of a relative? Definition of a relative, half of that is in the act and half of that is in the rules. And again, simple things like DPT3, some of us are actively working on it, helping the client to file it and all that. So DPT3, why should they keep this deadline as of now? They said once audit is completed, there could be some entries which can happen, all those things. But they're saying that these entries are not genuine entries. Therefore, the regulator is becoming stricter. And when I was in the regional council, on the eve of the last day of filing, I would get minimum 100 calls. Jomon sir, Joe, is there any extension? I said, I am not an extension person. It makes you very, very unpopular, politically speaking. But at the cost of that, I am not an extension person. Why should any extension be given for tax audit? Except when we had issues like, major floods or the epidemic. Otherwise, there's no need for that. That is the thinking of the ministry now. As thinking of the ministry, that's thinking of the PMO. So our direct tax committee has resolved in their own collective wisdom said that we are not going to go there, because the counter question they're asking is, why are you so bothered? Why is Asochem not coming? Why is Vicky not coming? Why are you so bothered? The psychology is very simple. We are carrying so much of our clients' problems with us than our problems. That should stop, I think. I've been trained to be having a detached attachment with the clients. My parent firm told me. But we carry all the problems with the clients, sit late and too much of hard work. And today now it is taking a toll. Recently there's a Pune incident, I don't know whether you heard about it. Youngsters are quitting, youngsters are finding it difficult, having psychological problems because of the work pressure. They take life easy. Spend time with family, spend time, travel, explore. There's much more to life than chartered accountancy and office. I practice it, so I think I'm entitled to preach. I do preach only what I practice. So this is very important. So Companies Accounts Rules 2014 is just to see whether CSR2 is there. And CSR2 has an annexure which has been amended. We'll come to that. CSR activities can be undertaken by the company directly or through an implementation agency. The short form which I have started using is IA. Who are the Section 8 company, trust or society registered under 12A or approved under ATG of the Act. Now the new thing has come, that's the third clause, is readable for you. Trust society exempted under 1023C of the IT Act. That's a new addition. Because they want to expand the list of or scope of list of eligible IAS, implementation agencies. More of them should come and help the corporates. And that way also, they in fact, I'm an active member of Rotary. There's something called an Adarsh Trust, which is taking care of autistic children. If you go there, spend time with them, the way you look at life will change. We also had a speaker last week from an organization called Swasraya, Reggie Abraham, who met with an accident at the age of 24 and is paralyzed below the waist. He came on a wheelchair and he is running an organization which is taking care of people who have this kind of paralysis and issues. Very, very deeply touching. Some of us are in tears when we heard them speak. Now there are about 200 inmates and they're trying to, some of them they are able to develop them and push them out of this, giving them a, for the differently able kind of thing, auto rickshaws and livelihood, some kind of using them, helping them to manufacture something. In very simple terms, finding a new purpose of life for them. It's very, very, very deeply touching. And he was so sad that his FCRA registration got cancelled and he's not able to register. So those are all things which, when you connect with the larger world existence, we had a Rotary president who was Wilfred Wilkinson. He said every responsible individual should connect themselves to a larger world existence. Me, my work, my family, there's a bigger world, one should look at it. I'm not getting into those areas, but then that really helps. Being a Rotarian is a very, very proud thing. People tend to think that Rotary is getting every weekend having a drink. As that happens, that is to keep the people together. But the kind of service which Rotary does as the world's most respected service organization is really phenomenal. And Bill Gates and Melinda Foundation donates billions of dollars to Rotary's activities. It could be in Africa. India is now not seen as a poor country, but of course we have those issues. So a lot of things to discuss. Some of you are Rotarians, I hope. If not, it's a good platform to, I can say that extend your thinking, extend your capabilities, extend your resources to the society which is quite in need. So trust society, which is a 1023C of the Act, there's one thing they say that established by the company or by the central government or state government, either singly or jointly. Now the subtle difference is that why I have put it differently below the line is that if you are all this established by the company or by the central government jointly or singly, you don't need to have experience. Don't need to have experience. Look at the last clause. The other one, having established track record of 3 years, or that is where they say established by the parliament or state legislature, any section 8 company or trust or society, 12A and 80G and 1023C. Something to be noted here is that if you are 1023C registered, then 12A and 80G is not required. It's a new addition. 12A and 80G is a combination. You should be 12A registered and 80G recognized. That is one combination. And if you are 1023C, these two are not required. So the first one is about the company doing it or the central government, the state government doing it. Then you don't have to, it can be new, afresh. Immediately as CSR becomes applicable, we say we register trust and we are going to implement through us. So that doesn't require experience. But here, if it's any Section 8 company, etc., it should have a track record of minimum 3 years in taking up such activities. So in fact, Bala was asking me that can a CFO be an implementing agency? Not implementing agency in the strict sense of it. He was talking about, we are coming to that impact assessment. When we come to that point, I'll discuss. An implementation agency who intends to undertake CSR activities shall register itself with NCA. It's a very simple process. CSR 1 applauding a very, very simple process. Not many questions, not much. They are enabling it. And a unique ID number will be generated automatically. And you can take it. It's a single sheet registration. Those who have seen the single sheet registration certificate. The board shall ensure that the funds are used for intended purposes and CFO should certify. The board has a continuing responsibility of monitoring the utilization of CSR funds. And where there's a CFO, the rule says that, Rule 4 says that it shall be certified by the CFO for internal purposes. Now, when we attend board meetings, that compliance certificate given by the CFO, probably this could be included in there, or as in a separate item, this can be added there. Ongoing projects must be very strictly and closely monitored. Ongoing projects, that is because you start a project, it completely gets in 1 year, the density of the project is high, there's close supervision. But particularly when you are engaging implementing agencies, it goes beyond 1 year, over a period of time, the charge gets lost or the punch gets lost. So that will continuously monitored. So end of the day, it should really, the end user should be really the needy, the beneficiary should reach out to. It also talks about, Rule 5.2 also talks about annual action plan, which is a responsibility on the CSR committee. It should AAP, it's AAP annual action plan, not Aam Aadmi Party. List of CSR projects, manner of execution, fund utilization, implementation schedules, monitoring and reporting systems, details of impact assessment is if applicable. We will come to impact assessment right now. So this is a project of, now what happens is if you are organized corporate listed company with the secretarial department and all that, there is an inbuilt system, an ongoing in-house system. Otherwise, when you are coming under this obligation, you should have a team. CSR committee should have a team, maybe a chartered account, a company secretary and all that. But people are today increasingly stingy on spending on regulatory compliance and financial reporting. People still ask me, can you get a good accountant for 20,000 rupees? I say the answer is if you pay peanuts, you will get, what. And that's the thinking of even large corporates. In fact, that's what I was trying to say. One vertical which I have recently developed is called Corporate Doctor. I was writing an article in a column in a Malayalam fortnightly. So which is based on this new vertical called, this is actually a system study. It's primarily an analysis of, it's not an year-end audit, it's not an internal audit. Primary analysis of, I would say that, people and processes. And today process is largely technology. So we have an IT partner, not officially. We are essentially looking forward to the time when the regulatory clearance will come for the MDPs, multidisciplinary partnerships, where we could add MBAs, we could add IT guys, techies on board. Now it is outsourced. So this is a vertical which is very lucrative. If we can establish that, if there are savings, cost savings possible, compliances are improved, and this is a complete dissection. So we did a presentation and I said, It was for a hospital, a major hospital in North Kerala. And after the presentation, I said, this is just a diagnosis. And the prescriptions will follow. And mind you, prescriptions will surely have bitter pills. What I was meant was to sack the CEO. Chief Operating Officer was a nephew of the Managing Director of the hospital or Medical Director of the hospital. And we found him to be so ineffective and diluting the systems and all that. So this is a term which we borrowed and used from being a corporate doctor. Prescription first is a diagnosis. That's a PPT, which is about 20 slides, and then then comes the prescriptions about the bitter pills. Very, very interesting. Routine audits have become routine. 33 years into practice, so every year doing the same thing. It's bugging. So this is some life in this, coming out with some good findings, or it's like doing a project report or a feasibility report or a business values. That also, once you start customizing, it becomes routine. Those who do business valuations, if you have the right inputs, how long does it take to do a 10-year financial projection? The system does it in less than half an hour. So it's not challenging anymore. So this is something which is newer areas we should find to keep going. So the list of this we have completed. List impact assessment. We'll come to impact assessment. Still have a lot of time. Ramaswami could have continued for some more time on CARO. The CSR outlay can be for creation and acquisition of capital assets. Look at that's very important. Which shall be held by any public authority, approved implementation agencies and beneficiaries. Often this question comes up when in part of KMA activities. Again, since we are in MMA, please allow me to have some repetition. We had to renovate the entire building. And the conference halls and all that. We did a substantial renovation of about 3 crores. The building was lifted by 2 meters. And complete renovation was done. So the question came up, what is KMA doing? KMA's corporate activities or corporate meetings are of an educational nature. And then came the question whether capital assets should be only for revenue expenditure. The answer is clear, capital assets, but it cannot be held by the company. Your capex on CSR cannot be within your ownership or your premises. It has to be either with the beneficiaries, the governmental agencies, or the approved implementation agencies. Administration expenses for CSR shall not exceed 5% of the total CSR outlay. So if your obligation is on 10 crores for again 10 crores, then the general admin expense for that should not exceed 50 lakhs. That's a prohibition brought under Rule 7 or a ceiling brought under Rule 7. Now this is impact assessment. Every company with CSR obligation of 10 crores or more in 3 immediately preceding financial years, so they can wait for 3 years, shall undertake an impact assessment of projects having outlays of 1 crore or more. So collectively 10 crores over a period of 3 years, and then they should take an impact assessment of projects which are with outlay of 1 crore or more, completed not less than 1 year before the starting of the study. Not very old ones. So the 3rd year, ideally in the 3rd year, projects of 1 crore or more which has been undertaken has to be subjected to an impact study. How an impact study has to be done, what is the terms of reference for impact study has not been mentioned in there. That is where companies would apply their common sense or lack of it and engage good agencies in impact study. Beneficiaries, how benefit it is. Sometimes again for social service projects, when you do a project and then you give a vehicle, for example, for a hospital or for a institution which supports differently able. Say that after some time it's not repaired and it is just lying idle. Such things can happen. There's no detailed explanation or narration, neither in the rules nor where it is mentioned. So that is where Balu was asking this question. Can chartered accountants take up impact study? My first response was, we are not fully geared for that because the social impact and all those things have to be studied. But then if we can have on board some experts who have experience in this, why not? We are not prohibited from there. But again, I said not for an audit client because 144 would be triggered. Can we move on? Expense shall not. Now this is an amendment which has happened. The expenses shall not exceed 2% of the total CSR outlay of that financial year or 50 lakhs, whichever is higher. Earlier it was slightly different. We come to that when we come to the specific amendments. So the impact study expenditure. The expenditure on impact study shall not exceed, that is now 2%. Earlier it was 5% or 20 lakhs, whichever is less. Now this is the limit which has been mentioned. Now coming to accounting. What is accounting treatment? Institute, let me tell you, the institute always comes out with a lot of useful literature on whenever there is an amendment. It's really striking. Having worked in the ASB, having been in the regional council and also been in some other committees, a lot of homework going into that, and there are experts who would sit through and work on it and bring out good results and good reference points as far as our work is concerned. It's a statement on CARO. Now all this RAMASWAMI is probably taken from the statement on CARO and other literature available. They come out very detailed disclosures. Implementation guide on now this audit trail when came. Members are in the dark. Initially we are all groping in the dark how to go about. Am I doing it right? Is he doing it the same way? So uniformity and with proactive measures are being taken by the institute. I think it is very laudable that they are doing it. Now coming to accounting for expenditure. So you have 10 crores in this year. So you incurred the entire 10 crores you have expended. Expense it. It goes into the P&L. And of the 10 crores, there's something unspent which has to be carried for, which has to be spent. What is in the case of ongoing projects only. Ongoing projects, what is unspent has to be provided for. Then carry forward of the excess. If spend, your obligation is only 10 crores, but you identified a project where the minimum outlay was 12 crores. And this 2 crores you intend to carry forward. That's where I said it should be supported by a board resolution. And if the board resolves that it is to be carried forward in the next year, that becomes a current asset and it becomes carried forward. It can be carried forward. This is accounting treatment. So there's a technical guide on this. What is the other bullet point? Yeah. Now CSR expenses are not tax deductible. That's information, but it's not tax deductible. It's not falling into Section 37 or so. And but then if you are donating to eligible organizations which are ATG recognized, many of the assessees are not assessees. Many of the chartered accountants are advising assessees to claim ATG. Allowed, that's what I was told. I'm not actively into tax practice, so we have tax experts. Mahesh is sitting here, Veeramani sir and all that. We have regular discussions on this. AGN price. So they say it's being allowed. ATG, irrespective of whether it is CSR or not there, the Act is clear that if you are making a donation to an ATG eligible, that 50% reduction has to come to you. That I don't know whether some point of time amendment has come, but till such time we can explore ATG deduction, which if substantial, why forgo that? It is something which. And what I told you earlier, why I moved from tax practice after adding partners and identifying one as reasonable expertise in tax practice. We don't have major high stake tax cases. So maybe more than 10 years back, completely moved out from tax practice. It's because verticalization is the key as we go forward. Gone are the days where everyone is doing everything. Jack of all trades and master of none. You have to be a master of at least one. So specialization will happen unless you finally have to decide that I'm going to do this and this only. If you go to larger firms, you go to a good recognized law firm like Trilegal or something like cabin 1 is corporate law, cabin 2 is indirect taxes, cabin 3 is direct taxes. Also in a firm in Bangalore, they have 3 floors, relatively large firm. And 3 floors, ground floor is audit team, first floor is tax, direct and indirect tax, and third floor is internal audit. To that extent, there's a compartmentalization. Of course, there's a lift connecting. Stairs too. It makes huge sense. How can we advise the client on? Earlier days, we used to have boss in the morning, he goes to income tax, afternoon, he goes to sales tax in those days. Yeah? And then evening, he has a discussion for company law, company incorporation. And time permits, there is late into the night, there is an audit finalization. This has to change. I practiced it and approved it with some success. That's why I'm saying this. Okay, so this is very important that so tax aspect also should be kept in mind. This is the amendment rules. This is what actually, this is next 4 slides only I've been asked to speak on. But then I thought 2 hours, how do I engage you, keep you engaged? And that did some research. So every opportunity when CSR is not a routine thing. CARO we can revise, and I'm not saying that's less most important. I also do presentation on CARO. CARO is just a rewind, but when I have to come to Chennai to interact with the intelligence of Chennai on CSR, I spend some good time on learning and revisiting the whole profession. So that is good. Sometimes out of compulsion you learn. That's why I always say that teaching is learning. And take up an assignment because you won't do this. When the topics were given, when chairperson called me and topics were given, I said I go for CSR, though I could probably jump on to CARO or other areas which are more familiar. Taking small challenges that way. A company having an amount. Now, in the first slide, we saw that a CSR committee is required only if the outlay is 50 lakhs or more. But if you have an outspent amount, then irrespective of the amount which you have to spend, the quantum of spending, then you have to have an unspent amount, then you have to have a CSR committee. Corporate law committee is here because that's where it's coming. So unspent corporate law is CSR account, then you have to have a committee, which should ensure compliance with the provisions of 135(2)(6). So the impact of the assessment. So the topic given to me is that it's implication, rather impact. So the impact is that it has thus become mandatory for a company to constitute CSR committee and to comply with subsections 2 to 6 of 135 to ensure that the company complies with CSR initiatives with respect to the unspent amount. I should have added one more thing there. Irrespective of the amount required to be spent, even if it is 30 lakhs, that is how it looks like. That is the impact of the assessment. That is amendment 1. That is CSR policy amendment rules. CSR, the clause 3(2) has been deleted. Before deletion, it was every company which ceases to be a company covered under subsection 1 of 135 of the Act for 3 consecutive financial years shall not be required to have a CSR committee and comply with the provisions of 135(2) to 6 till such time it meets the criteria specified in subsection 1 of 135. There are 2 possible interpretations. I think the tax club or something I just referred, there's a different interpretation we'll see. But my interpretation is that, now what happened was, you are hit, or rather, CSR has become applicable for you. Year 1, year 2. Year 3, no. Year 4, no. Year 5, no. So all these 3 years you have to wait to get out of the applicable provisions of 135. 3 years of non-applicability had to be there, or if borrow a term from bank audit, 3 years of cooling. Incidentally, somebody said, bank audit is there? No, bank audit is not there. How many years? 6 years, cooling. No, frozen. 3 years is cooling. After that, it gets frozen. Slowly started coming back, bank audits. Anyway, so here 3 years of cooling is required. So the interpretation, my interpretation is what I've given here. With this deletion, a company doesn't have to wait for 3 years to go out of the applicability of 135. That's my interpretation. It's debatable. It's debatable. But I think I have something here which I have hidden. The other interpretation which they had given, or it becomes mandatory for a company to comply with the provisions of 135 forever once applicable. That cannot be the intention of law. That's what the tax club interpretation was. I will erase it right now. Let that thinking not settle into this thing. I was just sharing a possible interpretation. But we have always go for a constructive interpretation, which should be the spirit of the law. We try to align ourselves with the spirit of the law. Sometimes we surpass as well. That is why we have so many amendments under RBI Act. So I'm taking that out now. Is that confused? Is that clear now? So the 3 years waiting, so a company once CSR had become applicable, and then even if it slips from the requirement of CSR, you have to wait for 3 years to go out of that and spending. That's what I said. Until for 3 consecutive years shall not be required to. My interpretation is that you don't have to wait with the deletion of this particular rule. You have to strictly go to section 135(1) and say that if your net worth, turnover or profit exceeds the limits, then it will be applicable. So if it's not there in the immediately preceding financial year, not applicable. That's my interpretation. Debatable, but don't quote me. Why we are not? I'm not accepting that. I'm not saying that's accept. That is why. Anyone agreeing that it is debatable or completely going for this clause? So I should not have shown that, is it? It's okay. See, law, the interpretation of law is a completely different. If you give it an advocate, he will come with another two interpretations. I'm not straying from the point. See, when the rule is deleted, this can be. I still hold a view that it can still be interpreted that way. That it is that you have to wait for 3 years earlier, they said, and 3 consecutive financial years shall not be recovered to. Then when this is deleted, you say that yes. Once a CSR, always a possible interpretation, still arguable, but that is my thinking. That's why I showed it. Tax Club has given, I think it's a fairly renowned author who has taken that interpretation. Again, so that's not beneficial for the corporates because that is not the intention also. I am fully with this. That's why I have given first preference to this and given it as a possible interpretation. Can we close with that? With your permission? Yes. Yeah, this is again, we have already discussed that the list of eligible IAS implementation agencies have been enhanced, registered exempted under some clauses of 1023C of the IT Act included in clause A as well as D. A and D is that 3 years experience and 3 years experience and one owned by the company which doesn't require any experience, set up by the company, central government, state government. That first part is clause A. The second part which I show, I think we can go back to that slide. Yeah. 1 second. Yeah. It will bounce back. It will bite. That's the right term you use. It will bite the company. The company has to monitor, identify good agency. If it's an ongoing project, it is okay. You still have. Yes. Absolutely. I know. I have a similar case. After you complete, I'll tell you. I have a very similar case. Please explain to me. I'll put the answer this way. The Companies Act doesn't provide for governmental inefficiency. I hope the answer is clear. I am personally experiencing this. We have a, please sit down, sir. Question is very clear. I'm in charge of the treasurer and trustee of our Rotary's service trust, Rotary Cochin Central Service Trust. We are doing a few toilet projects in the city of Cochin. One in the most busiest junction in Cochin, Whitela Junction is called. So sir is from Kerala, sir knows. So there we are supported by BPCL, and now what's happening is typically not the government, the corporation is not giving us a water and electricity of course KSCB, but it is through the mayor's office that it is being coordinated. Land was allotted through the order of the mayor or the corporation of Cochin, Municipal Corporation of Cochin. Now we're experiencing this. If that gets delayed, if it's an ongoing project, you still have some more time to complete it. But then if amount unspent, all those things have to happen. But if it's other than ongoing project, before 31st March, if it is not done, you are finished. It will bite back what is the excuse given? There's no leniency according to me. It will bite the corporate. NGO is also helpless. With all good intentions. I am the NGO there. I am not the corporate. I am the NGO. I am going before the mayor and asking them for this to happen. Otherwise, the installation will start resting, and like many projects, it will get starting resting. We have done it so very well. We have another organization called BKR, the Better Cochin Response Group, and we have wrote all these funds. It's being monitored now. It's all installed, including the vertical garden for all the things is installed. Now, with this connection, it can be commissioned. But the answer, I hope I have answered the question, but there's no leniency. No, but then what happens is, since there's no validation, if that leniency is given, there will be more of misuse than genuine cases will get affected. That every enactment, every section, if you look at it, I am very genuine, but then there's no differentiation between the unscrupulous players who would purposely delay it and the governmental delay. PWD is a huge problem, and you need a lot of greasing. Yes, this is a clause which I am talking about, both A and D, and this is where the expense of impact assessment shall not exceed 2% of total CSR or 50 lakhs, whichever is high. Earlier it was 5% of 50 lakhs, whichever is less. Now it is about Annexure 2 to CSR 2. I hope you know that before 2020 it was Annexure 1 to CSR 2. Now it is Annexure 2. Annexure 2 has undergone major changes in this amendment. I have a few highlights. Composition of the CSR committee, the details have to be given. Name of the director, designation, nature of directorship. Number of meetings of CSR committee held during the year. Number of meetings CSR committee attended during the year. Director has to attend. Some of you would remember Manoharan sir's election brochure used to be after first event to the Central Council. And he said that he used to give the attendance sheet. It was 100% in all the council meetings. So I distinctly remember. So one has to attend all the meetings. Provide web link where the composition of the CSR committee, CSR policy, CSR projects approved by the board are disclosed on the website of the company if it is there. Provide the executive summary along with the web links of impact assessment. We have just discussed that of CSR projects carried out in pursuance of sub-rule 3 of rule 8. Average net profit of the company as per subsection 5 of 135. This also we had first time when it became applicable for a client of ours, we gave a note. We give a note and then we told them that this would be applicable. We have to do the calculations and, that again being a corporate audit, this thing we cannot officially, within brackets, we cannot bill it as CSR advisory. So that gets lauded. It cannot be given free also. We give free advice. We give advice before as the client asks. And we don't quote for the advice. Free advice will not be given. So legal advice, if you go to any medical legal, nothing gets, we are the people who give maximum free service. In fact, there's a slide called Let us empower, let us change in most of my presentations. The last but one slide. Last slide is a thank you slide, which soon will come soon, don't worry. So with that, I always say that we give undue credit also. Ours is the only industry which gives 12 months credit. Somebody said, sir is a very strict auditor, meaning he will not do this year's audit unless last year's fees is paid. I'm not making fun of it, but then this is a situation. In our bill, I don't know whether I can show this, maybe some slide is there. In our bill, we say that all our bills are immediately payable. And what's the point in running around collecting all this money? One-time assignments, why should we give credit for a company and corporation? A partnership deed. Partnership deed, sometimes somebody would call, JOMON, maybe a close friend also, existing line, JOMON, we want to form a partnership form immediately. So please arrange to buy 5,000 rupees stamp paper, that's in Kerala, it's 5,000. I'll come in half an hour. We never do that. Because in between, if he calls his wife, I'm married, that's why I'm saying this, he would say that no more new businesses, then 5,000 stamp paper will be lying in our house. Forget the fees. Jokes apart, this happens, sir. So the client changes his mood and we cannot swing to that. So this charge and all that one-time project reports, feasibility report, evaluations, don't give credit. No client is going to go away from you. If you give quality service, timely service, keep them engaged, keep them happy. You have to really express. I keep them, nobody will run away. And enhance the fees also. Smaller towns is difficult, but Chennai is still poor. Bangalore is much better. Bangalore people say that Bangalore is much more billable. Bangalore is much more expensive also. Okay, jokes apart. These are things which we should be aware and awake to and keep changing, transform. So back here, total this is all formula they have given. Surplus arising out of CSR projects. And RAMASWAMI was asking that. No, I think Mahesh was asking that. Or projects, previous financial years, surpluses arising out of that. If you have done something and it is earning some income, for example, there is a sharing arrangement, they're earning some income from educational institution or a medical service, that should also be added to your CSR bill. This is again a detailed one. 6, amount spent on CSR projects, ongoing, other than ongoing projects. Amount spent administrative expenses, because the amount to make sure that the ceiling of 2% is not exceeded. Amount spent on impact assessment. Total amount spent for the financial A plus B plus C. And CSR amount spent or unspent for the financial year. Here there's no change. Highlight. Excess amount spent for set off, if any. Yes, that is something which is 2% total amount spent for the financial year. Excess amount spent, that is 2 minus 1. You can see 2 minus 1, not 1 minus 2. Surplus arising out of CSR projects and amount available for set off in the succeeding financial years. Details of unspent corporate social responsibility amount for the preceding 3 financial years. That is for the purpose of monitoring it, and if it is spent for more, not more spent, unspent amount is not more than spent for more than 3 years, what's the consequence? Let me put you through an exam, a test. Brilliant. The prize goes to Suresh. Okay, good. Thank you, Suresh. The amount goes to, if you're not spent for 3 years, it goes to a Schedule 7 recognized fund. It's not coming back. It is not our property anymore. Specify the reasons if the company has failed to spend 2% of the average net profits as per section 5 of 135. We'll conclude now. These are the aspects which I thought are very, very relevant for a discussion on CSR. A section which started as a friendly section. A very, very good section, I would say, that corporates spending 2%. Some compulsion is required, mandatory, but the section could have been less harsher and less punitive. But as things have come, we have to ensure that clients comply with the provisions of the section. As advisors, we have to make sure that this is being done. And we also look forward to, I think, CLCGC last year, Sri Priya was there. This year, Babu Brahman is there. So we'll push our case to get CSR audit for chartered accountants, a new opportunity. And but one more thing is that it's not just for an opportunity. That validation is quite required. As responsible individuals, as responsible citizens, I think there are validations required to make sure that the end use is proper. Misuse should not happen, because as a corporate's profits, we say that profits are automatic. No. Profits are hard earned. Any profit, any gain is hard earned. So when that is utilized for this kind of a mandatorily required social cause, then the validation is very, very important. So thank you so much for being, as Usha Udup always says, for a wonderful audience. Yes, Bala. Apprentice. It cannot be for companies' own employees, it is not allowed. There's a prohibition. Apprentice. I don't know whether it is for that Prime Minister's scheme, maybe for that. I'm not too sure. I've not got sight of that. That is not apprentice. What is that called? Prime Minister's Modi scheme? Beam scheme. That it's like an apprentice. Yeah, that should normally be eligible. Maybe it is an add-on in Schedule 7. No. It should be a public scheme. I think ideally this may be for that particular, I don't know the full name of the scheme. Company's employees, any welfare scheme exclusively for the company's employees is not eligible. Apprentice also would come as, as in your, of course, not strictly on your role, part of the organization. That becomes purely in-house. So that's not the spirit. Schedule 7 gives a detailed list, sir. Beyond that is again a matter of interpretation, something which is incidental or which can be related to this kind of an activity. I don't think it's a completely watertight closed compartment as far as Schedule 7 is concerned. Similar activities would also be considered for. So that is what I feel. So that leniency, flexibility should be there. Leeway has to be there. Yeah. Corporate. Naturally, yes. But you identify a good NGO, well-meaning NGO, there are so many of them doing social cause. So you can identify in a corporate, I would say that a corporate, if identifies one, can help them in getting it registered by referring to the corporate chartered accountant himself, all those things. These three organizations where I was active there, we got it done in one single day. It's not difficult at all. Oh, I forgot one more thing. There is a notes on account Schedule 2. Schedule 2, there is a disclosure given. After accounting, I forgot to add that slide. Expenditure on corporate social responsibility. Gross amount required to be spent by the company during the year. Amount spent during the year. Construction, acquisition of any asset in cash, yet to be paid in cash. On purpose other than one above, that is in cash or yet to be, that is capital, capex or other donations. Unspent amount in respect of ongoing projects. Excess at the end of financial year. And also on the nature of CSR activities. In this particular case, the company has transferred its CSR obligation to Arike Daycare Nurses, a program of the Indian Medical Association. The amount is used by them to provide palliative care, systems development and outreach programs aimed at enhancing the quality of life of patients and their families. This is the disclosure this is a disclosure, mandatory disclosure which is required in Schedule 2. Schedule 2, what we are doing is in the notes on accounts, we just say that the provisions of 135 is either not applicable to the company or we're just saying that complied with the provision of 135. That's not enough. In a tabular form, this much details have to be given. So thank you so much, being a wonderful audience. Lot of questions. See, questions keep the speaker going. Stay and feels think that the topic is relevant. The topic is being listened to. Thank you so much for staying back for all the time. And so happy to come to Chennai. Thank once again Revati Raghunathan for inviting me. And SIRC is part of DNA now. So I checked into Ranjit Hotel. Immediately as you check in, you slide the curtains to see SIRC right in front of you. And the boy who came to put my suitcase, I told him that I was chairman here, just showing off. So it was a pleasant experience. Let us hope to meet again, and any professional interaction is most welcome. Anything, because it is through interfirm consulting and things that we learn. I can quickly probably leave my mail ID. No electoral intentions. Easy to remember, CA JOMON K George at gmail.com. Feel free to communicate on any professional matter which is of relevance. Irrespective of the geographies we are in, we are gladly, happily connected. So a great time, have a good lunch, stay back for the afternoon sessions. RAMANA has come. RAMANA is a good friend of mine. RAMANA Kumar is a seer turned advocate, and SHANKAR also heard him on a couple of, he's a tech person. Audit new topic. And NCLT again, I was urging young members that IPS, very good area of practice. Very good. Resolution professionals. CA JOMON K George at gmail.com. So, thank you once again.
Sir, we extend our heartfelt thanks to CA JOMON K. George for an insightful and thought-provoking session. Okay, sir. Thank you, sir. So lunch is served outside. We will reconvene at 2 p.m. Sir, opportunities in NCLT and NCLAT by our distinguished speaker, CA and Advocate RAMANA sir. Sir, I request you to occupy the desk, sir. And I also request CAR Guha sir to welcome and to deliver welcome address to the speaker.
Good afternoon, everyone. Welcome back to the post-lunch session. And I have been given the pleasant as well as a tough task of introducing someone like Mr. Raman Kumar. Let me first attempt an executive summary of that. Mr. Ramana is a multifaceted personality, a teacher, a speaker, a writer, a TV panelist, chartered accountant, advocate, and above all, an award-winning photographer and a social worker. So this is the executive summary of that. Let me just elaborate some of these at least a little bit. He has been in the field for over 3 decades, and he was earlier practicing as a chartered accountant with experience in both international and domestic taxation and in tax and regulatory services. Apart from advisory, he also defends his clients. He regularly appears before the income tax authorities, the SESTAT, SEBI, NCLT, and NCLAT, which is the subject matter of today's discussion. Let me now, I've been given a list of, say, a CV of nearly 4 pages here, okay. But let me not stand between the audience and Mr. Raman Kumar. Let me invite him to the podium, and I am very keen to hear his thoughts, and welcome, Mr.
I also request CAR Guha sir to deliver the memento to the speaker as a token of respect. Thank you, sir.
Good afternoon, friends. Most difficult period is the speaker immediately after lunch, and that too a sumptuous lunch with vanilla ice cream and gajar ka halwa. I'll try to make it, slightly frightening so that we don't sleep, or at least I don't sleep. It's always a pleasure to be amongst chartered accountants whom I consider as my first home and first brothers. And a lot of very good friends are there. My brother JOMON, I know him from the day he was a chartered accountant. Then he graduated to be a speaker. He was an expert speaker in accounting standards. Then he became a council member, a chairman. But always we were enjoying the same warm friendship as always, whether in Chennai or in Delhi or in Ernakulam, wherever we go. And of course, my good friend Ramchandran, my colleague and Deepak. There are many people, there are many known faces, and a few faces have during lunch also informed me that, sir, I'll be taking leave. They have suffered me earlier, so they thought they will escape, and they have escaped. Be it as it may, it's always a pleasure to come before the institute and before the chartered accountants. In fact, I remember the day in November 2017 where the IBC was introduced, and the then council member Sri Priya Kumar, who is also a council member now, she asked me to make a presentation on IBC new law. I thought about like our CP credit meetings. 200 people will enroll, 150 people will pay the fee, 100 people will eat the bonda coffee, and inside the hall there will be 15 people. I thought it will be like that, and I prepared and went. But to my pleasant surprise, the Brahmaya hall was full.
I'm forgetting my very good friend Ramakrishnan. I'm sorry I didn't mention your name. There are many others. Na sonna sollinde pono allari otra. That's my association with the institute. So that day the Brahmaya hall was full. So much so that, there were people who could not find seats on the hall. Definitely not because of the speaker, it was because of the subject. That time IBC was introduced and everything, it was a new kid on the block. The Prime Minister made some comments, the Finance Minister made comments, the institute, started to enroll. There was a temporary enrollment of chartered accountants into IBC without even passing the exam for 6 months. There was a clamor for this thing. They say that it's a big gold mine. More than bank audits we can do. All those things started to come and there was a huge cry. From that time, I was introduced to IBC on that day. Slowly we started. NCLT was formed. NCLT was formed. It had its own hiccups. Even now NCLT and NCLAT has its own hiccups and problems. But be it as it may, wherever there are problems, there has to be a chartered accountant to solve it. I firmly believe that if there are no problems, no assessee will come to us. There has to be some problem somewhere for us to intervene and solve it, and in the process make money. Name, fame, whatever it is. So, with this small background, we will go into NCLT, NCLAT. The first remark I would make is I want more chartered accountants to appear for NCLT and NCLAT. I have company secretaries appearing, I have advocates appearing, I have cost accountants appearing, I have retired bankers appearing. But as Mr. Gurumurthy said more than 20 years back to a group of chartered accountants whom he met and whom he inspired, the Indian chartered accountant is the only person outside the Anglo-Saxon world with the knowledge of law, accounting and English. Only person outside the Anglo-Saxon world. And you know how the Anglo-Saxon world is now presently. And he have a great role to play. Namballara Anjaneyar Mari. You don't know our strength at all. Practice. We need people like you in NCLT, NCLAT. I am able to see if there is a lawyer, he is unable to speak on the balance sheet. If it is a company secretary, he is not able to speak more than the company law or more than the issue. If there is a cost accountant, he is unable to put all the gamuts across. Only a chartered accountant can speak from an accounting angle, from a business angle, from a legal angle, and make a presentation. So please make an endeavor. It's extremely easy. Any help you want, I'm a phone call away. It's not that I'm an expert on all. Yesterday, Arvind Pandian lives in NCLAT, he eats in NCLAT, he sleeps in NCLAT. I'm not like that. I can do all the help you want. Thank you, JOMON. Right. All the best. Thanks a lot. So I want more chartered accountants to be, and if you are IPs, how many of us are IPs here? I am an IP. No insolvency professionals? Okay. I think all the IPs have left. In fact, I saw the madam and all leave. Okay. So if you are an IP, even more it's an advantage. As a chartered accountant, what money I made in 10 years of my practice, I made it in 3 years as an IP. At the same time, my blood pressure shot up, my sugar levels increased, my hair started to fall. All those things will happen. But the charm is always there. Even now the charm is there. Please make a very sincere attempt, at least to represent your clients in the NCLT, NCLAT. There are huge opportunities which are untapped. When I cleared my CA in 1994, we had indirect tax only for 15 marks. So I never went into indirect taxes at all. Either sales tax, customs, excise. I didn't go into that at all. Only with income tax. There were a few of chartered accountants who went into indirect tax, and now if you just recollect the names, the old names, they're all colossus, giants of the profession. Similarly, IBC is one thing which can make you a giant in the profession. Please consider it. I'm sorry, not IBC. Appearances in NCLT, NCLAT. I have to be with the topic of the day. So NCLT and NCLT is almost a repeat of the ITAT which we have. ITAT, you have lot of problems, lot of case laws you have to see. The other side is equally learned, if not more than you. So ITAT is a different ballgame. NCLT, NCLAT, any chartered accountant can do. He can play with left hand. You can play the match with your wrong hand. Absolutely no problem. And everything set procedures. All you need to know is the procedures. A few cases you appear, you will become an expert to appear before NCLT and NCLAT. Both I'm using because NCLAT is the next version, but everything remains the same. There are 16 benches in India. In Chennai, we have one bench, is opposite the beach station. Wherever you have a train facility, all you have to get down at the beach station, walk across the subway, you will come to NCLT. That old UTI office, no? Remember UTI office? That UTI office is now the NCLT. In the 4th floor, you have 2 benches. And like any tribunal, one officer is the technical member, the other officer is the judicial member for all practical purposes. NCLAT is the next forum. For ITAT, SESTAT, for GST appellate tribunal and all, we have the next appeal forum is High Court. Here, because of the sheer volume, it was envisaged that High Court would not be able to manage, or the issues would not come to a conclusion, fair conclusion, time-bound conclusion. Time-bound conclusion is the essence of IBC. Whether it is achieved or not is $1 million question, but time is the essence in IBC. So they have constituted the appellate tribunal. Appellate tribunal was only in New Delhi. We used to travel every time to Delhi to attend a matter and come. But fortunately for the clients and unfortunately for the practitioners, it came to Chennai also. So in Chennai, it is opposite the beach. It is in that Yelagam building, 7th floor. So there you have the NCLAT or the National Company Law Appellate Tribunal, which has been instituted. And appellate tribunal hears all the matters emanating from the NCLT. So what are the matters which go into NCLT is all liquidation, erstwhile liquidations where the official liquidator was involved. All those matters have been transferred to NCLT. Wherever there are complex issues or where the assessees did not want it to be transferred to the NCLT, it went to the high courts, respective high courts, or everything is there. So what is the jurisdiction of NCLT, Chennai NCLT complete Tamil Nadu. Earlier, before the constitution of the Kochi bench, it used to be Kerala and Tamil Nadu. All the matters of Kerala and Tamil Nadu was only had to be heard and disposed of in the Chennai. With respect to NCLAT, the jurisdiction is much bigger. Tamil Nadu, Kerala, Karnataka, Andhra, Telangana. The complete south comes under the NCLAT, Chennai, and that's a very fertile area of practice, NCLAT. NCLAT is slightly more complex, and the opportunities are enormous. We have friends across the south, and with the networking opportunities available for all of us, there has to be some. If you can just start an NCLAT practice, you can easily get clients from across the state. It's not that I'm canvassing for any one of you to be practicing. I'm really canvassing for all of you to practice, not any one of you. It is such a fertile. If you come into practice, you will be my direct competitor. In spite of that, I am inviting you. There is so much to take. And from the quality of arguments which I have been observing over the last 5-6 years, every day I lament myself why these chartered accountant fellows are not coming into NCLT, NCLAT. Of course, I am also a chartered accountant by heart, but I happen to be a advocate by profession now. So I cannot consider really myself as a pure chartered accountant like you all. The NCLAT is a very, very, very fertile thing. You will have friends across South at least, if not across India. Across South, you can request them to, refer. In every CRP process, there is a chartered accountant involved. How many of you have seen at least some CRP process of your clients? A few of you would have seen. There would be some IBC related problems with any of your clients. You have to get involved yourself. You have to help identify the clients where he can file a case for recovery of the money. All those things are very fertile practices, which I will speak on another occasion. So just like, for GST and ITAT, you have the appellate tribunal. After the appellate tribunal, you have after the appellate tribunal, you have straight the High Court. Whereas in GST, whereas in NCLT, you have NCLT, NCLAT, and straight up is the Supreme Court. Everything has to happen within a period of 180 days. So matters from NCLT to NCLAT have to be filed within 45 days. Nowadays, this thing are very strict with respect to the delay. Because as you know, in IBC, time is the essence. So to that extent, after NCLT, NCLAT, and after that you have only Supreme Court as the two appellate forums after that. Now we'll go, any clarifications up till now? For me to ensure that all of us are awake. In fact, the light is also dimmed. So I used to be an expert in sleeping with opening my eyes, especially in conferences and all. Vishwa used to be expert. So just want to be aware that, any clarification, jokes apart, you can just stop me at any point in time and clarify yourself. After all, this is only a knowledge sharing session and I'm willing to share all the sessions, all that I know or experienced. Yes. Timelines to, when you apply to NCLT, within 14 days, the adjudication has to happen. After the adjudication, the CARP is 180 days. It can be extended up to 270 days. If there are some cases against you, you have filed some cases which is dragging, it can go up to 330 days. Don't note down. All this is only on paper. In reality, it doesn't happen. August 23, I filed one liquidation application in NCLT Bangalore. It was ordered only last week. Yeah. Sir? Yes. No. You don't have to appear. You don't have to write the IBC exam to appear before NCLT, NCLAT. All you need is the court. The court you have obtained in any of the regional conferences. If this regional conference, if you attend, in all probability, she will give you a court also. You wear that and come. Absolutely no problem. And for chartered accountants, no collar is required. You have to wear a tie. That is all. Sorry? Black. During Corona, I used to wear vesti and coat and appear before. Because only up to the chest it will be seen in the VC. So, all that is possible, sir. So, just like ITAT, whatever rules are there for ITAT, the similar rules will follow for NCLT, NCLAT also with regard to appearances. I just wanted to make that very clear. So from an NCLT point of view, is there only IBC? No. And in the process, we can also start to slowly diversify our practice. Slowly, the Income Tax Act is becoming a compliance law. Isn't it not? You have to comply. There are a set of rules. If you don't follow the rules, you will have the repercussions and implications. There is no scope for tax planning, there is no scope for entries, all the traditional Registration is stuff which chartered accountants used to do. No, you cannot increase the turnover, reduce the purchase. No, you cannot reduce the turnover, increase the purchases, because your GST will come in 26 AS. Glaringly, it will come. So slowly, our practice is becoming into a compliance law. So whenever there is compliance, the money involved is low. It's my experience. So wherever there are issues, planning, wherever you are able to give a value addition, wherever you are able to solve a problem, wherever you are able to save a client from a potential threat, wherever a client who is in problem, you are able to, interfere and solve. The criminal lawyers will be very rich, because that fellow will be in jail, in lockup, and his family will come to the criminal lawyer. The criminal lawyer, whatever fee he asks, they will pay him. It's not that I'm trying to say criminal lawyers are fleecing. No, but whatever fees. Touch your heart and tell me you don't have any dues from your clients. I also have as an advocate, because I still carry the chartered accountant mentality. I don't take advance. I'm sorry to say, I'm also a chartered accountant. What we do, we will complete the work, and after that tell the client, sir, can I bill you 1.35 lakhs, sir? The client will say, no, 1 lakh. Okay, sir. Or we will negotiate. No, we fix our benchmark. But where client is in a deep trouble, he is slogging, he is ready to pay whatever you ask for. Isn't it not? So IBC, NCLT is classical example of that, where if you are smart enough, you can charge your actual fees and you can be happy. I don't expect any of us will fleece our clients and all. We will never fleece our clients, but at least we can charge the correct fee and be happy with it. So the existing practice which is available to any chartered accountant, operation mismanagement. I have done operation mismanagement issue as a chartered accountant. Wherever there is a company law matter, we even refuse to open the email. I know of a few chartered accountants, straightforward matter, operation mismanagement, he is referring it to me. Sir, neenga pannunga sir, onnume illa matter. Company law matter, naanga thodamatom sir office la. Principle. Enna principle idu? Client fees kodutha vaangika matengiradha principle. Please enter into the company law. Company law is only one small ambit of the whole canvas where we are playing. You are playing in income tax, audit, bank audit, so many issues you have. Company law is a small subset of the full practice we have. Mindset, open the mindset. Operation mismanagement, any chartered accountant can do equally, if not more than any advocate or a company secretary. I'm not trying to undermine any abilities of any other profession. Each profession is great in its own way. But what I'm trying to say is, we have chartered accountants have an opportunity to do. Please indulge, experiment. Rectification in the registers of members. Wherever you need to have the attestation of the company secretary, you can always engage a company secretary for that and take his attestation or sign or seal. But everything else we can do. The creation of charges we can do, removal of charges we can do. And for compounding of offences, one of the easiest way, we can go up to SEBI also, no problem. All we need to do is have our mind open. Other than income tax illama vera sila act India la irukku namba eduthukonu. For us income tax, I was also like that. I'm not trying to undermine any one of your abilities. I was also like that. I was thinking that be all and end all of a chartered accountant practice is income tax. I was proved wrong. By the time I was proved wrong, it was very late for me to do everything all over again. Repayment of deposit. RBI. How many of us are practicing in the RBI sector? RBI issues. Again, a huge opportunity in RBI. Opening your ears and minds, just have a small discussion with your clients. You will have hazard RBI issues. Wherever there is import, export, FIRC involved, foreign investment involved, ECB involved, there will be an RBI issue. RBI matters are actually handled by retired bankers. I don't believe there is anybody called a banker now. He's only a retired bank employee, because banker, you have to read the Merchant of Venice to know who banker is. Now all of us are only bank employees. The retired bank employees are ruling the roost in the RBI matters. It is available for us. Of course, it is out of syllabus, but even though I just want to make a mention. Mergers, demergers. All you have to do is first merger, you have to do a cut and paste. From a PDF, you have to convert it into a Word document. You have to change everything. All our interns will do far better job than us, and all the youngsters here will do a superlative job. Mergers, acquisitions, demergers are handled by advocates, are handled by company secretary, actively supported by chartered accountants. I don't understand why actively supported. Why can't chartered accountants do that? Client varmantingana sir. Unless you demonstrate your ability that you can do, the clients won't come to. Why should they come? Reduction of capital, huge opportunities. Now many companies want to reduce the capital, reduce the losses, and reinvent themselves. Like the eagle, no? Eagle, after 40 years, the bald-headed eagle will go up the mountain and it will pluck all its feathers out and it will break its beak and it will remain there for 5 months without eating and just taking rest. It will get a new set of beak, it will get new set of feathers, it will fly again. Again for 40 years it can live. So we have to reinvent ourselves. Reduction of capital is one such. Winding up. Again, for winding up, you have to go only to the company NCLT for winding up. Dissolution of a company, it has to go to the NCLT only. And in winding up, you have the issue, the capital gains for the shares of the sale. It will again come to a chartered accountant only. Chartered accountant is very happy giving that one report, and everything else is done by others. Class action suits may be slightly difficult for us to do, but slowly if you are into the business or into the practice, you will get a lot of things. Public into private. Conversion of partnership into the LLP itself, we are afraid to do. Number of chartered accountants have approached me to assist them to convert from partnership to LLP. Sir, நீங்களே பண்ணுங்க sir. You have to fill about 20-30 forms and you have to liaise with ROC and MCA. I am an income tax man. I will do only income tax. Even though the others are emerging opportunities, you will have to make some effort. You will have to study some company law. You will have to see some YouTube videos. You will have to attend some seminars. You will have to take the help of your article clerks and juniors. They may be your sons and daughters who have studied company law, because what company law which we had in our exams is not the company law which we have now. It is much more. And the company law 2013, all of us are still in company law 1956. To come to 13 itself, it took 10-12 years for me. It is not even 12 years now. So we still are in the old mindset. So we'll go into IBC a little bit, and we'll go into the other opportunities and what to do. Redefine ourselves. How can we reinvent ourselves? I always believe in unlearning and relearning. We have to unlearn company law 56 in order to relearn company law 13. So this unlearning and relearning has to happen on a continuous basis. That was the intention with which the CPE was formulated. But unfortunately, we are using CPE, including me, we are using CPE only for bank audit purpose, where you have to show that you have attended so many CPEs or whatever, for whatever reason, for the compulsion which we have to do the CPE. But attendance in CPE, my friends, is deplorable. Nowadays, I have stopped speaking in SARC for the same reason. Earlier, I used to speak for marketing myself. I will come, my photo will come in the SARC newsletter. All those things will be there. There will be free marketing. So I thought I will come and speak. Even if nobody is there, I will speak. Once when I spoke, there was nobody in the room. I myself switched on the lights. I myself closed the Birmaya hall and went, no joke, serious. All of you are involved in this. Nobody was there. Everybody went over. Rendu pair ukandirukanga. Yena சார் உங்களுக்கு மெமண்டோ தரணும்னு ஒருத்தர் உட்காந்துருக்காரு, இன்னொருத்தர் அவர் ஃப்ரெண்டு அவர் வந்து வண்டியில் ஆஷின்னு போகிறாருன்னு அவர் உட்காந்துருக்காரு. எவ்ரிபடி லெஃப்ட் சைலண்ட்லி, தே வில் ஸ்டாண்ட், தே ஜஸ்ட் லீவ். The speaker takes so much of efforts to study, revise, make the presentation. To make this one slide, it will take about 10 to 15 minutes. I mean, of course, I do only for myself. Nowadays, I don't require that marketing, so I'm not interested in coming and speaking in the SARC premises. Earlier, I used to speak so much. Vishwa knows when we were in KPMG, all the fellows in KPMG, I came to make presentations in SARC. Now, it is not that. That CP has to be used to the fullest potential. Only then it will have the desired effect of unlearning and relearning. I'm sorry if I'm trying to be rude, but I wanted to tell it somewhere. நீங்க தான் மாட்டினீங்க. Sorry. Okay, earlier we had a number of enactments. The SARFASI was there. After that, the BLRC was there. It all concentrated on the owner in control, the debtor in control, the promoter in control. It never concentrated on the issue where the person who has lent the money, lent the services, has some say or the other. So the banks will want the interest penalty, the principal, the interest, the penalty, additional interest, additional charges, insurance, everything. After the company, after the account has become MPA, they will notionally keep adding everything. They will want all the money to be paid in one shot. அவங்ககிட்ட இவ்வளோ பணம் இருந்தால் you would not gone into a sick situation at all. They will lock the factory and they will take the key. The key will be with the chief manager in one special locker. During the bank audit, when we do the safe examination, sir, all the property keys are here. That factory will rot. For 30 years it will rot. By the time the case comes in favor of the bank or in favor of the promoter, all the machinery either would have become scrap or would have become obsolete, not usable. Especially sugar factories. How many sugar factories in Tiruvannamalai range have gone like that? By the time you come and recover everything, you will recover only 1/10. ரூபாக்கு 10 பைசா 1 பைசா தான் வரும். So to break all that, the government thought we will give a time-bound approach. If you are unable to run the property, you give the property, you give the company to run to the creditors. The creditors will run the company. The creditors will sell the company. They will take their money. And if there is excess, we will give it to you. Otherwise, you go. 1 year you can't do anything. After that, you start any practice. But in our society, if you become an insolvent, nobody will even approach your house. They won't give you drinking water also. If you become insolvent, it is an slur in the society. And the பொண்ணு எடுக்க மாட்டாங்க, பொண்ணு கொடுக்க மாட்டாங்க. Trump however, thrice it went for insolvency. Today he is the president of the country. So now the old situation that if you become insolvent, everything is shame is no longer valid. இது ஒரு சைடு. இன்னொரு சைடு பார்த்தீங்கன்னா, India has got the largest amount of per capita entrepreneurs in the world. You, me are all entrepreneurs. We are all entrepreneurs from the intellect side, but other entrepreneurs, right from the flower seller in front of a temple to Abani, Andani, who have the Israeli ports and all. Everybody is an entrepreneur. You just see, in our family, it's in spite of any caste, community, creed, religion, India, you can find n number of entrepreneurs. There will be a lady sitting at home. She will call herself housewife. Her husband will say she is at home only. He will say, but in spite of that, she will be selling saris and making money. During summer, she will make urga, she will make the vattal, all those things, and she will make money. The entrepreneurial DNA is there in our blood. It cannot be changed. That is what I am trying to say. That entrepreneurial DNA, there will be some losses in business. All business will not be successful. So there has to be some insulation point somewhere. So in 2016, we have got what we got as the Insolvency Bankruptcy Code. Actually, it should have been extended to individuals also, individuals and partnerships also, due to whatever reason they are unable to, because the corporate insolvency itself is still, according to me, in an experiment stage. Every year there are 20-30 PhDs being done on IBC alone in order to evolve the code. And the number of amendments which are coming is enormous. It is slowly showing that the code is evolving. So the Banking Law Reforms Committee gave a report to the Lok Sabha stating that where the owners were controlling, once they are unable to make the payment, the creditors have to take into control. The Banking Law Reforms Committee 2015, the limited liability company is a contract between equity and debt, right? It's a contract. As long as the debt obligations are met, equity owners have the full control of the company. Where default takes place, control is supposed to transfer to the creditor, and the equity holder should not have any say. So the creditors include the financial and the operational creditor. For the first time, there is a differentiation in the creditors to say as financial creditors and operational creditors. Financial creditors are creditors who have given money to exploit the time value of money. Appadina interest. Operational creditors are everybody who supplies this water to everything else, to supply the raw material, your clients, your vendors, whoever it is. So the debtor in possession will transform into a creditor in control in an IBC situation, which I feel is the right thing to do. That is where the chartered accountant will come in to bridge from the debtor in possession to the creditor in control. Yarala panna mudiyum. It is only we who can do it effectively. So the IBC is managed by this. First is the Act 2016 code. And next we have a board called IBBA board, which is the umbrella body controlling all the agencies. Chartered Accountant Institute is one of the agencies. Chartered Accountant, the Institute of Insolvency Professionals of Chartered Accountants of India. Like that for CA, CS and cost accounting, we have 3 agencies, and all the members have to be part of the agency to be part of the board ultimately. And the professionals. Sir, here you will have to pass the IBC exam. So IBC exam is a very, very simple exam. Pure common sense. You will have to read the Act. That is all. But you have to I was from 2016 to 2018, I was involved in taking classes for members to become IP professionals. So one person in Hyderabad asked, "Are you a IP? When did you pass IP?" I said, "No, sir, there is no requirement for me to." "Then how can you come and teach us? How can we know that you are teaching us correctly?" "Sir, up till now in my teaching, there are about 100 people who have cleared the exams." "Are you an IP?" Again, he asked the same question again. I said, "No, sir, I'm not an IP." So I went back. I thought, what, I've been taking classes for more than 20-25 sessions at that point in time. I can write the exam. So I went and wrote. I got 54 out of 100. Only if I get 60, I can pass. I got 54. Today is a bad day. Dhoni will hit ducks. Kohli will hit ducks. So no problem. Again I wrote. I got 50. Then my ego shattered and I decided that I should do something. I studied like a 12th standard boy studying for the board exams for 1.5 months. Morning 4 o'clock to 8 o'clock, evening 6 o'clock to 10 o'clock. No going out, no movies, no Lions Club, no Freemason, nothing. Only IBC. I got 68 marks and cleared. Next time I went to Hyderabad, the same person was, "Have you cleared IBC?" "Yes, sir, I have cleared, sir. I brought the certificate also with me." So anybody can write IBC. Only thing is that you have to make a sustained effort and Now everything is available in the YouTube. Our institute has got a beautiful material for writing the exam, IBC exam. Please write only, at least for the sake of, telling your children, grandchildren that in the vayasla na pass pannirukkum, you can say. At least write for that. Whether you do the work or not is another issue altogether. So that is how it is. And creditor in control. As I said, the transition from a debtor to possession to a creditor in control, in between there has to be some agency who is going to do the transition. It is not an easy transition. It is not an easy transition for a owner to leave his seat and come outside. After all, it is he who has created that small empire which he has. The empire might be a 400 square feet factory. It might be a 2 lakh square feet showroom. Whatever it is he, it is his blood and it is his identification. Trying to remove him out of that ego sitting there is an effort. And creditor is nothing but the bank. What would the bank know to run a business? The bank won't know anything to run a business because they are not in the business of running business. They are only in the business of lending money and collecting interest. That is all they know. So where the creditor comes into control, what will he do? He will not know whether to negotiate a particular deal or close a particular deal or vacate a particular premises. He might not know. That is where the bridge is, all of us. And we use NCLT effectively to safeguard us and also in order to protect us and also enforce the right we have. An insolvency professional is the officer of the court because it is the NCLT which appoints him. If they say anything, I am the officer of the court, sir, don't. But whatever it is, you come and say in NCLT. Even if you say that, it's enough. Whether it is police, whether it is anybody else, they will not do anything because all these issues have been faced by people. Suddenly one policeman will come into you, office, what is the, who are you, what are you, where are you, how are you, every question. You just show the NCLT order, you please see the NCLT order, court order. You must know where to use what words. To a policeman, you must say court order. Court order is there, you please see this, my name is there, you leave. He will immediately leave. 150% he will leave. PF person will come, sir, there is a lapse in paying of provident fund. Again, you can do the same thing. You will be a bridge between the transition from a debtor in possession to a creditor in control. I firmly believe that only a chartered accountant can do it. But now, everybody is doing it. Whoever is an IP is able to do it. Control and custody of assets. We know how to take the checklist of assets because bank audit has trained us so much. What documents to keep, how the documents have to be maintained, all of that we know. Promoters continues to stay in control with limited rights to creditors except for financial secured creditors. Financial secured creditors, again, is a new term, is where a financial creditor has got a security interest, especially a bank or NBFC or any other person who has a lien on the property. AC off panninga. So in IBC, invariably the emphasis is on secured credit. There is also a complaint to say the banks are using it as a recovery mechanism. You as a chartered accountant can stop it. I as a chartered accountant stopped one company where the bank tried to use it as a recovery mechanism. The bank manager called me and said, you have to do this, you have to do that. You know what answer I told you? Don't get upset. I said, I'm not your concurrent auditor for you to threaten me like this. Because I was a concurrent auditor, sir. I was a concurrent auditor where the bank manager used to threaten me, sir, you don't have documents for this. You write, I will see. If you write, I will see. Whether you will write, I will see. All those threats I got. So I said, you are Dealing with an insolvency professional, don't treat me like your concurrent auditor. So what is it you are telling? What do you know about concurrent audit? I have done enough and more concurrent audit. Look at my visiting card. You will have that power, you will have that right, and you will be able to exercise it. I prevented a bank from using it as a recovery mechanism, trying to recover only 1/4 of the value of the property just because he wanted to meet his target. I said, no, it has to go through this only. He said, I will file a case against you. Please file a case against me. He filed a case against me, and it came in my favor, citing that the essence of IBC is to maximize the returns of all stakeholders. So maximize the returns of all stakeholders. It is not the maximize returns only of the financial creditor. It includes the employee, workman. It includes the operational creditor. Whatever is there within the parameters of law, it has to be accepted. It has to be, fulfilled in order for you to get it. So if you feel anybody else can do a better job, please let me know. I just want to know that. Creditors in possession, you have to be a trustee of the company. Not like the way you are trustees presently, having the digital signatures of all the clients in our office, in the front office, digital signatures of the client will be made a board and having it. No, that is not trustee. You are maintaining the asset. You are going to preserve the asset till either the issue is resolved or the company goes into liquidation. The Act provides for a separate category of professionals. Separate category of professionals is IP professionals, where all of us can become IP. So what all he can do? He can be an interim resolution professional who will be appointed by the court and can be replaced or can be appointed by the committee, the debtor in control, the creditor in control, as the resolution professional, or he can become the liquidator of the company liquidating. You know what is one very good thing in IBC? The first expenditure is the fees of the professional. That itself, will give us so much of enthusiasm. First CRP cost is the professional's fee. Earlier, the professional fee was not fixed. So the banks used to fix at 20,000 rupees, 30,000 rupees for the whole process. Then I was part of a committee in IBBI which created the ethics and, insolvency professionals manual. In that manual, I made it a point that there has to be a minimum fees for the insolvency professional. Now the minimum fee for the insolvency professional is 1 lakh per month. Office expense run pannadhukku porom. Minimum of 1 lakh per month. If the asset value or the net value of the company is up to 50 crores, it is 1 lakh. After that, it keeps increasing. It goes up to 12 lakhs per month. Of course, 12 lakhs per month, you will have to be the IP of this airline. What is that airline? Jet Airways and all. Only then you can do, but otherwise you won't. But there's a chance, no? That's what I said. I made more money as an IP than being a chartered accountant practicing for 10 years. I'm a small chartered accountant. I'm not comparing myself with any one of you. I'm only comparing with this thing. Ten years as a chartered accountant. No, 10 years in case of practice, 15 years in case of service. But you can do all other things except being an IP. To appear in NCLT, NCLAT, you don't have to be you don't have to pass that exam at all. You are empaneled by the RBI. Every year we fill up that form. Everybody are allotted? No. Alternatively, if you have clients, your clients can appoint you. Or slowly you will start, becoming an association, where in an association you have a few advocates, you have a few chartered accountants, you have a few IPs, you have a retired banker. So as and when you get the work, you will share amongst yourself. Each one will refer each other. I will have a conflict of interest. I will be the chartered accountant. I will refer Deepak Jain. Like that, slowly our ecosystem will evolve. If you have started to appear before NCLT, NCLAT, all the other IPs, your friends' IPs will engage you for their requirement in every IP has a requirement in NCLT for appearance. Either to file a report or to argue the matter or to fight the matter with the banker, with other people, with the owner, anybody for that matter will file a case on the CARP. So it needs to be defended. So at any point in time, there will be a requirement. So the applications by a financial debtor, you can be part of that. You can prepare the application very easily. To prepare an application properly and filing it, having it numbered in the NCLT, minimum fee is 1 lakh now. There are large firms which charge up to 5 lakhs at least for preparing the application, vetting it, filing it into the presentation will be shared with you, Deepak. If not, I will share it with you. I'm only a phone call away for you. You don't have to strain yourself. And you will be appointed as an interim resolution professional by the NCLT, for which the fee is minimum 1 lakh. And application will be admitted, and then you have to constitute a committee of creditors. If the committee of creditors accept your continuance as the RP, from IRP you will graduate into an RP. I only have to inform the NCLT about it. And COC can appoint the resolution professional. Either the same IRP can be appointed or they can appoint any other person. And participates in the resolution plan. It's the most important thing, and where the chartered accountant is extremely critical. The resolution plan has to be prepared by the person who wants to take over the company. That resolution plan we can assist. To create the resolution plan, all you need to do is study the balance sheet, which we are trained so much, my friends. We are trained so much to study a balance sheet. Or balance sheet பார்த்தாலே நம்மளால சொல்ல முடியும் whether this is a good balance sheet or wrong. So what all you can repay, how all you can repay, where you can repay, bank how much you will repay, OTS you don't have to ask the bank for an OTS. OTS will come in the resolution plan itself. I will pay 60% of the principal amount. The balance I will pay in 5 years after I do A, B, C, D. That only a chartered accountant can actually bring it out to the fullest extent. He preserves and protects the enterprise value in the calm period. There is a moratorium during which nobody can file a suit against the corporate debtor or the company. At that time, it is the resolution professional who completely maintains the calm. He will take all the beating in the back. In the front, he'll be smiling. He has to. You don't have an option. Of course, you are paid, 180 days, you are paid 6 lakhs. If you have 4 companies like that, life settled. என்னப்பா இது? Just help me, no? Wait. Okay. I have another half an hour. 30 minutes. Sorry. Somebody asked me a question. When can I become a IP? Graduates 15 years experience and enroll at the relevant professional institute of CA, ICAA, CA, lawyers or actuary. But you don't have to wait till 15 years, my friends. You can start the NCLT NCLAT practice now itself, and by the time you reach that 15 years and you clear your IP, you'll be a very very experienced IP. You know all the nuances of the trade, and you can be very successful in the sense that you can be a very good IP. Role of an IRP. First, the NCLT appoints a person as the interim resolution professional. IRP is the first entry into the corporate debtors place under IBC, and once the RP is a resolution professional. RP as a role in IRP, the management of the debtor from the date of the appointment vests with the IRP. You sit in the managing director's seat. The bank will have you as the authorized signatory. MCA records, you have to file as the authorized signatory of the company. Whether it is a small company or Reliance, whatever it is, you have to do. The powers of the board of directors are suspended, completely suspended. You are the one man Raja. The officers and managers report to the IRP. Look at the amount of authority you have. Financial institutions act on the instructions of the IRP. IRP executes deeds and documents on behalf of the corporate debtor, where you have to renew a rental agreement, where you have to renew if it is a running concern, you will have to renew certain agreements, pay the excess electricity deposit, whatever it is, you do everything. Takes action with the specification of the BOD. Of course, we cannot do ourselves independently. That is where the non-chartered accountants falter. They take this authority to be a power. Wherever there is an authority, the corollary is responsibility. You have to act with responsibility, only then the authority can be exercised properly. Otherwise, it becomes raw power, absolute power. And absolute power corrupts absolutely. That is why many non-chartered accountant IRPs are behaving like authorities. Authorities in the sense that I know everything, you just sit down, without knowing the business nuances. Access to all information in the information utility. In the information utility, you will have who has given loan to whom, how much, what are the secured creditors, unsecured creditors, what are the relatives, what are the relative party transactions, where the board has got any approval on related party transactions, whether these transactions are to the interest of the company. There might be a few just because it is related party transaction doesn't mean that it is against the interest of the company. There might be a few and far in between transactions, even though related party, they are for the benefit of the company. That only a chartered accountant can verify correctly. If there is a running business, you will be the correct person to handle the business, Ramchandran. Technically also, you won't be running the business, you won't be doing the lathe, you have all those people. All you do is to have to sit and supervise. Ensure that the business runs correctly. Take right decisions. That is also for 6 months only, na? Existing business will run as it is. I will not add any new client. I will not remove any client. I will just keep the business running as the day I entered. What was the production? The same production will keep going. If I could increase the production, the managing director could have increased the production earlier itself. He is not able to. So I will not take that risk. I will do it straight. Suddenly I require some extra money for the purpose of some interim finance due to some urgency. Say for example, I have to renew a license. That license has to be renewed. Only then I'll be able to make money on the resolution plan. So for that license, I will approach a banker for interim finance, which only you can do. You mean to say an advocate will do all these things? He cannot. List of assets and liabilities, creating a list of assets and liabilities, assisting the valuer. The valuer has to be assisted in order to prepare a correct valuation, a fair valuation, a liquidation valuation, a distress sale valuation. All these valuations we can assist. Constitution of the creditor. We are well versed in related party transactions. Both in audit as well as in income tax, we have seen the related party transactions. We know it is only an extension of that. Wherever there are related party transactions, the transactions have to be analyzed. If you feel it is detrimental to the interest of the company, action has to be taken over that money. Otherwise, leave it. None of my CARPs I have said that the related party transaction is a sham or wrong or it is against the company. I explained to the bank. There are a few related party transactions. It is in market space. It is in the market value. Rental is in the market value. Why would he go and take a third party's place as rent when he has his own wife's or father-in-law's or mother-in-law's house or mother's place there? Why should he go take somewhere else? Look at it from a business point of view. If you still insist, I will file, but I will not be serious about it. The bank said, no, sir, you are right, you don't file. Because cost is involved for that, no? Bank has to pay. Already the bank is sitting in bad money. They don't want to put more good money into bad money. So, we can take such decisions. Going concern, I can appoint Ramchandran, I can appoint other professionals. I can appoint an industry specific expert to manage the company for me for 6 months. நீ உட்கார்ந்து பண்ண வேண்டாம். But you will take the responsibility for the decisions, you will have the authority and you can execute it. And abiding the law. Especially during the moratorium period, whatever laws have to be adhered, it has to be adhered. If you have to do an audit, you have to file the balance sheet, you have to file the balance sheet. You have to file the MGT 7, MGT 8 and all to the banks, you have to file it. If you have to have a secretarial audit, you need to have a secretarial audit. If you do a tax audit, you have to do a tax audit. Yes, sir. Huh? You are officer of the court. Officer of the court. But if you try to misbehave or try to, exercise authority too much, you have a grandfather sitting up, IBBI. Avandu kutuvana. Here what happens, once the CRP is initiated, under section 14 you have a moratorium, calm period. During the calm period, people have interpreted that I don't have to file the income tax return also, but I feel no. It is calm period for the others to come and attack you. But inside you will have to clean up yourself. You will have to do the audit, you will have to pay the auditor, or you will have to tell the auditor, you raise a claim, I will make the payment later, whatever it is you have to do, you have to do it. But just because you don't do it, there will not be an default by officer, adu varad. I don't understand, sir. But I have to take the approval of the COC. Committee of creditors All the bank people, all the secured creditors will form a committee. They will run creditor in control. You are only an intermediary between the debtor in possession and the creditor in control. I'm sorry, I should have explained it earlier. I'm so sorry. You try to create a resolution, you try to create a transfer of the property to another company, you try to retain the running concern or to improve the running concern, you try to transfer it to somebody else. You are not able to. Because the COC is not accepting the resolution plan for various reasons. The property is worth 250 crores, the resolution plan fellow offers you 25 crores. The bankers will say, my principal itself is not coming, I won't. Or due to whatever reason. Even if you give 275 crores, it is not necessary, compulsory for the COC to accept that and say that, boss, I will take this. No. There are some situations where the COC will act like that. So in that case, what happens? The liquidation will be triggered. Or the COC in its business wisdom. Please understand, I have put the money, my money is not returned as per the financial creditors. I have put the money, my money is not returned. I am sitting in a COC, I am unable to get my money, so I will liquidate the company. I will not wait for a resolution, wait for 5 years for the company to improve and give the money. I will trigger the liquidation. It is within the rights of the financial creditor to trigger a liquidation. It is called as the business means. And nobody can question the business wisdom of a COC. Again, in these places, we can be of great help to say that, sir, won't do it. Look at the NPV. Look at the projections which we have. There is a good possibility. Why don't we try for a better resolution rate? And the resolution applicant also can be advised to say that, boss, improve your resolution value. You don't keep it here. You place it again. I will speak to the creditors and we will try to have a resolution. I think we are perfectly equipped to do that, isn't it not? Yes. Yes. Bird in the hand is worth two in the bush. Tomorrow you will say that you will pay all the money, but nothing is assured, right, in the present market. As a liquidator, we have got an exciting role to play. We have to collate all information. We have to write to the debtors. We try to collect money as much as possible. Wherever there are properties, make an e-auction. Advertise the property in the proper manner. Make an e-auction. Collect the money. Distribute it among the stakeholders. You have a beautiful name for that, waterfall mechanism. Section 53 is considered as a waterfall. So the first water will fall. If there is excess, it will fall to the next person, like that. In that also, the liquidator's fee is in the first. That itself should excite us. So as liquidator, we collect claims, we maintain records, whatever, and we preserve the assets, try to protect it. If you have to engage some security and all, you have to, all those things you do. And then if you sell within 6 months, your fee is as much as 5%, Deepak. Schedule 4 of liquidation regulations, you just have a look at it. As high as 5%. If you sell for 20 crores, how much? 20 crores mein 5% kitna hai? You'll get that. You get that. But after 6 months, if you go slowly, it will start reducing. Obviously. That's the incentive you have. Apart from that, monthly remuneration for the liquidation also, liquidator also, you can negotiate. Everything is there. Extremely exciting. As I said earlier, you need to unlearn and relearn. You have to trim your sails. I'm seeing the beautiful series about Vikings in Netflix. In fact, I've just completed the season 1 and entering into season 2. So I thought that I should put a ship there. You have to trim your sails. Trim your sails means you have to do an extra effort in a different manner in order to come to the NCLT, NCLAT. You need to know the basic rules and regulations of NCLT. You'll have to read the relevant portions of NCLT rule. Everything is available in Google. Everything is available in the IBBI website. Everything is available in our institute, IIIP. Beautiful materials you have. Time management, you know, if you are in NCLT, if you are in NCLAT, you should know, as you spend more time in court, you will not have time to do the office work. So you need to do a time management. I prepared this presentation yesterday night at 9:45 and today morning at about 5, I was making this presentation. I'm not trying to say that you people must clap your hands, but what I'm trying to say is you need to manage your time properly. Court time, the court time, you will be given only a brief moment. You cannot, go around the bush. You cannot, from old stories, you cannot bring. You have to be precise to the court. Of course, we have excellent team of officers or the members in NCLT Chennai who are very patient to hear, but there are people who irritate them also by not coming to the point. One has to be precise and brief because the time you get is extremely short, either in a VC or in a physical hearing. You have to be brief, you have to be precise, you have to be sharp. Yet you will have to know the psyche of the member also. Facts. Reading the case before you enter into the courtroom is critical, is a make or break. It was taught to me by my very good friend Bhanushekhar, who is Ramchandran's partner. He said, unless you know the facts well, never enter into the courtroom for arguing. The other person will slaughter you. Exact words he used. You will be slaughtered. You have to know the facts well. You have to read the case before. You will have to think how the other person will think. And you will have to keep the judgments. All these things, a small trimming of sails, that's all. In your regular practice. Audit pannadod is romba easy, sir. Presently a company's audit. How many years my daughter is writing her inter. In the auditing paper, I was so taken aback. If I had written the auditing paper, I would have got a 0 with the capital Z. AS, IAS, IAE, Napa, என்னென்னமோலாம் இருக்கு. இதெல்லாம் ஒண்ணுமே கிடையாது. Sir? No, all of you are practicing so well. Huh? And you have two beautiful twin sisters. One is Surpanaga and one is Tadagai. யாரும் கவுன்சில் மெம்பர் யாரும் இல்லைல்ல? ரெக்கார்டிங் இருக்கா? ரெக்கார்ட் பாயிண்ட் இருக்கா? You have Nefra. Drop of the hat. Branch auditor has to take the permission of the board in order to become the branch auditor. You know that? How many of you have read the Diwan Housing decision? Nefra says, as a branch auditor, you have to take permission of the members in an annual general meeting. You cannot take the permission of you cannot be appointed without the general body permission. 5 years you cannot practice and 25 lakhs is the fine. Please keep your ears and eyes open. When you are able to do audit like that audit, we are able to do bank audits again. A huge sitting on a time bomb. We don't know where, because I know all that because I am defending our fellow members in disciplinary proceedings and in Nefra. Because of that, I know all these problems. Adallam compare panna, this NCLT, NCLAT is cakewalk for all of you. Tracking the dates of NCLT, you have to be at the right time, at the right moment. You have to be present either in the VC or in the physical for the purpose of appearing. And the pleadings have to be completed. The pleadings is nothing but submissions. We are all used to submit to the assessing officer, the CIT appeals, to ITAT. Similarly, you need to make the pleadings before the NCLT. It's not rocket science. Understanding the member. There will be a few members to whom you have to be precise. There will be a few members where you have to speak only law point. NCLAT is only law point. You have to speak law point. You cannot start the facts. Sir, and so much of money from 1,500 crores it came to know. You have to speak facts. So you must know the psyche of the members. So the members we will know only if you start observing. 1 week if you observe, you will get it. To present the case and refer the document, taking into consideration the background of the member. If the background of the member, if he is a judge, you will have to approach in a different way. Now presently we have one retired Chief Commissioner of Income Tax, Mr. Ravichandran Ramaswamy, as the technical member. For him, if we say facts, he will appreciate. So you must know to whom you are speaking, how you are speaking. All that if you sit for 1 week in the VC or you just have it slightly, you keep doing your work and have your VC on, you can do it. Understanding the other counsel. Observe and analyze the strength of the other counsel. There might be some other counsels who will not allow you to speak. There will be some counsels who will shout, who will interrupt. You must be ready for all that and try to take it in the stride and keep continuing the arguments. After all, we have argued, no? Argumentative Indian by Gurcharan Das. If you have not read it, please buy that book and read. It is available in Amazon. Beautiful book. Argumentative Indian. Indian will start arguing at the drop of the hat, but except in NCLT, NCLAT. Yenda charada content varmatinga. Case laws you have to refer, you have to maintain files. Maintaining files we know very well. Now almost every firm has the peer review. And at least your peer reviewer, that auditor would have taught you how to maintain files. Thinking on the feet. Slowly that will come. Clients that you have to speak in front of the judge. It will come slowly. That's not possible when we are strong on facts. If we are ready with the facts, we are thorough with the facts, we know the facts very well, we will be able to attack. Easily we can do it. Observing, as I said earlier, we need to observe the court. Devil's advocate. Always we must not see only the case laws and facts favorable to us. What are the other side facts also we must see. We must play the devil's advocate on us. From the other side we need to approach and see whether we are right or whatever. Any complicated matters has to be presented very simply in the court. Our other friends will make simple matters complicated and irritate the judge. But if you are able to explain to the judge a complicated matter in a very simple way. There was a High Court judge who was also a chartered accountant, and with whom the day he came and sat, I was the first person to argue before him. So I was the opening bat, like Srikanth or Gavaskar in the 83 World Cup. So as I was arguing, he asked me a question. Counsel, have you filed the balance sheet? Have you filed the balance sheet and profit and loss account? I said, I don't think I'll have to file the balance sheet and profit and loss account before this honorable court, for the simple reason the High Court will only see points of law. It will not see points of facts. Do you know what a balance sheet is? He asked me. That time only I had entered, wearing the gown, coat and all, no? So adrenaline was pumped already. I am also a chartered accountant, my lord. Oh, you are also a CA. Very good. So please tell me, why have you not filed the balance sheet? Again, I am telling, I don't think that I have to file a balance sheet before you. In case you want, I will just file it and we will have the case next week. said, okay. And next week happened, it came in my favor. It was purchase of a land by paying cash by a person whose regular business was buying and selling of land. So they said that you cannot buy in cash 20,000. I said, this particular land is only for my personal use. So I have not sold it at all. So I can buy my cash at that point in time. It was actually a very complicated thing. I didn't know how I will explain to the judge that me being me means the client being in the business of buying and selling land, has paid cash, he has acquired a land, which is actually prevented by some section, I don't remember the section now. More than 20,000 you cannot pay cash or something. And why should it not be added into the books of account? I said, no, even now if you see, it is in my hands only. I have not sold it at all. It is still with me. So I have used it for my personal use. At that point in time, for personal use, I could buy by cash. Actually, I thought it was a very complicated thing, but when we explained it to the thing, the judge agreed and it came this thing. Of course, cordial relationship. All chartered accountants have cordial relationship with everybody else as far as I know, as far as I have moved with in the last 30 years. Everybody has this thing. And last but not the least, one must act as a court officer to assist the court. If you feel that something is wrong, we will have to tell that, my lord, I feel that this is wrong. I will check up and let you know. Or if you have to concede, you will have to concede and say that, no, the other person is right, I am wrong. We will learn the respect of the court phenomenally. After all, the client is only one. You will have to appear before the judge for a long time to come. So these small adjustments, all this we have done. All this I have said in the last trimming of the sales. Have you not applied while appearing before the assessing officer? Have you not done while appearing before the commissioner appeals earlier? Now it is faceless. Many of us would not have appeared before the tribunal. Leave it. That's only a small extension of what you have already done. So if you are clear in your facts, you can very clearly do. Appearance in NCLT, NCLAT is a new area of practice which is really opening up. It's a very good alternative to the regular practice. I know many chartered accountants are slowly coming out of attestation functions for various reasons. Sir? Understanding the new roles and responsibilities is important. As an IP, you have an excellent opportunity. And another thing which is not included here, you can also become a valuer. How many of us are valuers here? Have cleared the valuation exams? Enormous opportunity. Please consider that also. And of course, with ethically, you can discharge the duty along with authority, responsibility, power, respect, and yet maintain the independence at all points in time. Nobody can, instruct us to do whatever except the court. Court will also ask you whether you can do this, whether is it right, whether is it proper. If you explain, oh my lords, we cannot do like that, the court will not force. The bankers cannot sit upon you. They cannot enforce anything on us. Provided what we do is legal and ethical and within the four corners of law. So any questions? I think I was kind of successful in keeping almost all awake. There were a few, closing eyes because that's natural. Even if I was there in the other side, I would have done. Sorry? Obviously, will come down. Whatever opportunity we have to see. What I will say is, you have a client list. Client list, you see who all you have done audit. You know everything about the client, in and out of the client, You see what are the debtors of the client, how many he has to come. More than 1 crore, you can initiate. You have a practice within yourself. You have an internal cup with you. You have opportunity within your existing clients. How many of us are even looked into it for the existing clients to see if there is any opportunity for NCLAT, capital reduction, heavy losses, you can do a capital reduction, you can try to do a merger amalgamation, there will be multiple group companies, you can either wind them up or you can do a merger, or you can assist your clients in having an amalgamation with another company, you can buy out another company. Chartered accountants are the best persons to advise whether I can buy that company or not. You know what is the synergy your company has. You can see what is the synergy the other company has. நம்ம இன்கம் டேக்ஸ் வெளியிலேயே பார்க்கலையே சார், அதான இஷ்யூ இங்க. எஸ் சார். In our allegations will be there. There are a few cases where the IBC is used for recovery of money, whereas the intention of the legislature was never for the recovery of money. That is one thing. Secondly, increase of 1 lakh to 1 crore. We can see there are still cases being filed across India. Because 1 lakh to 1 crore, I feel that 1 crore is the right amount, because 1 lakh is too small to initiate a company and ask the managing director to sit outside of his office for not paying 1 lakh or 5 lakhs or 10 lakhs. I don't think it's fair from a business perspective. Earlier it was. What was the first question you asked? I'm sorry. If you are not in IBC, my friend, you will not get that haircut also. You will be totally motta. You know the reason? SICA, the Sikh Industries Act, you weren't able to recover any money. After 30 years, you will sell it as scrap. So at least now we are able to recover something, and the decision of the COC is based on the business. That we fail to appreciate that, they have decided that I will take the haircut. The lenders have decided. If it is through illegal means, I don't know. If it is through normal means, they have taken a business decision. In shares, you have a concept of stop loss, no? Like that, they have taken a stop loss. Whatever is the loss, I am willing to sit with it. 40% of my recovery is enough for me. If I wait for 5 years, I will not even have 5% recovery. That has to be compared. Only now we are only comparing the haircut. If IBC was not there, this haircut also will not be there. There will not be any scope for recovery in the old mechanism. If there are no other questions, yes, sir. No, sir. IBC almost overrides everything. But if they want to take action under SURFACE, they should have taken the action before invoking the IBC provisions. There are still SURFACE action being taken, but it should have been taken after the IBC. IBC and SURFACE cannot go parallelly, or SURFACE cannot happen after IBC. Is my view. Triggered by the order of the adjudicating authority. Adjudicating authority is NCLT. The CRP order will name the professional IP insolvency professional as the interim resolution professional. Who? The resolution professional will not contact anybody. He will only send one email to the director asking him for all the information. He will send one email to the banker, to the ROC and to income tax stating that this company is under IBC and here is the order. He will issue an advertisement in two newspapers, one in the local language newspaper, one in the English newspaper. He has to give an advertisement in a form stating that this company has entered into IBC. Whoever has a claim, you please raise a claim to me. That should happen within 3 days of he becoming the IRP. So, no accounts will be seen. I don't have any accounts. The CD is in Bangalore. I am in Chennai. The Bangalore NCLT is appointing me. I will not have access immediately to the account. I will issue a newspaper advertisement, one in Kannada and one in English, in Business Standard or whatever newspaper. I will issue the advertisement. It is known as a public announcement in Form A. I will issue and wait for 21 days. In between, I will get some information. In between, I will get some books of accounts. If the corporate debtor is cooperating, if the management is cooperating, I will get all the books of accounts or some information, some pen drive, or I will find out the auditor, ask him to issue all these papers, and I will go about. Only from the claims I will do. I will not approach any creditor. That is not within my scope of work itself. Okay, sir? What? Yeah, nobody can stop the process. If somebody stops, I will file a application before the NCLT. Again, you have an opportunity to file before the NCLT under section 66 to say that the director is not cooperating, the company is not cooperating, the managers are not cooperating. We'll get a direction from the NCLT asking them to furnish the books of accounts or instruct the auditor to kind of help the insolvency professional, etc., etc. Okay, if there are no other questions. Yes, sir. You RP only will do. RP will do with the books of accounts. And the claim should be a self-sufficient document. It must have the invoices, it must have the agreements, it must have everything by which I can see. If in the invoice you don't have interest at 18% per month or 18% per annum, I'm sorry. And in the claim you have raised an interest of 18% per annum, I will reject the interest because your invoice is not speaking on the interest. And the agreement with you and the erstwhile management was not with the issue of interest at all. So like that the RP will check and he will reject a few claims, he will accept a few claims. For example, income tax. Even though I am a counsel for income tax, last week we had a session with all the officers of the South where I addressed them on this IBC matters, and one officer said, whether we complete the assessment or not, we will raise the claim. Notionally, we will raise the claim. Because to complete the assessment, you have certain frame, no? Time frame you have. If I am not able to adhere it, I have to give the claim within 30 days. So, I will make a notional claim, I will estimate the assessment and I will claim it. Nobody prevents me. Yes, nobody prevents you. But I said there is one person who will prevent you, sir, who is the resolution professional. And if that resolution professional is a chartered accountant, by seeing it, you know blatantly, you will know what to write under what section, how to reject it. Isn't it not? First is your fees. Okay, first is your fees. After that, you would have paid valuers, you would have paid advocates, you will pay chartered accountants. That is the CRP cost. First is the CRP cost. After that will come the workmen, 1 year salary of the workmen, and the secured financial creditors. Secured financial creditors who are backed up with collaterals. 99.99% the water will not flow after that. There itself there will be a closure. After that, next is your employees. Employees for 1 year. Employees 1 year and any other workman salary. Next will come the unsecured part of the secured creditors. After that, you have the operation creditors, all our suppliers, etc., etc. Audit fees and all will come as operation creditors later only. So invariably in IBC cases, you will not receive your audit fees. Operational creditors, and with the operational creditors, you have the statutory dues, ESI, income tax dues, GST, service tax and all will come in operational creditors. Huge hue and cry by the department. Department is the first one to get the money. That is why no company was revived all these years. The government, now you are asking me a billable question, sir. In the next slide, you have my visiting card. You can note down and call me. We will speak about it in the coffee break. I was joking. 1 second, sir. If you have the information, it is always better to send individual letters. நான் வந்து எங்கிட்ட bank ID la irundadunaka, I will send individual, but it is not compulsory. Tomorrow, if there is an allegation against you that the RP or IRP has not done the duty properly, you can always show. See, going outside my scope of work, I have also issued individual letters to ABCD creditors with whom I have knowledge, and to the ABCD authorities I have sent. You can send. Yes, sir. சார் நான் 2 வாட்டி சொல்லிட்டேனே சார். நான் வந்து 10 வருஷத்தில் சம்பாதிச்சதில்ல, இதில் வந்து 3 வருஷத்தில் சம்பாதிச்சு. இதோட உங்களுக்கு என்ன சக்ஸஸ் வேணும்? Be bothered about our earnings, sir. That is why you have spent here and come. Bothered about your earnings. IBC is success, sir. IBC is success for all persons. There are a few aberrations here and there to say that, we got 80% haircut and 95% haircut and all. It is a conscious decision. Where the success of IBC, you can see it like this. For a failed business, a factory or a plant and machinery or a space, it is immediately put to use within a span of 180 days. At least as per paper. In reality, it is actually happening in 4-5 years. I had one company in Tanjavur who was manufacturing syringe, that plastic syringe modules. That person was manufacturing. He went into IBC, and now this company was acquired by another company, and now they are supplying to Apollo and all the major hospitals. If it was prior to IBC, all the plant and machinery would have been rotten by now, would have been to that extent, the nation's resources are being, salvaged. I wouldn't say protected, I wouldn't say, brought back, at least salvaged to a reasonable extent. That is the success of IBC. And the ease of doing business again has increased from 180, and it has reduced to 63 or 64, the last one. After that, they removed that ease of business doing index itself, because we found that Pakistan was above us. We found that Sudan was above us, Nigeria was above us, Benin was above us. So the whole thing is scrapped. It was actually a wrong, kind of an assessment which they had in ease of doing business. Business ஒண்ணுமே பண்ணலனா எல்லாமே 100 தானே. சொல்லுங்க சார். Yes, sir. You can use the mic, sir. Provided we have the time.
Good evening, gentlemen. I am Vishwanathan. I think 4 or 5 years back or 6 years back, I attended Regional Council annual meet in Bangalore. Mr. Agoja was present and talking very high about IBC. It's a wonderful legislation which is brought by Modi government, must be some 6 years or 7 years back. My personal opinion is, advocate and chartered accountant, there should be resolution professional 1 and 2, like technical member or in tribunal, say judicial member and accounting member. Advocate way of presentation is something extraordinary with regards to court matter. But they need assistance from the chartered accountant. and chartered accountant need assistance from the advocate. So IBC code should give the blend of these two professionals is the matter which I thought I should share with the members. It's required. I request Mr. Ramana Kumar to address this to the higher officials. So we need definitely advocates for the way of presentation. And they need our assistance in making all the ledgers and other things. Somebody has to. In fact, I assisted one IBC for, I made the beginning itself so that the conflict is very much reduced between the creditors and the debtor. And it was very successful and getting closed within 3 years. Within 180 days, the resolution was passed. I was not involved directly. Somebody came to me and I sensed the problem. It was addressed by one company secretary. So the company secretary was clue from the beginning. I was not in the front. I could see that advocate's role and chartered accountant role has to be together in IBC. That's what my suggestion. Thank you.
If there are no more questions or inputs, I place my record my sincere gratitude to Revati for inviting me to make this presentation and for a very patient hearing. There were very few eyes which were slightly trying to sleep, and when I threatened them with all the atrocities, immediately all of us were awake and nobody left the room. That's my achievement. முதல்லே போயிட்டாங்க, அது வேற விஷயம். ஆரம்பிச்சோன்னா போல, புதுசா இருக்கிறவங்க யாரும் போல இல்ல, அதான் வேணும். ஓகே, தேங்க்ஸ் a lot.
Thank you, sir. The session was not only informative but also inspiring for professionals seeking to diversify their practice, sir. On behalf of SIRC of ICI, I thank you once again, sir, for this wonderful and eye-opening session. Thank you, sir. So we will reconvene here after a 10 minutes tea break, and we have our session with the CAP Shankar Raman, sir. So I request Shankar Raman, sir, to join us on the stage, sir. And I request CA Bhagyalakshmi ma'am to welcome address the speaker.
Good evening, members. Good evening, ma'am. Good evening, sir. It's my privilege to introduce our speaker, CA Shankar Raman, sir, who will share his expertise on audit trail and accounting software, changes and challenges. Shankar Raman, sir, is a qualified chartered accountant with about 3 decades of post-qualification experience in the field of assurance and financial reporting. He has extensive experience of leading and coordinating large national and multinational audit engagements. He is responsible for managing client relationships at CEO, CFO, audit committee level, and was also instrumental in developing innovative service offerings. His experience also includes performing financial due diligence and internal audits. He also specializes on internal controls, design and testing. His area of specialization includes statutory audits in financial service sector, manufacturing, power, retail, distribution and consumer business. He has also handled engagements in other sectors like healthcare, publishing, automotive industries and NGOs. He has done audits under auditing standards generally applicable in India, international auditing standards, US GAAP and PCAOB standards. With this introduction, I welcome Shankar Raman, sir. I request Chairperson, Mrs. Revati, to give the memento to the speaker and address the gathering, ma'am. Thank you.
So, good evening, everyone. It's actually such a pleasure to be here, especially, all the speakers who addressed us for the past 2 days. We just had to reach out to them, give them a call, and, they all immediately accepted. And Shankar Raman, sir, also always, every time I'll just call him, sir, please come and address. Immediately, he will never say anything. He'll never say I'm traveling. He'll never say I'm busy. Yes, and he will accommodate us whenever we ask. And we've got very good feedback, sir, for all these sessions. It's really very heartening and motivating for us when people say, yes, these sessions were very good. I actually want to request you all to attend more sessions. Next month, we are planning one masterclass on accounting standards. And, we have started conducting the sessions in places outside of ICAI, like MMA. We are also selecting CMRL building in Nandanam. It has a fantastic auditorium and sufficient parking, and it's a very, very beautiful location to have our CPE meeting. So we will be moving there and we will be conducting it here. We will not be conducting in Ramaya Hall because of the lack of space, accessibility constraints, etc. So please check where we are conducting and join us in those places. And because these places have enough facilities, we will be able to conduct more interesting, 2 or 3 day sessions like this, where everyone can get benefit out of the experience of all the speakers. And in case anyone wants to join on the panel of the speakers, they feel that they have expertise or, some kind of experience which they can share with the professional network, please don't hesitate to reach out to us. We will be glad to enable this kind of a knowledge sharing. If Sir doesn't come and share his knowledge with us, we won't have that perspective change. Okay, we will go with one perspective. But if we talk to someone, our perspective of how we address an issue will definitely change. So that kind of a perspective change, that kind of an outlook we need, and insights also we need from somebody else. So if anyone who feels that, yes, I can contribute something, or someone else who can contribute something, you are all welcome to join us for the, join us as a faculty. Reach out to us. We're not going to ask you anything. We will definitely welcome you to come and address. And I'm sure Sir will also be very happy to sit on the other side and listen to you share. Because we all want more people and more perspectives, more insights and more sharing of knowledge. So I just want to take this opportunity to thank Sir for accepting our invite and coming here. He's a very, very old friend, and it's very difficult to get acceptance only from friends, okay? They can immediately tell, no, Revati, I can't. And they won't be bothered about what I feel, but Sir has never done that to me even once till now. And in fact, all the speakers over the past 2 days have not refused even once when we asked them, and when we could actually request all of them to come and take a joint session, it was really a wonderful thing. So hope that you will keep encouraging us more and more by attending all these programs. On 27th, we are having the MSME Conclave, which is in collaboration with the Tamil Nadu government, TN Startup, DIC, FAME, and MSME departments. Various banks are participating. Around 100 to 150 MSMEs are going to come there and utilize our services. We have put up some help desks for the MSMEs to address their doubts, whatever they have. We are going to help them in the Udayam registration. We are going to, whatever they want, we are going to say, we are there for you. So request all of you to come there. You can see exactly what is the impact that we as chartered accountants can make to the MSMEs. The next focus, see, when the government introduced GST, we partnered with the government. And today government very proudly says 150 crores of GST collections every month. So the next focus is MSMEs. That is our bread and butter. 90% of our economy is also MSMEs. They are the backbone of our country, and we as chartered accountants should actually grab this opportunity. We shouldn't say you're too small. We should help them to grow big. And Institute is taking this in a very large way on I think 22nd or maybe from 23rd, we are going to have a national ad campaign on Radio Mirchi about the efforts of ICAI to help the MSMEs. So we are expecting a lot of walk-ins into the institute. So please drop in. If somebody is not able to help, someone else may be able to help the MSMEs. It's also a potential for us to get some new clients, and we are going to maintain a panel of members for the help desks. So if you want to man the help desk for them, we are having MSME clinics. If you want to help the MSME in some issue, they're automatically going to translate into something else for us sometime in the future. So please do join us on 27th. It's definitely going to be beneficial for all of us. like how GST translated into huge work volumes for us, the same way MSME is also going to translate. We are going to have bankers there who are going to give details of their schemes, which is again going to be beneficial to us. We can go and disseminate that information to all our clients. We have SIDBI also is coming, right? NSICs, SIDBI, the skill development, everyone is coming. In fact, like I told you yesterday, Government of Tamil Nadu is reaching out to us for help, and we are trying to see that we are able to satisfy them so that it translates into broader opportunities for us. So if you keep engaging with us, you'll get more information about this. Of course, we are disseminating it in every which way, but you'll get to know hands-on about what are all the initiatives which are being taken. So please do join us for the MSME Conclave also on 27th. On 27th, we'll tell you what else we are doing. I'll keep the suspense on till then. Thanks a lot, everyone, for joining us today. Thank you.
Hi, good evening, everyone. Hope I am clear and audible. So, nice meeting you all this Saturday evening to discuss this key topic of audit trial. So thanks to SIRC and Revati ma'am for providing me this opportunity to be here this evening and have a discussion on this topic. So as you know, this is a topic which has been in vogue for the last couple of years. FY24 was the first year wherein it became mandatory, and there have been challenges, there have been learnings. So what we will do is we will just spend some time discussing the background, the basis, what is audit trial, what have been certain challenges that we have noted when the companies started implementing this requirement. Even from an audit side, let me touch upon certain challenges that we had when we had to look at the audit trial and do the reporting, and what could be some precautions that should be taken by the management to ensure that this audit trial is being maintained and preserved in compliance with the requirements of the law. We'll start the discussion by looking at the basic definition of what's books of accounts. Section 213 of the Companies Act defines what's books of accounts. Any record which would talk about transactions, the monies received, the monies paid, purchases, the sales, the receipts, the expenditure, the assets of the company, the liabilities of the company, as well as the cost accounting records. So this is the full bouquet of what would be covered under the books of accounts. It can be either a manual or it can be electronic. So when it's manual, then the question of audit trial is ruled out. So when it's electronic, it's mandatory to have this audit trial requirement. Again, the Companies Act defines what's books of accounts for this particular purposes. It can be the vouchers, it can be agreements, it can be contracts, it can be the registers, it can be the minutes of the meetings, etc. So as we have been seeing, when I started my profession, I started seeing the general ledgers being manually written. Then there are lots of softwares, there are off-the-shelf softwares, there are customized softwares which are being developed by the client to satisfy their needs. So we also need to understand what is an accounting software, because this accounting software is going to be the base on which the books of accounts are going to be prepared. So an accounting software is nothing but a computer program which enables reporting, maintenance and reporting of the books of accounts, just to ensure that the entire ecosystem of the business transactions and business requirements are being captured. There can be various functionalities within the accounting system. A company or an organization can have multiple accounting software within its premises. For example, they may have an accounting software for accounting the transactions, which would be the trial balance and the general ledger. There will be a separate system for maintaining their sales module. There could be a separate system for their HRMS and attendance. There could be a separate system for their fixed assets. So all these things put together would be the books of accounts, and each one of the facet is probably being maintained in different applications and softwares. Okay, now what is audit trial? So this, before getting into what is an audit trial, we will understand when it became mandatory. As I said, the introduction of this audit trial as a requirement came sometime in FY21. Then it got postponed a couple of times. And FY24 was the first year wherein the auditors were required to comment on whether the accounting software which is being used by the company has this feature of audit trail in this. So the requirement is coming from the Companies Act as well as the rules framed thereunder. So what is audit trail? Audit trail is nothing but a visible evidence of the information from the start to end. See, how does a general transaction gets accounted? We do a journal entry. So there will be some person who posts the journal entry. There will be some person who will be approving it. And in case if there are any changes or modifications, depending on the accounting software that you use. Certain accounting software allows you to go and modify them. Certain accounting trons will allow you to delete them. And certain accounting software neither allows a deletion or a modification. So you have to take a reversal entry and then book the new entry. So there could be different ways in which the original transaction had to be changed because of any reason. It can be an error, it can be an oversight, it can sometimes also be intentional. So what is this audit trail is nothing but there should be a track of all these changes which has happened. So how is it going to be done and why is it important to be done is something that we will be discussing during the course of this session. So it has also to be chronological. So when I said chronology, I gave the example of a base entry, posting, approval, modifications, approval. So what happened, at what time it happened, from what user ID it happened, why did it happen should be there as part of the narration. So it should give you a complete chronological event of whatever happened to the initial transaction that got accounted in the accounting software from its start till, okay, we say that, okay, this entry is perfect and there is no requirement to do any further modifications to this entry. So it should capture the date, it should capture the user who did it, etc., etc. So this should be inbuilt within the system because once you make the journal entry or an accounting entry, any modifications should also be available in the system, which means the accounting software that you use should have an inbuilt system to capture a log of all these changes that has happened. And as we know, this log should be maintained throughout the year. It should not be allowed to be tampered with, and it also needs to be preserved. As I said, FY24 was the first year when the reporting came in, and when it comes to the FY25 reporting, we not only need to comment as to whether the audit trail is available, but we also need to comment in our audit report as to whether the company or the entity has the ability to preserve this audit log for a minimum period of retention as provided under the Companies Act. So it should be available, it should be enabled, it should be there throughout the year, it should not be tampered, and it should also be preserved. So these would be certain important aspects that would need to be considered by the management when it comes to the audit trail requirements. So if I have to summarize the requirement, I can just put 3 questions: when, that is the date, time, etc., who, the user ID, the protocol used, etc., and what would be the transaction differences which got modified. So when, who, and what would be the 3 questions that should come to our mind when it comes to looking at the audit trail requirements. So this is a simple example. This is an inventory master. So the selling price gets captured based on the market conditions. So it is very clear. See, on the 20th day of June, the selling price was 30. It was entered by A and it was approved by C. For the next period from June 23 to January 24, the selling price was made to 32. It was done by B and approved by C. And again on January 23, it was made to 31, which was done by A and approved by C. So we are able to see the changes in the selling price of this particular product on the various timelines, and we are also able to understand who made the change, and we are also able to understand who had approved the change. A very simple example to drive home the 3 WH questions that I just spoke about. Why is it important? It gives a systematic approach to the bookkeeping. In case if there are any irregularities, it will be possible to be found out. It may or may not identify the frauds, but it will be very easy to analyze the results of fraudulent financial reporting that has happened during the period. If it is going to be any regulatory proceedings, then this can be submitted as evidence. I had some discussions as to whether the income tax office can call for this audit trail. Possible, because in case if they find any irregular financial reporting in the organization, they may want to understand, they can't call for the books of accounts, they can also call for the audit trail and the log to understand if there have been any modifications which are not in the regular course of the business. When I say it can address the risk of management override of controls, it means any changes, it can be ensured whether it has been done by a person who has been authorized to make the change. Say, for example, if I do a journal entry for sales for 1 lakh, I don't want somebody tomorrow to go to the back end and make that 1 lakh as 10 lakhs, which would boost the revenue. So, if there is going to be any such changes, since there is a log which has captured the changes, if there is any management override of controls which you as auditors would be looking into, we can look at the log, we can understand the changes that has happened, and we can also have a discussion with the management, the rationale and the basis on why such change has to be happened. I'm sure that there is going to be lots of changes which is in the law. The concept of materiality will always come in, but it gives a good source for the auditors to understand if there have been any unauthorized changes within the financial system, because the list of changes that has been made during the year is readily available to you as a law. And as I said, this also encourages and inbuilds the factor of a maker-checker. So any change, the internal control should be such that there should be somebody who makes the change and there should be somebody who approves the change. So it helps to build up the internal control framework of the organization. So these are some reasons of why it is important from both the management perspective as well as the auditor's perspective of why the software used should have the facility of audit trail. Applicability, it is applicable for all companies, 1%, small, private companies, public companies, Section 8 companies, as well as the foreign companies. So each one of these companies should have the audit trail feature, and it will also be applicable for your cost accounting records. And as I said, if the books of accounts are maintained manually, then this concept is not relevant at all. So having understood the basis of what is audit trail and why is it important for an organization to have an audit trail, we'll spend some time to understand certain challenges which the companies has faced in implementing these requirements. Before that, let us also look at an example of what would be the transaction that would be covered. As I said, all the transactions needs to be done, but the transaction should be such that it should also have a financial impact. So just creating a customer master, whether we need to have an audit trail, it is subject to interpretation. Spreadsheets, it is very difficult to have a trail. If you have an Excel spreadsheet, if there is a sale which has been changed from 10,000 to 1 lakh, I'm not sure whether the Microsoft provides you with an option to make that a change track. So when it comes to say, I spoke about the example of a fixed asset register in Excel spreadsheet. So what kind of audit trail would be possible? We need to discuss. But what we can do as an alternative would be to look at the controls around the maintenance of that Excel. Who is maintaining that Excel, whether it's password protected, whether the critical cells are protected, whether it is only few people who will be able to have an access. Where is that Excel stored, whether that Excel is backed up, etc. So we can look at the controls around the Excel spreadsheet, but seeing a trail in Excel spreadsheet would be a challenge. So the moment your company or an organization has some financial or accounting information in Excel, we need to be doubly careful. So advance from customers, it's a financial transaction, so it has to be considered. Creation of user ID, probably not. Journal entry, yes. Modifications in database master, yes. Accessing the rights may not be required. Changes to the books of accounts and ESG records may not be required. See, as we see any accounting software, we all understand that there will be two aspects. Yes. Go ahead, sir. Very difficult. I know. See, that's why the accounting software should be enabled in such a way that it is providing you with a list of track changes. So if it is, as I said, that's why I try to give you an example of an Excel spreadsheet. But if an Excel spreadsheet itself could be difficult, then the other documents could be a big challenge. So those are the, see, that's why understanding the overall entity level controls becomes very important. So you should have a comfort on the internal controls of the organization, the people with whom you deal with it, so that gives you the inherent assurance that there may not be a significant management overhead of controls by using those aspects wherein a trail or a edit log would be very difficult to generate. Yeah. Yeah, that should be yes, sorry. That's why I said yes, but here it's no, it has to be yes. Okay. When the audit trail requirement came initially in FY24, there were certain practical challenges because that's the first time when an act makes it mandatory for the company to have the audit trail changes. So, for example, if I buy an off-the-shelf software, that software itself may not have the feature of having the audit trail. So only when the regulation came, the vendors started bringing in this feature into its software. So it took time. So though the requirement was to have it throughout the year, because of the inherent limitations from the vendor on the software that they use, the corporates were not able to have this audit trail enabled for the full year. So this resulted in a statement in the audit report stating that the audit trail was not maintained by the company for the entire period, or we said that the audit trail was being maintained only from so and so date. So there were inherent challenges in the off-the-shelf software that was being used by the client in getting this feature. So there was some understanding gap in the initial stages. So we had discussions with the client to explain them what is meant by audit trail and what would be the expectations of the regulators, and also incidentally what would be the expectations from we as auditors when we look at the audit trail requirements. Always there is a resource and time constraint. One big pushback that we got from the clients on why they were not able to have this audit trail implemented throughout the year was stating that it occupies lots of space and it slows down the system. I'm not a big technical person, so I'm not able to understand whether a small millisecond difference would actually matter. But my IT teams of the clients that I've been speaking about stating that no, it slows down the system, I'm losing my efficiency. Okay, space I can understand because for preserving it, we need huge space. But they say one of the biggest challenges that the companies was facing, even within their IT system, was stating that it slows down the entire system because there may be possibilities that the systems may be accessed offline from remote locations, etc. So they say if I have to enable this trial for each and every accounting transaction, it becomes inefficient. So this has been one of the important pushbacks, even internally, that the companies has been facing from their IT system and IT people. Confidentiality, it's very important. Okay, you may have complete protection for entering into the application, or you may have complete protection from accessing the database. You may have restricted access. So similar thing has to be done even for the error logs and the audit trail which is getting preserved. So it would require again additional investments from the company because the information should be available only to the intended users. As we spoke about the speed at which transactions has been processed. See, there have been clients who have outsourced their activities to third-party service providers. Say for the example of say payroll processing. So I have outsourced my entire payroll processing to ABC Limited. So I give them the data, the entire processing is done by ABC, I get the final output, and then based on the final output, I generate the payroll entry at the end of the every month. So how as an auditor, I would be looking at the audit trail and the futures which are being implemented by ABC Limited so that there is no unauthorized changes made to the data that I have been done. So there are 2-3 options which are available. One, whether I can myself as an auditor of this company go to ABC Limited and do the audit. Possibly yes, but practically not possible because ABC may be processing to 1,000 different clients. If there are 500 auditors who are going to come and say, I want to have a look at your controls and audit trail, ABC will be only outsourcing their activities for complying with the audit and they will not be able to process the payroll. So what is plan B which is possible? We always know that they can give us the SOC report, the SOC 1 report, the SRE 3420 report or the SOC 2 report kind of thing. So what do? They engage an external auditor. The external auditor will look at these controls and they give a report to ABC Limited stating that I have looked at those controls, I have looked at the audit trail, I have looked at the backup futures and they are operating efficiently throughout the year. So any auditor of its client who wants to get a comfort, the ABC Limited, the client would give us this SOC 2 report or the SOC 1 report and I can review that report and get a comfort. But again, in this report, we have seen 2-3 challenges. The first challenge is since it was done for the first time in FY24, many of the reports of this SOC 1 and SOC 2 did not touch upon the requirement of audit trail. Again, the challenges is because many of these companies were multinational companies. To make it aware to everybody here, this audit trail requirement is a requirement only in India. I don't think any part of the world has made it mandatory by a regulation to have an audit trail. So you may have always the requirement of audit trail from an internal control perspective. I'm not denying that. But a regulator stating that you have to maintain an audit trail and the same regulator asking the auditors to certify that the audit trail was there, I think we are seeing it only for the first time in India. Just going back, if this ABC Limited is an international company, since this feature was not required in any other part of the globe, though they had the SOC 1-2 report, the report did not talk about the audit trail. So as an auditor, I was not able to place reliance on the report and I have to still state that since the service provider's auditor's report did not talk about it, I am not able to comment. So that's the first challenge we had. The second challenge we had was the period covered in that report. See, generally in India, the accounting period is April-March. Okay, you can write to ROC and make the change in the accounting year end. This SOC report, say for example, is for Jan to December. So the first quarter has not been covered in this report. So what do? We ask for the bridge letter. So in case even if the bridge letter was not available, then as an auditor of this company, I could only say that the report given to me covered only the 9 months. So I am not able to comment as to whether this feature continued to be in the accounting software for the next 3 months. So getting this bridge letter was also a challenge. Again, this bridge letter is a very common feature globally because even forget the audit trail, I spoke about internal controls. For global, same example, same payroll. If I as an auditor need to do the audit of SOX for a US listed company, I will not be able to go and test the controls around payroll processing in ABC Limited. So I always rely on their report. So reliance on the SOC report is a global phenomenon. So globally they are aware of the requirement of the bridge letter. But first time when we started implementing this requirement in India, getting this bridge letter was a challenge. So again, when we started the FY25 audit for it, we have completed the listed companies. Many of these features have now been addressed by the corporates. With 1 year's experience, they are also able to understand and appreciate our requirements. Many of these service providers, they have gone back to their auditors and said that when you do this report, also cover the requirements of the audit trail. So FY25 was fine, but in FY24, we had this challenges of either the report not talking about the audit trail or the bridge letter not being available for us to get a comfort on the entire financial year. The next challenge that we had was in case of multinational clients. So India would be probably a subsidiary with the parent company sitting somewhere in the world. So they may have probably a common accounting software which is being used globally. So you create a company code for the Indian entity and the accounting is being done. So the central server would probably be outside India. Yes, they may have a backup server in India because of the requirements of the Companies Act that the servers should be available in India. But to have this feature enabled for the accounting software, which was being used globally, was a challenge. Because I understand again there were technical issues wherein they will not be able to create an audit trail or a log only for the India company code. It has to be done at the entire software. One. Two, the database level also it has to be done. So for this kinds of multinationals, wherein we were the auditors of the subsidiary, which had a common accounting software, implementing this audit trail at the global level was a challenge, and we had to issue a report stating that the audit trail has not been enabled for this company. So we had this challenge when it comes to the multinational companies and subsidiaries. There was also an understanding difference of what constitutes books of accounts. So, and also getting a complete list of inventories of all the applications which are being used by the client was a challenge. So I started my example by stating that there were at least 4 different systems: bookkeeping, payroll, fixed assets, sales module, etc. So we had to have a conversation with the management for us to understand the entire inventory of the applications which were being used, what is that application being used for, whether there is an interface between that application and the main accounting software or where the GL is being maintained, or whether there is a journal entry which is being booked manually, and then see whether that particular application had to be scoped in when it comes to testing. So getting an inventory of the entire applications which was used by the companies was a challenge in the first year. So what happened was that certain applications, they were not able to provide us with audit trail requirements, and so we had to comment in the audit report stating that the audit trail has been maintained by the company except for this particular application for which it has not been maintained. So when you see the publication, there was also many PDF documents and Excels which are floating around, which gave the various reporting which has been done by the auditors when it comes to the audit trail requirements, and you will find many of these things are given there. Not there for the full year, not there for all the applications, not there at the database level. You would have seen all these kinds of exceptions in the audit report in the first year when it became mandatory. Database level is one of the important things. If I can recollect my memory, when the implementation guide was first introduced, I think it did not cover the requirement of database. But when it was updated close to the year end, it said that the audit trail requirement need not be there only at the application level, but it also had to be there at the database level. So why is it a requirement to do at the database level? So I don't want somebody to access the database directly and start making the changes. So any changes which are made even at the database level, there should be a trail answering the 3 WH questions that I spoke about. So since this, okay, you may say that it is a common sense that the ones we need to maintain the list of changes, it should cover both the application level and the database level. But we had challenges wherein the corporates were not having this feature at the database level. And again, it resulted in a comment stating that though it is done at the application level, we are not seeing this trial at the database level. So when we look at the requirements, both as a company side as well as the auditor side, we need to ensure that it is covered both at the application level as well as the database level changes. We spoke about what should be the aspects that should get captured in an audit trail. Who made the change? When was the change made? Who authorized the change? Which user ID made the change? So, because the requirement is to ensure that we have a complete trail and visibility. But what happened was, when we looked at certain audit trail log reports, not all of this information was available. So for example, we did not know who made the change or what was the user ID that made the change. So that is one aspect wherein the log that they generated did not capture all the information. The other bigger challenge that was seen was they were having generic user IDs. So they may say sales manager 1. So the sales manager 1 user ID was given to many people. Again, it's the IT department's call based on the cost of the number of licenses, etc. So the log had stated that sales manager 1 had made the change. Probably that's the user ID. But if the same user ID has been used by 3-4 people, we were not able to pinpoint which of that salesperson made the change, which again beats the purpose of having the trail. So using the common generic user IDs was also another challenge because we were not able to pinpoint who among the various people who had this common user ID made the change. Again, this could be a big risk from an audit perspective and internal control perspective because if there is a generic ID, we will not be able to know who actually exploited it. So we spoke about a lot on service organizations. We spoke about the consideration of the global planning. The next consideration that they need to do was the format in which the audit trail needs to be maintained. We should also have a discussion in terms of how the records would be maintained and how they will be the recoverability of the data, and how do you demonstrate to your regulators and the auditors that it is being done on a daily basis. So a summary of the challenges is that any company or corporate should answer these questions in terms of having a proper audit trail for all the changes that has been made in the accounting software. Some precautions that you should be taking into, we spoke about the completeness of the information in the audit trail. We spoke about the audit trail being enabled throughout the year and not just for part of the period. We spoke about all the changes getting logged. It cannot be a pick and choose, or it just cannot be only one typical type of changes and ignoring the other changes. All the changes should get captured. It should not be done manually. It should be inbuilt into the system. We spoke about user IDs. We spoke about database. We spoke about preserving and ensuring that there is no modifications. All these aspects, this is an internal control of the management. We also need to understand that the management has a periodic review of whether this audit trail feature is working properly in the accounting software. So they have to generate the logs, they have to review the logs, or they can even do a forced change and ensure that the change is being captured in the audit log. So there has to be some kind of internal control mechanism within the organization wherein they are able to test the functioning of this audit trail requirement. One of the other aspects that we was discussing was whether a backup of the accounting data is an audit trail. The answer is probably no, because the backup would just replicate the transactions. But what we are looking at here is to have a complete sequence of the changes also that has happened into the accounting entries. So just stating that I have a backup does not satisfy the requirement of having an audit trail requirement. See, one big pushback that we had from companies is that, sir, we have an accounting software. That accounting software, we can't modify any entries. So why should I maintain audit trail? So only when you have the possibility of modifying, then somebody can go and make the changes. So if at all I cannot have any modifications, which means, and I also don't have the feature of deletion. So I can't modify, I can't delete. So the only option to make any correction is that I'll have to reverse the first entry and then book the second entry. So all the reversal entries, we will be able to pull out and give it to you. So if your requirement is to understand the changes that has been made, who, when and why and what, I'm able to give you this particular record of all the reversal journal entries that has been passed and the rectification entries that has been made during the current year. So why should I have the audit trail feature enabled? So this has been one of the pushbacks. Again, looking at the implementation guide and the intention of the legislator, this is not acceptable. It should be an automatic feature available in the software which captures all the changes. So it is possible for people not to provide us with the complete inventory of the rectification entries that has been passed. So the completeness could be a question here, because all said and done, at the end of the day, if I ask them to give me a complete report of the reversal and the rectification entries, again the regulator also needs to look at whether the source from which such entries are being pulled out is authenticated, that it is not being subject to any possible modifications, whether there could be any entries which has actually been passed, but it is not getting captured in this report. So with so much of ambiguities, the legislation is very clear that such future, though it is there in the audit trail becomes mandatory. And the reason that I cannot modify or delete an entry is not a substitute of not having an audit trail. So this is some of the practical challenges that we had in the first year of implementation. I've used the word auditors many times. So why is it? Is because the regulation not only mandated the companies to have this requirement of audit trail in its accounting software, but it also made mandatory for the auditors to look at it and comment on it in their audit report. So as we all know, Section 143 of the Companies Act talks about the matters which needs to be reported by the auditors. It also defines the powers and duties of the auditors. 143.3 talks about the reports on the maintenance of books of accounts, it tallying to the underlying records, etc. 143.3J of the Companies Act provides an option for the regulator to bring in any aspect which should be covered by an auditor as part of their report. So because of this, Rule 11 initially got introduced. So for example, we are required to comment on whether the payments to investor education fund has been done properly, or whether there are any material foreseeable losses on long-term contracts, whether all the litigations which has been faced by the company, the financial impact of which, whether it has been properly reported into the financial statements. So these are certain specific reporting requirements to be done by the auditors based on the requirement of Rule 11. So this Rule 11 introduced Rule 11G, wherein the auditors have been requested to comment on the audit trail requirements. So as I said, this is the reproduction of 11G. Whether the company in respect of financial years commencing on or after 1st April 22 has used an accounting software for maintaining its books of accounts, which has a feature of recording audit trail facility, and the same has been operated throughout the year for all the transactions, and it has not been tampered with and has been preserved by the company. So the entire discussion which I had at the beginning in terms of the challenges, in terms of the audit procedures, in terms of the management mindset, in terms of what we as auditors would be looking at, was based on this definition of Rule 11G, wherein it has been clearly mentioned of what would be the reporting obligations of an auditor once it comes to a audit trail requirement. So based on this, from FY 23-24, the auditor's report will include whether the feature was there, whether it operated throughout the year, and whether it has not been tampered with. Preservation being the first year in FY 23-24, preservation was not applicable. When we look at the audit of FY 25, we also talk about the preservation of this audit trail. So this audit trail reporting would be applicable for both standalone financials as well as the consolidated financial statements. So consolidated financial statements, the issue could be you may have associates and joint ventures and subsidiaries, not only in India, but also in abroad. So for abroad, since this is not applicable, we can write a language in our audit report stating that this reporting, when it comes to the consolidated financial statements, is only with reference to associate joint ventures and subsidiaries located within India. So that's one carve-out that we can make. So in case the next challenge would be many of these associate joint ventures and subsidiaries, you may not be the auditors. So like you do for the consolidated financial reporting, you may have to place reliance on the work done by the other auditors. So when it comes to even on audit trail reporting, the language that generally people use is to say, with reference to associate joint ventures and jointly controlled entities in India, we have relied on the reporting made by the other auditors, and they have reported that this audit trail feature is there, it's not there. So SA 600 provides you to refer and make use of the work done by the other auditors for even reporting on this audit trail requirement. So these were the two challenges which we need to be aware of when it comes to the reporting of audit trail in the consolidated financial statements. Yes. Yes. Or you can just state that I only have an associate AOP for which the requirement of audit trail maintenance is not applicable. You can do a factual reporting, sir. Being a typical auditor, in case if things are not done, I will not have any other option but to give a modification in my audit report. This would be a modification not having an impact on true and fair view of the financial statements at a broad level. If you say that because a true and fair could get affected in case if you have transactions which would have a financial impact. So this is just a statement of fact, like say section 164 reporting. In 164, I just say that, okay, I have received the declaration from all the directors as on 31st March 25, stating that they have not been disqualified. If I don't receive, I say I don't receive. If I say only one director is disqualified, I say one director is disqualified. So reporting on audit trail is a statement of fact and it will not have an impact on your true and fair reporting. So even if there is a reservation in an audit trail paragraph, I need not call it as a qualified opinion or a modified opinion from a financial statement perspective. The second aspect that you would ask me is, in case if the company did not have an audit trail feature in its accounting software throughout the year. So under 11G, you state this fact. If I have to do a ICFR reporting for that company, will it have an impact on my controls? So whether you will have to say the controls were not operating effectively as on 31st March because the audit trail feature was not available. The answer is a typical answer of any person who stands here. It depends. Because just by not having an audit trail feature in an accounting software does not mean that your internal controls over financial reporting was not operating effectively throughout the year. Though the audit trail feature is not available, as an auditor, you would be able to perform other additional procedures to ensure that the controls were in place and were operating effectively. So other things being equal, just because the audit trail feature was not there, I may not end up in stating that the internal controls were not operating effectively. Go ahead, sir. It is not a qualification, it is just a reporting of the fact. And there will be two other aspects which I need to comment. I will just touch upon that. Because, see, let me just complete my answer on why the qualification is not important. The qualification would depend on whether the financial statements reflects a true and fair view. So even if the audit trail feature is not there, theoretically I can do a 100% audit and get a conclusion that the true and fair has not been affected. So not having an audit trail feature, again, I will use the same wordings I use for controls. Other things being equal, just by not having an audit trail does not mean that you will end up with a qualified opinion. Okay, where it would impact my audit opinion, there are two things. As you rightly said, sir, it is mandatory. This is part of the books of accounts. So when you see your other opinion paragraph, you also need to talk about the maintenance of books of accounts. So I will raise my hands in that paragraph itself, stating that the company has maintained proper set of books of accounts, except for my reservation on the audit comment. So I'm not even touching the true and fair. I'm even going one step above and stating that they don't even maintain proper books of accounts. Thus, this paragraph would answer your question, but in case if you have any follow-up questions, I'm ready to take. Two, as I said, any reservation on maintenance of books of accounts, you need to call it out in your 143.3. Again, I call out stating that the reservation regarding the maintenance of accounts is being dealt with above as detailed in my reservation to 11G. So I will, since as you rightly said, it is a mandatory legal requirement. If it is not there, I will raise my hands and state that the books of account itself is not maintained, rather than stating unless and otherwise, it also has a control impact or a financial statement impact. It is. You will continue reporting, but have a discussion with the management of why they are not able to do it, because whether, again, I will go into my entity level controls. Is there an intention by the management of not to get this implemented because of any other reason? So at that time, I will become slightly more cautious to understand if there are any possible exploitation of a weakness in internal controls by the management, due to which they do not want to have an implementation. I will be slightly skeptic in the second year, because first year, as you rightly said, I can look at the practical challenges, but my skepticism level would slightly be more in the second year when the company is not showing the intention of having it implemented, sir. That's correct. So anything finally, ultimately, the auditors would be questioned. So you know that there is a requirement. If touch wood something happens, the auditors can be questioned, saying, okay, boss, yeah, you can say I have already reported, but if you have to go beyond it, what kind of professional skepticism that you exercised as an auditor? What kind of professional judgment did you make on the intentions behind why the management did not implement it? Can be a tough question to us, which we need to be prepared for. Yes, sir, go ahead, sir. Same thing, sir. When I do my audit, I have an example. I will just say that the audit trail feature has been implemented by the company and all its accounting software, except this particular software for which it has not been enabled. It will be a straight disclosure of the facts that you have seen, sir, except for the SOC report not being made available to me, because of which I am not able to conclude on the ABC software which is used for payroll processing. So whatever you observe, you will have a practical reporting of that in your audit report, sir. I have an example. I will just show it to you. See, except for the maintenance of fixed asset register, where the accounting software did not have the audit trail feature. Except that audit trail at the database level was not implemented. It's just a factual representation of facts, sir. That's it. Third party, we speak about third party service provider. It has not been preserved in the current year. I had a company wherein the preservation was not there, so I have to say that it has not been preserved. In case of data migration, if the new software did not allow it, some examples of how the reporting has happened in the previous year, depending on the facts and circumstances. It can be the entire software, it can be only for not being implemented for part of the year, or it can be not one particular application being there. It may be not having the bridge letter, because up to December you have the comfort. April, May, March, April, February, March, you do not have it. So depending on the facts, you can tailor your reporting. Go ahead, sir. 8 years. It is the same mandatory requirement as that of the Companies Act, sir. Yes, sir. Yes, sir. Because you will not be able to go and do the audit yourself, no. So, no problem, go ahead, sir. What should I say? A balancing game between compliance and the costs. Okay, so the main aspects from an audit trail perspective, if I have to summarize, which the management should look into is the location, whether the service is in India, whether it's in cloud, whether it's abroad. As we spoke about server versus cloud, we spoke about an integrated system versus multiple system. We spoke about in-house developed software as against the bought-out software. And we also spoke about the activities being taken care by your own people as against it getting outsourced. So this would be the matrix which you should be aware of before you can pinpoint the applications which get scoped in and then based on this, you will be able to focus the testing. IS and chartered accountant, may not be an expert in this, so I can always use my internal experts. My information technology can be part of this exercise because they can understand the language and I can use. So the use of experts or extended comes into play, and I can use their expertise for me to conclude and report on Rule 11G. So a quick summary of what we discussed. We spoke about what is books of accounts, what is accounting software, what sets of books of accounts are being maintained in the accounting software, what are the different features and what are the applications, and whether they are integrated or they are standalone system. We understood the meanings of audit trail. We understood the period that it has to cover. We spoke about the management's responsibilities and the auditor's responsibilities or the reporting requirements. And we also looked at certain examples on how the reporting would happen in case if the requirements as laid down by law has not been made by the client. So that's a quick summary from my side. So, no sir, it won't be a subject to 215 unless the view that the company that at least have taken is that though there is a mention of this, they need not support with the directors. It's not a perfect.
Responsibility, why is not?
But directors also takes their responsibility checking that they.
Thank you, sir. Thank you for your presence and adding much value to this conversation. We are grateful for your presence here. So with this, we are concluding our 2 days on company of Conclave. As chairperson said, we have other programs also in SIRC, and we are also will be hosting this SIRC Premier League on July 1st. So kindly for the sports and which is carrying everything. So kindly participate in this and make it a success by you. Thank you, sir.
Thank you very much for spending the last 2 days.